See the next concept, Altman G score. It is important because only one question. It was asked once in examination, again in final, SPM BV, business valuation. Okay, SPM, sorry, strategic performance management. In SPM and BV, in SPM, it is a frequently asked question, okay. Altman Z score. Altman Z score. Almost in every attempt it was asked in exam. In CMA final. In CMA enter, it was asked once. Added in the new syllabus. Okay. So question number 23, Altman Z score. A firm wants to know whether it belongs to a non-bankrupt class of a firms. Non-bankrupt. You know the meaning of bankrupt, right? Bankrupt, insolvency. Okay, we call it as corporate distress. Corporate distress. Okay, so corporate distress. So here the firm wants to know whether it belongs to a non-bankrupt class of a firm. Certain figures are extracted from the financial statements of a firm. You are required to use Altman's Z-score model and place the firm in the appropriate class. Altman has given a formula. Altman has given a formula to decide whether a firm belongs to a bankrupt class or a non-bankrupt class. So you are required to use Altman's Z-score model and place the firm in the appropriate class. Sales 20 lakhs, EBIT 10 lakhs, total assets 40 lakhs, book value of total liabilities 16 lakhs, retained earnings 24 lakhs, market value of equity 80 lakhs, working capital 8 lakhs. Working capital 8 lakhs. So we have to decide whether a firm belongs to a bankrupt class or a non-bankrupt class. Okay. So this formula you have to remember because this 1.2, 1.4, 3.3, 0.6 and 1. So these are all subjective. Okay. So we can give a logic why, okay, the number is high and low, but we cannot give a justification for why only 3.3. Why not some other number? Okay. So these are the numbers given by what? Altman. Okay. Z score, Altman Z score is equal to Z. Z we call it as Z. Okay. We call it as FZ, not FZ. Okay. So FZ. So Z score is equal to 1.2 x1 plus 1.4 x2 plus 3.3 x2 plus 0.6 x4 plus 1.0 x5. So what is x1? Working capital divided by total assets. Working capital divided by total assets. So in total assets, what are the total assets here? 40 lakhs. What is the working capital? 8 lakhs. 8 lakhs. So 8 lakhs divided by 40 lakhs. So working capital ratio is equal to 0.2. That means for every 1 rupee investment, 0.2 is invested in working capital. So x1 is equal to working capital divided by total assets. Next x2, retained earnings divided by total assets. Retained earnings. What are the retained earnings here? Retained earnings are 24 lakhs divided by 40 lakhs. So what is the answer? 0.6. Retained earnings divided by total assets. So higher the retained earnings ratio, better it is, yes or no? For suppose retained earnings ratio is equal to 0.8, it is better, yes or no? Because for every 1 rupee assets, we are able to retain. We have a retained earnings of 0.8 means it is better, yes or no? So higher the ratios, better it is. Next x3. X3 is equal to earnings before interest and tax divided by total assets. Nothing but it is a return on investment. It is a return on investment. Return on a investment. Yes or no? So what is the return on investment here? 0.25. Okay, nothing but we are getting 25% return. 0.25 x3. Next x4, market value of equity divided by total liabilities. Nothing but equity divided by debt. Equity ratio. We can call it as what? Equity ratio. Equity ratio. Yes or no? So market value of equity divided by what? Total liabilities. Clear? So book value of total liabilities is equal to 16 lakhs. What is the market value of equity? 80 lakhs. So 5. So higher the market value of equity, better it is. Yes or no? Equity should be high. It indicates low finance risk. Low finance risk. Next what? X5, asset turnover ratio. Asset turnover ratio. Higher the asset turnover ratio, better it is. That means all the ratios should be high. All the ratios should be high. So X5 is equal to sales divided by total assets is equal to what? 0.5. So for every 1 rupee invested, we are able to generate a sales of 0.5. 0.5. Clear? So now Altman has given a Z-score formula to decide whether a firm belongs to a bankrupt class or a non-bankrupt class. For suppose if a Z-score is higher than 2.99, Z-score is higher than 2.99, so then the firm is said to be a non-bankrupt company, non-bankrupt firm. If a Z-score is greater than what? 2.99. This number you have to remember, 2.99. So let us find out the Z-score for this firm. So what is the formula? 1.2 x1. 1.2 x1. So nothing but 1.2. Weight given to x1 is 1.2. 1.2 into x1. What is x1? Working capital divided by total assets plus 1.4 into x2. What is x2? Retained earnings divided by total assets. Okay. See, in almost all the cases, denominator is total assets, except in fourth case. Except in fourth case. First, working capital. Second, retained earnings. Third, earnings before interest and tax. For EBIT, we are giving a more weight, 3.3. For profit, we are giving a more weight, obviously. So for sales, we are giving a weight of only 1. For sales, we are giving a weight of only 1, obviously. Okay, sale amount, achieving 10 lakh sales amount is very easy than achieving 10 lakhs EBIT. Am I correct? Achieving 10 lakh sales is easy than achieving what? 10 lakhs EBIT, because EBIT comes after what? Sales minus variable cost, contribution minus fixed cost. So that's why what is the weight given to earnings before interest and tax? 3.3. So for market value of equity, weight given is 0.6, and for sales weight given is 1. So these numbers you have to remember, okay? So 1.2 x1 plus, the logic can be given for what? Why the number is high? 3.3 is given to x3. Why 3.3 is given for x3? Because achieving EBIT is more harder than achieving what? Sales. So that's fine. Okay. So 1.2 x1 plus 1.4 x2 plus 3.3 x3 plus 0.6 x4 plus 1 x5. So we got 5.405, which is higher than 2.99. So the firm is a distressed firm or a non-distressed firm? The firm is a non-distressed firm. Okay. So first one, what is the first one? Working capital divided by total assets. Okay, it is to measure what? Liquidity position. Okay, if a liquidity position is good, what? There is a high chance that firm belongs to non-bankrupt class. Second one, retained earnings divided by what? Total assets. So this is about what? Reinvestment of earnings. If a company is reinvesting its earnings, means what? There is a low possibility of being a bankrupt. Next what? Profitability. EBIT divided by total assets. High profitability indicates firm does not belong to a bankrupt class. Next, financial leverage condition. High market value of equity means low finance risk. Low finance risk. Last one, sales generation ability. Sales generating ability. Yes or no? Last one. What is the last one? Sales divided by total assets. Sales generating ability. Clear? So, out of the 22 accounting ratios, Altman has selected how many ratios? 5 ratios, which had been deemed as the best predictors of corporate distress prediction. Clear? Okay. Okay. If in this case, for example, EBIT is equal to, let us assume 0. EBIT is equal to what? 0. Then what will be our answer? 1.2 into 0.2 plus 1.4 into 0.6 plus 0.6 into 5 plus 1 into 0.5. 4.58. 4.58. Clear? For suppose retained earnings is equal to 0, then what? What is your answer? Four point. EBIT is 0 and retained earnings also 0. EBIT is 0, retained earnings also 0. Then what will be your answer? If retained earnings 0, EBIT is also 0, then what is your answer? 1.2 into 0.2 plus 0.6 into 5 plus 1 into 0.5. 3.74. So, okay, 3.74. So, let us assume the market value of equity, okay, is equal to only 20 lakhs. For suppose if market value of equity is only what? 20 lakhs. Then what will be your answer? Market value of equity is equal to 20 lakhs. Nothing but if EBIT is 0, still the company is not a bankrupt, yes or no? Why the reason? Because there are retained earnings. There are retained earnings, liquidity position is good. Even though there is no profit, liquidity position is good. So company is reinvesting its earnings, yes or no? Company is having a high market value of equity. Company is having a high market value of equity and the liabilities are very less. Equity is 5 times of the liability. Equity is 5 times of the liability. So that's why the company is not a bankrupt company. Are you getting my point? Even if retained earnings are 0, still the company is not belonging to what? Okay, not belonging to a bankrupt company because the reason is high market value of equity. Liabilities are just 16 lakhs, but the market value of equity is 80 lakhs. Still it is not a bankrupt company. But if market value of equity is only 20 lakhs, then it might, the Z-score might be less than what? 2.99 and company may go into a liquidation. Are you getting my point? So he has identified 5 predictors. Clear? So what is this? This is Altman Z-score. So this question is very important. Okay. So there is only one question. You have to remember these numbers. Clear? Next, cash flow statement and fund flow statement. Cash flow statement and fund flow statement. Cash flow statement and the fund flow statement. Cash flow statement and fund flow statement. So first of all, we have a P&L account, P&L account and balance sheet. So why the balance sheet is prepared? Balance sheet is prepared to know the financial position as on a particular date. as on a particular date to know what are our assets, what are our liabilities, and what is our financial position, what is our net worth, positive or a negative. To know the financial position, we prepare a balance sheet. Okay, that we have already learned in accounts, yes or no? Financial statements includes balance sheet, and next what? P&L account, profit and loss account. So why are we preparing a profit and loss account? To know the performance during the year, performance during the accounting period, performance during the accounting period. So P&L account is prepared for the year ending, for the year ending, but balance sheet is as on. Balance sheet is as on a particular date, as on a particular date. Okay. So balance sheet and P&L account. Financial statements includes a cash flow statement also. Cash flow statement. So why we need to prepare a cash flow statement? What is the purpose of preparing a cash flow statement? For example, if we see the balance sheet, from the balance sheet we can identify what? Opening cash and closing cash. Yesterday we have prepared a comparative statement, yes or no? We know the opening cash and closing cash. We know how much cash has been decreased. We know how much cash was decreased, yes or no? Yesterday in one question we have seen, the cash was decreased by 98% something, 96 or 97% something, yes or no? Cash decreased. So by seeing the balance sheet, we can identify what? Whether cash is increased during the year or decreased during the year. That we can identify by seeing the opening balance sheet and what? Closing balance sheet. Yes or no? But why we are preparing a cash flow statement? For suppose if you see the cash book, you see the cash book, you can identify what? All cash transactions, all cash inflows and cash outflows, all cash inflows and cash outflows. Okay, and there will be numerous transactions in cash book, numerous transactions. Yes or no? If you see the medical shop cash book itself, there will be numerous transactions in cash book. Yes or no? Daily in a medical shop, you will find what? Lots of transactions. Okay, so management will not have a time to go through all the transactions. Management cannot summarize the transactions. So that's why a separate document is required, okay, for management to analyze the cash generating ability of a company. Cash generating ability of a company. So what is the purpose of preparing a cash flow statement? Cash flow statement purpose is, cash flow statement is nothing but a summary of a transaction, summary of a cash transaction, summary of a cash transactions. Cash transactions are summarized and divided into three activities: operating activities, financing activities, and investing activities. Operating, investing, and financing. Sir, why only operating, investing, and financing? Simple common sense. Why only these activities? Why not any other activity? Why not any other activity? Simple reason, if I have a cash, for suppose I'm carrying 10 lakh rupees cash, let us assume. How I get this 10 lakh rupees cash? Okay. Or you might have a 10 lakh rupees cash or a 20 lakhs cash. Your friend might be carrying 20 lakh rupees cash. That person might have a 20 lakh rupees cash. There can be only three reasons. First one, that might be his hard earned money. Hard earned money. If it is his hard earned money, we give respect to him. Yes or no? 20 lakhs, Nandan is carrying 20 lakhs and it is his hard earned money. He has done a business or he has gone to daily labor work and he earned 20 lakhs. Then obviously that person will earn a respect. Yes or no? We give respect to that particular person. So what can be the second reason? Second reason can be he might have taken a debt. He might have taken a debt. So obviously, will you give respect or not? I mean, will you give value to that person or not? You may not give the value to that person because the reason is that 20 lakhs is not a hard earned money. Okay. And next, the other reason can be what? He might be selling all the properties inherited from his grandfather. That's why he has a 20 lakh rupees cash. He has 20 lakh rupees cash. 20 lakhs rupees cash. Why? And the 20 lakh rupees cash reason is what? He is selling all the properties inherited from what? Okay, grandparents. So will he get respect or not? Answer is no. Okay, many of you might be inspired by Chiranjeevi. Why the reason? What is the main reason? Chiranjeevi or Ravi Teja or something, someone else. Why? Because what? Because they came to that position because of their hard work, not by what? Okay, so grandparents or grandfathers, yes or no? So the reason is why you get respect. Simple reason. So they have grown without any background. Likewise, here also, cash flow statement, we are categorizing the activities into three. Operating activity. What is this operating activity? The cash generated from a principal business. Cash generated from a principal business. It is a hard earned money. Hard earned money. So obviously company value will increase. Company value will increase if there is a cash inflow from operating activities. Obviously company value will increase if there is a cash inflow from operating activities. Company is not taking a loan. Company is not selling it assets. Company is getting a cash inflow from principal business. Obviously the company value will increase. So what can be the second reason? Investing activity. If there is a cash inflow in investing activity means what does it mean? You are selling assets, you are selling plant and machinery. So that's why you have an inflow. You are selling land and buildings. So that's why you have an inflow. For suppose if there is an outflow in investing activity, what is the meaning of this outflow in investing activity? That means you are investing in assets. You are investing in assets. That is a good sign. In future, you will get your cash flow from operating activities will increase. Yes or no? If you are investing in plant and machinery, if you are starting a new manufacturing unit, obviously today you will have a cash outflow from investing activity. But in future, what happens? The cash flow from operating activities will increase. If there is a cash inflow from financing activity, is it a good sign or a bad sign? It is a bad sign. You are taking more and more loans. You are taking what? More and more loans. Then obviously cash inflow will increase. For suppose if there is a cash outflow in financing activity, what does it mean? You are repaying the liabilities. You are repaying the liabilities. So that is a good sign. And there can be other reason also. You might be paying only interest. So that's why you have an outflow in financing activity. So simple, why only these activities? And these activities we should not by heart. Okay, first one, principal business. If the cash is generated from principal business, it comes under what? Operating activity. If you are taking any loan or if you are repaying any loan, okay, finance related comes under what? Financing activity. If it is investing related, like if you are purchasing an asset or selling an asset, that comes under what? Investing activity. Investing activity. Clear? Okay. Simple reason, if you are an individual and if you have a 20 lakh rupees cash, you will get respect if it is your hard earned money. But for suppose if you got that 20 lakh rupees, okay, by selling a property inherited from your grandfather, then what? You will not earn respect, yes or no? Because you are selling assets inherited from your grandfather. Inflow from what? Investing activity. Inflow from investing activity. Clearer? So here simple cash flow statement is a summary of a cash transactions. Summary of a cash transactions. First we summarize the cash transactions and then we divide the transactions into three. Operating activity, investing activity and what? Financing activity. Financing activity. Sir, why again cash flow statement is required? Because in cash book, there is no summarization and there is no categorization of operating, investing and financing. So in balance sheet, so there is opening cash and closing cash. You can identify only what? Increase or decrease in cash. It will not serve our purpose. What about P&L account? P&L account is, okay, it will not show any cash balance, yes or no? P&L account purpose is to know the performance during the accounting period. Are you getting my point? So in cash flow statement we have two methods, direct method and indirect method. In examinations most of the cases they are asking direct method, but we should learn indirect method as well to understand the fund flow statement. So to understand fund flow statement, okay. So cash flow statement purpose is to know the reasons for increase or decrease in cash during the accounting period. Repeat the sentence. Cash flow statement prepared to know the reasons for increase or decrease in cash during the accounting period. During the accounting period, cash may increase or decrease. So cash flow statement is prepared to know the reasons. Okay, fund flow statement is prepared to know the reasons. For increase or decrease in fund during the accounting period. Fund. Here fund means working capital. Fund means what? Working capital. The only difference between the cash flow statement and fund flow statement is fund flow statement is prepared to know the reasons for increase or decrease in working capital during the accounting period. So how do we get working capital? Working capital means net current assets. Current assets minus current liabilities. First understand the difference. Cash flow statement, what is the purpose of preparing cash flow statement? To know the reasons for increase or decrease in cash during the accounting period. So cash or cash equivalents. Cash equivalents means bank balance, marketable securities. Marketable security is said to be a cash equivalent. Marketable security is equal to cash. Because that can be converted at any time into a cash. So clear? Okay. What is the fund flow statement? Fund flow statement is prepared to know the reasons for increase or decrease in working capital during the accounting period. Okay, that is the only difference. If you can understand cash flow statement indirect method, so then fund flow statement will be easy. Okay, fund flow statement. Clearer? And cash flow statement, we have a pro forma, fixed pro forma, because we have an accounting standard. So that's why we have activities like operating activity, investing activity and financing activity. So we have a pro forma. But whereas for fund flow statement, there is no accounting standard. No accounting standard is asking you to prepare a fund flow statement. So that's why in CA Inter syllabus there is no fund flow statement. Okay. So why there is no fund flow statement in CA Inter syllabus? Because no accounting standard is asking a company to prepare what? Fund flow statement. Okay. But here in CM Inter FM we have a fund flow statement because it is a tool for financial analysis. Tool for what? Financial analysis. So we can know the reasons for increase or decrease in working capital. We can know the reasons for what? Increase or decrease in working capital. See the cash flow statement direct method. So direct method. Cash flow statement direct method. We should take particulars in two columns. Inner column and outer column. Particulars, inner column and what? Outer column. Okay. First we start with cash flow from operating activity. Cash flow from operating activity. So first one, receipt from customers. We take only cash transactions, only cash, inflows and cash outflows. Non-cash, we are not going to consider. We take only what? Cash. What is the first one? Receipt from customers. Receipt from customers inflow. So that's why we are writing without the brackets. So receipt from customers comes under operating activity. Why it comes under operating activity? Because the cash is generated from a principal business. Okay. For bank, interest received. Interest received is a cash flow from operating activity for bank only, because bank principal business is accepting deposits and giving loans. Okay, interest paid also comes under cash flow from operating activity, that is for bank only. But generally banking companies questions will not be asked in examination. Okay, generally a manufacturing unit or a service organization, okay, if it is paying interest is paid, for example interest is paid, it should come under financing activity. Why? Because a manufacturing unit is paying interest on a loan taken. So taking a loan comes under what? Financing activity. So that's why interest paid on a loan taken. Interest paid on a loan taken. So interest paid on loan taken is what? Financing activity. Interest paid on a loan is a financing activity. Clear? So understand the logic. Do not by heart, okay? Interest on loan taken is a financing activity. Why it is financing activity? Because loan taken is a financing activity. So that's why interest paid on a loan is financing activity. What about dividend paid? Dividend paid is also a financing activity. What about issue of equity share capital? Issue of equity share capital is financing activity. Procuring finances. So issue of equity share capital, financing activity. Buyback of equity share capital, financing activity. Redemption of debenture, financing activity. Issue of preference share, financing activity. Redemption of preference share, financing activity. Okay, clear? Okay, TDS on interest paid. You have a TDS chapter or not in detail? Direct taxes. So TDS on tax deducted at source, TDS on interest paid, not operating, that should come under financing. You are deducting tax on a interest paid. Why you are paying interest? Because you are taken loan. Loan is a financing activity. Interest paid on a loan is a financing activity. So TDS on interest paid is also what? Financing activity. TDS on interest received, that means other person is reducing the TDS. TDS on interest received. First of all, interest received is investing activity. Why it is investing activity? We are receiving interest. Why? Because we might have purchased the debenture of other company. We purchased a debenture of other company. So purchasing a debenture of other company is investing activity. Issue of debenture is financing activity. Interest received, investing activity. TDS on interest received, investing activity. Capital gains tax. Capital gains tax. Capital gain. Capital gains tax. You are paying a capital gains tax. Simple. Why you are paying tax? You got a capital gain. Why you got a capital gain? You sold an asset. Sale of asset comes under what? Investing activity. So capital gains tax should come under investing activity. But simply in a question, they have given tax paid. Operating activity. So because businesses may or may not have a capital gains tax, but obviously they will have what? A tax on a PGBP, because they are doing business. If they have simply mentioned tax, that should come under what? Operating activity. So that should be assumed as what? Tax on a PGBP. Tax on PGBP. You should know the logic, okay? So direct method, cash flow from operating activity, receipt from customers is what? Inflow, payment to suppliers, payment to employees, receipt from royalty or commission. Receipt from what? Royalty or a commission. Okay, what is this royalty? We have already told royalty. Receipt from royalty. So royalty means, but suppose if we are giving our brand name to someone to use, okay, we receive a royalty. We receive a royalty. For example, Bhavana, she wanted to start a branch in Tamil Nadu. Okay, we gave a franchise. Now we collect a royalty from Bhavana. Okay, so this is a cash inflow from what? Operating activity. Cash inflow from what? Operating activity. Receipt from royalty. Why we are receiving royalty? We are receiving royalty because we gave a franchise. We allowed the other person to use our brand name. So, okay, she is also doing the same one. So that's why receipt from royalty will be what? Operating activity. So how we receive a royalty? We take a percentage on a fee collected. We receive a percentage on a fee collected. For example, you might have seen KFC. Okay, not every KFC is owned by the original company. So they will give a franchise. They will give a franchise. Many garment showrooms, Peter England, USPA. So they all give what? Franchise. Franchise. For example, if you want to get KFC franchise, you have to pay 40 to 50 lakhs deposit. Okay, and next what? You have to pay commission on every sale. Commission on what? Every sale. Clear? So receipt from royalty or a commission is what? Cash flow from operating activity. So now you will get cash flow from operating activity before tax minus tax paid. Now you get net cash flow from operating activity. Net cash flow from operating activity you should write in a outer column. Okay. Net cash flow from operating activity you have to write in a outer column. Clear? So you have to apply the logic. For example, for film producing company, remuneration paid to heroine comes under what? Operating activity. Operating activity. Clear? Operating activity comes under operating activity. Next, cash flow from what? Investing activity. Cash flow from investing activity, purchase of fixed assets, sale of fixed assets, purchase of shares and debentures in other companies. We are purchasing shares and debentures in other companies. Sale of shares and debentures. Sale of shares and debentures, inflow. Interest received, inflow. Dividend received, inflow. Interest received comes under investing activity because we are receiving interest on a investment. That's why. Next, cash flow from financing activity. Issue of shares and debentures, inflow. Buyback of shares and redemption of debentures, outflow. Loans, long-term loans from banks, inflow. Repayment of loan, outflow. Interest paid, outflow. Dividend paid, outflow. Dividend distribution tax comes under dividend distribution tax. If a company is paying a dividend distribution tax, it comes under what? Financing activity. So actually here, okay, fine. So dividend distribution tax comes under what? Financing activity. Clear? So in outer column, only three amounts. One is net cash flow from operating activity, net cash flow from investing activity, net cash flow from financing activity. If you add the last three columns, you will get what? Cash and cash equivalents generated during the year. This is a tool for financial analysis. Yes or no? For suppose we have an outflow from net cash flow from operating activity. Net cash flow from operating activity negative. Financing activity positive. Financing activity positive. Investing activity is also positive. Okay. So it is a tool for financial analysis. What is your analysis? Simple. From principal business we are not able to generate cash. So there is a cash outflow. How we are meeting our cash obligation? By selling assets and taking loans. లోన్స్ తీసుకొని ఉన్నది అమ్మేసుకొని మనం మీట్ అవుతున్నాం మన ఆబ్లిగేషన్స్ని. సో వీ కెన్ యూజ్ దిస్ క్యాష్ ఫ్లో స్టేట్మెంట్ ఫర్ ఫైనాన్షియల్ అనాలిసిస్. సో ఇట్ ఈస్ అ డైరెక్ట్ మెథడ్. ఓకే, క్లియర్? సో క్లియరా? నోట్ చేశారు కదా, ఇంతకుముందు నోట్ చేశారా? సో క్యాష్ అండ్ క్యాష్ ఈక్వివలెంట్ జనరేటెడ్ డ్యూరింగ్ ద ఇయర్, యాడ్ opening cash and cash equivalents. If you add opening cash and cash equivalents, you will get closing cash and cash equivalents. Your answer has to match. Okay, because opening cash will be given in the question, closing cash will also be given in the question. If you add cash and cash equivalents generated during the year to the opening cash, you should get what? Closing cash and cash equivalents. Clear? Done? So indirect method. So to understand the indirect method, first you should have an idea about P&L appropriation account, profit and loss appropriation. You should know the difference between the charge and appropriation. Charge is an expense which is debited to P&L account irrespective of a financial position. Irrespective of what? Financial position. Visualize the P&L account. Visualize the P&L, trading and P&L account. Visualize. So in trading account, what you take? 2 opening stock, yes or no? 2 opening stock. Next 2 raw material. 2 wages. On right hand side, you take buy sales, buy closing stock. So the balancing figure will be what? Gross profit. Visualize what happens in a trading and P&L account generally. Okay. Next you bring it to what? A P&L account. By gross profit brought down. Yes or no? Later on what? To office and administrative expenses, to selling and administration expenses, to interest paid, to tax paid. Likewise, yes or no? To interest, to depreciation. By interest received, by dividend received. Yes or no? Next 2 amortization of goodwill. If there is a goodwill in balance sheet, you will be what? Writing off the goodwill. 2 preliminary expenses. If there is a preliminary expenses in balance sheet, you will be writing off the preliminary expenses. Yes or no? P&L account debit side, you will be debiting all expenses. So that expense can be what? Remember that expense can be operating. Operating means relating to principal business. Cash and operating expense. If it is cash and operating expenses, no problem. So that can be what? Cash and non-operating expense. Example, interest paid is a cash. There will be a cash outflow, but it is not a non-operating expense. Interest paid is a financing activity. Okay. So P&L account, you will be debiting expenses, you will be crediting incomes. So there can be what? Cash operating expense, cash operating income. So there can be non-cash operating expense. Non-cash operating expense, example, depreciation. Depreciation is a non-cash operating expense. No doubt depreciation is an operating expense, because without depreciation we cannot carry on our principal business. We have to use the machinery and the machinery will get depreciated. So that's why depreciation is an operating expense, but it is non-cash. If you are writing off the goodwill, that is also what? Non-cash expense. Non-cash expense. So visualize the P&L account, what you are going to debit. You will be debiting what? Office and administrative expense. No problem with it because there is cash outflow and it is operating. Selling and administrative expense. Cash outflow, operating. What is meant by operating expense? The expense which related to a principal business. If your principal business is taking loans and giving loans, interest paid is operating expense. But your principal business is not taking loans and giving loans. So that's why interest paid is non-operating expense. Non-operating expense. Likewise, interest received is not a non-operating, is not a operating income. Interest received is not a non-operating income. Are you getting my point? So if you visualize the P&L account, you will be debiting what? Cash expenses, non-cash expenses. Operating expenses, non-operating expenses. Likewise, credit side, you will be crediting asterisk. You will be crediting. I like your consistency. Hats off. Okay. So on P&L account credit side, you will be crediting what? Operating incomes, non-operating incomes, cash incomes, non-cash incomes. Yes or no? Okay. So after P&L account, so we completed P&L account, you will be writing to net profit carried down. To net profit carried down. Yes or no? To net profit carried down. So whatever we debited till now, these are all charges to P&L account. Charges to P&L account. Tax is a charge to P&L. It is not an appropriation. You have to pay it. It is not an appropriating. Appropriating means what? Appropriation means, ఓకే, అప్రోప్రియేషన్ అంటే ఏంటమ్మా? ఎగ్జాంపుల్, ప్రవీణ్ పునుగు ఆర్డర్ చేశాడు, 4 నీకు 4 నాకు అని చెప్పి పంచుకుంటున్నారు ఇద్దరు ఫ్రెండ్స్. దట్ ఈస్ కాల్డ్ వాట్? అప్రోప్రియేషన్. సో అంటే ఏంటి? అప్రోప్రియేషన్. సో హియర్ ట్యాక్స్ ఈజ్ నాట్ అన్ అప్రోప్రియేషన్, యూ హ్యావ్ టు పే ఇట్. దట్ ఈస్ నాట్ సెట్టింగ్ అసైడ్ ఆర్ అప్రోప్రియేషన్, యూ హ్యావ్ టు పే ఇట్. ఖచ్చితంగా పే చేయాల్సింది. ఇంట్రెస్ట్ ఈజ్ ఆల్సో చార్జ్ టు P&L, you have to pay it. You have to pay it. కానీ ప్రాఫిట్ వచ్చింది. అప్రోప్రియేషన్ అంటే ఏంటి? ఇదిగో ప్రిఫరెన్స్ షోల్డర్స్ మీరు కొంచెం తీసుకోండి, ఈక్విటీ షోల్డర్స్ మీరు కొంచెం తీసుకోండి, మిగిలిందా బ్యాలెన్స్ షీట్ జనరల్ రిజర్వ్ కొంత పంపిద్దాం. దిస్ ఈజ్ కాల్డ్ వాట్? అప్రోప్రియేషన్. ఈ అప్రోప్రియేషన్ ఎప్పుడు జరిగింది? ప్రాఫిట్స్ ఉంటే. ఇదే మ్యాండేటరీ కాదు. ప్రాఫిట్స్ ఉంటే అప్పుడు ఏం చేస్తాం? అప్రోప్రియేషన్ చేస్తాం. ప్రాఫిట్స్ లేకపోతే ఇంకెక్కడ చేస్తాం అప్రోప్రియేట్? చేతిలో పునుగులు లేకుండా పంచుకుంటారండి, నీకు 4 నాకు 4 అని. లేదు కదా. ఎప్పుడవుతుంది? సో ప్రాఫిట్స్ ఉంటే దెన్ వీ గో ఫర్ వాట్? అప్రోప్రియేషన్. ప్రాఫిట్స్ ఉంటే. సో దట్స్ వై ప్రిఫరెన్స్ డివిడెండ్ ఈజ్ అన్ అప్రోప్రియేషన్ టు P&L. సో దట్స్ వై దెర్ ఈస్ అ లాజిక్ వై ఇట్ ఈస్ నాట్ అలౌడ్ యాజ్ అన్ ఎక్స్పెన్స్ అండర్ ఇన్కమ్ ట్యాక్స్ యాక్ట్. Preference dividend is not allowed as an expense under Income Tax Act. Yes or no? Why? Because the reason is it is an appropriation. Equity dividend, appropriation. Transfer to general reserve, appropriation. Transfer to general reserve, appropriation. Okay. ఇప్పుడు ఇంక మిగిలింది ఏదైతే ఉందో దట్ విల్ గో టు వాట్? బ్యాలెన్స్ షీట్. Whatever the profit remaining after transferring to general reserve will go to what? Balance sheet. Advaina? So in balance sheet you will see the P&L account opening balance and closing balance. The difference between the opening and closing balance is what? Profit after tax and appropriation. Net profit after tax and appropriation. So P&L account ఓపెనింగ్ బ్యాలెన్స్, క్లోజింగ్ బ్యాలెన్స్ ఏదైతే బ్యాలెన్స్ షీట్లో ఉందో, బ్యాలెన్స్ షీట్లో కనిపిస్తుంది కదా మీకు ఓపెనింగ్ అండ్ క్లోజింగ్. ఆ P&L అకౌంట్కి ఉన్న డిఫరెన్స్ ఏదైతే ఉందో, ఆ డిఫరెన్స్ ఏంటిది? నెట్ ప్రాఫిట్ జనరేటెడ్ డ్యూరింగ్ ద ఇయరే కదా. ఆ నెట్ ప్రాఫిట్ జనరేటెడ్ డ్యూరింగ్ ద ఇయర్ ఏదైతే ఉందో అది ఎప్పుడు? ఆఫ్టర్ పేమెంట్ ఆఫ్ అ ట్యాక్స్ అండ్ ఆఫ్టర్ ఆల్ అప్రోప్రియేషన్స్. అంతా జరిగిపోయాక మిగిలింది ఏం చేస్తున్నాం మనం? బ్యాలెన్స్ షీట్కి పంపిస్తున్నాం. అర్థమైందా? సో మనం ఇండైరెక్ట్ మెథడ్ ఎక్కడి నుంచి స్టార్ట్ చేస్తాం? వి స్టార్ట్ ఇండైరెక్ట్ మెథడ్ ఫ్రమ్ వాట్? నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్ అండ్ అప్రోప్రియేషన్. Of course, in some questions they might give net profit after tax but before appropriation. సో బట్ మీకు డిఫరెన్స్ తెలిసి ఉండాలి. బ్యాలెన్స్ షీట్లో P&L అకౌంట్ డిఫరెన్స్తో నువ్వు స్టార్ట్ చేసావు అనుకో, వాట్ ఈస్ దట్? దట్ ఈజ్ నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్ అండ్ అప్రోప్రియేషన్. సో P&L కాబట్టి, P&L అకౌంట్ కాబట్టి నువ్వేం చేసావు? It is a P&L account. So that's why what you debited all operating expenses, non-operating expenses, cash expense and non-cash expenses. Yes or no? Let us assume if it is a cash flow from operating activity account, cash flow from operating activity account, then appudu em chestavu? You will be debiting only what? Only what? Cash operating expenses. You will be crediting only what? Cash operating income. ఎస్ ఆర్ నో? ఓకే. సో ఇప్పుడు ఈ ఇండైరెక్ట్ మెథడ్ ఇలానే ఎందుకు ఉంది? నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్ అండ్ అప్రోప్రియేషన్. సో ఫస్ట్ సపోజ్ వీ కెనాట్ ఫైండ్ అవుట్ రిసీట్ ఫ్రమ్ కస్టమర్స్. రిసీట్ ఫ్రమ్ కస్టమర్స్ ఈజ్ నాట్ గివెన్ ఇన్ ద క్వశ్చన్. పేమెంట్ టు సప్లయర్స్ ఈజ్ నాట్ గివెన్ ఇన్ ద క్వశ్చన్. దెన్ మనం ఎక్కడి నుంచి స్టార్ట్ చేయాలి? వీ కెనాట్ ఫైండ్ అవుట్. దెర్ ఈజ్ నో వే టు ఫైండ్ అవుట్ రిసీట్ ఫ్రమ్ కస్టమర్స్. దెర్ ఈజ్ నో వే టు ఫైండ్ అవుట్ పేమెంట్ టు సప్లయర్స్. దెన్ వీ హ్యావ్ టు గో ఫర్ ఇండైరెక్ట్ మెథడ్. వే టు గో ఫర్ వాట్? Indirect method. So indirect method we start with what? Net profit after tax and appropriation. చెప్పాను కదా, క్వశ్చన్లో నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్ బిఫోర్ అప్రోప్రియేషన్ ఇవ్వచ్చు, లేదా మన దగ్గర నెట్ ప్రాఫిట్ బిఫోర్ ట్యాక్సే ఉండొచ్చు. అర్థమైందా? సో నీ దగ్గర నెట్ ప్రాఫిట్ బిఫోర్ ట్యాక్స్ ఉంటే నువ్వు ఎక్కడి నుంచి స్టార్ట్ చేస్తావు? యూ విల్ బీ స్టార్టింగ్ విత్ వాట్? నెట్ ప్రాఫిట్ బిఫోర్ ట్యాక్స్. You will be starting with what? Net profit before tax. ఇప్పుడు నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్ అండ్ అప్రోప్రియేషన్ ఉంది. ఫస్ట్ వీఆర్ యాడింగ్ ట్రాన్స్ఫర్ టు రిజర్వ్. ఫస్ట్ నువ్వు విజువలైజ్ చేసుకో. P&L అప్రోప్రియేషన్ అకౌంట్లో డెబిట్ సైడ్ టు జనరల్ రిజర్వ్ అని రాసుంటావు. టు జనరల్ రిజర్వ్ విజువలైజ్ చేసుకున్నావా? P&L అప్రోప్రియేషన్లో డెబిట్ సైడ్ నీకు ఏం కనిపిస్తుంది? టు జనరల్ రిజర్వ్. దట్ మీన్స్ యు ఆర్ డెబిటెడ్. ఓకే, జనరల్ రిజర్వ్. Yes or no? P&L appropriation account debit to general reserve, debit side. So why I am adding it back? Enduku add chestunna? What is the purpose? Because if you are transferring some amount to general reserve, it is just an appropriation. There is no outflow. It is just an accounting entry. Adoka accounting entry maatrame. P&L account head lo undalsina amount etu ellindi? General reserve ki ellindi. Cash outflow unda? క్యాష్ అవుట్ఫ్లో లేదు. క్యాష్ అవుట్ఫ్లో ఉందా లేదా? లేదు. దట్ మీన్స్ అన్నెసెసరీలీ వాట్ యు ఆర్ డెబిటెడ్. సో హియర్ వీఆర్ క్యాలిక్యులేటింగ్ ద క్యాష్ ఫ్లో ఫ్రమ్ ఆపరేటింగ్ యాక్టివిటీ. మీకు చెప్పాను, ఇఫ్ ఇట్ ఈస్ ఎ క్యాష్ ఫ్లో ఫ్రమ్ ఆపరేటింగ్ యాక్టివిటీ అకౌంట్, నువ్వు డెబిట్ చేసేవాడువా ట్రాన్స్ఫర్ టు జనరల్ రిజర్వ్? ఇఫ్ ఇట్ ఈస్ ఎ క్యాష్ ఫ్లో ఫ్రమ్ ఆపరేటింగ్ యాక్టివిటీ, నువ్వు ట్రాన్స్ఫర్ టు జనరల్ రిజర్వ్ డెబిట్ చేసేవాడివా? ఆన్సర్ ఈజ్ నో. ఎందుకు డెబిట్ చేస్తావు? చేయను. ఎందుకు? బికాస్ దెర్ ఈజ్ నో అవుట్ఫ్లో. అవుట్ఫ్లో లేదు కదా. ఎందుకంటే క్యాష్ ఫ్లో ఫ్రమ్ ఆపరేటింగ్ యాక్టివిటీ, ఐ విల్ టేక్ ఓన్లీ వాట్? క్యాష్ అవుట్ఫ్లోస్ అండ్ క్యాష్ ఇన్ఫ్లోస్. నేను డెబిట్ చేసేవాడిని కాదు, మరి అనవసరంగా డెబిట్ చేశాను కదా. టు రివర్స్ ఇట్ బ్యాక్ ఏం చేయాలి? యాడ్ బ్యాక్ చేయాలి. ఈ లాజిక్ మీకు ఇక్కడ కాదు, ఎక్కడ తెలిసి ఉండాలి? ఇవన్నీ మీకు ఇప్పుడు కొత్తగా వచ్చాయి కదా ఈ కాన్సెప్ట్స్. ఎందుకు యాడ్ చేస్తాము అనేది అర్థం చేసుకోవడం. యూ హ్యావ్ అ BRS, ఓకే, బ్యాంక్ రికన్సిలియేషన్. సో వై వీఆర్ యాడింగ్, వై వీఆర్ రెడ్యూసింగ్, అక్కడ వచ్చి ఉండాలి. పోనీ అక్కడ మిస్ అయితే ఇంటిగ్రేటెడ్ అకౌంటింగ్, ఓకే, కాస్టింగ్లో, ఓకే, రికన్సిలియేషన్ బిట్వీన్ కాస్టింగ్ ప్రాఫిట్ అండ్ ఇది ఖచ్చితంగా రావాల్సింది మీకు. ఎందుకు యాడ్ చేస్తున్న లాజిక్ తెలియాల్సింది. ఎందుకు రికన్సిలియేషన్ రావాలంటే అక్కడ అది రెగ్యులర్గా అడిగే క్వశ్చన్, ఫ్రీక్వెంట్లీ ఆస్డ్ క్వశ్చన్ ఇన్ కాస్టింగ్, అక్కడ రావాలి. పోనీ అక్కడ మిస్ అయితే పీజీబీపీలో వచ్చి ఉండాలి. బికాస్ ఇన్ పీజీబీపీ అకౌంట్స్ ప్రాఫిట్ ఇస్తాడు అండ్ దే విల్ ఆస్క్ యూ టు ఫైండ్ అవుట్ వాట్? ఇన్కమ్ ట్యాక్స్ ప్రాఫిట్. అకౌంట్స్ ప్రాఫిట్ ఇచ్చి ఇన్కమ్ ట్యాక్స్ ప్రాఫిట్ ఫైండ్ అవుట్ చేయమన్నప్పుడు కూడా యూ డూ సమ్ అడ్జస్ట్మెంట్. ఎస్ ఆర్ నో? కొన్ని యాడ్ చేస్తావు, కొన్ని ఏం చేస్తావు? మైనస్ చేస్తావు. యూ షుడ్ నో ద లాజిక్. లైక్ వైజ్ హియర్, వై ఐఎమ్ యాడింగ్ ట్రాన్స్ఫర్ టు జనరల్ రిజర్వ్? నేను డెబిట్ చేసి ఉండకూడదు, డెబిట్ చేసా, దాన్ని ఏం చేయాలి? యాడ్ బ్యాక్ చేయాలి. అర్థమైందా? నేను డెబిట్ చేయొచ్చా చేయకూడదా? చేయకూడదు. ఇప్పుడు ఏం చేయాలంటే సింపుల్గా నేను డెబిట్ చేయకూడదు ఏమైనా డెబిట్ చేసి ఉంటే P&L అకౌంట్కి ఆల్రెడీ, దాన్ని ఏం చేయాలి? యాడ్ చేయాలి. క్రెడిట్ చేయకూడదు ఏమైనా క్రెడిట్ చేసి ఉంటే మైనస్ చేయాలి. ఓకే, ఇఫ్ I have debited unnecessarily, that should be added back. If I have credited unnecessarily, that should be minus, reduced. So if you see the first part, add, transfer to reserve. Next word, add. Sir, why I am adding dividend? Why I am adding dividend? So what is the reason? Simple reason, if you are debiting a dividend, yes, there is a cash outflow, no issue. But it is not an operating expense. It is an operating expense. It is a financing activity. So that's why what? Add back cheyali. If it is a cash flow from operating account, so debit చేసేవాడినా డివిడెండ్ పెయిడ్ని? డెబిట్ చేసేవాడిని కాదు, బికాస్ డివిడెండ్ పెయిడ్ ఈజ్ అ ఫైనాన్సింగ్ యాక్టివిటీ. సో దట్స్ వై ఏం చేయాలి? యాడ్ బ్యాక్ చేయాలి. ఇప్పుడు నీకేమొస్తుంది? You will get net profit after tax but before appropriation. ఒకవేళ నువ్వు స్టార్ట్ చేయడమే, యు ఆర్ స్టార్టింగ్ ఫ్రమ్ నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్ బట్ బిఫోర్ అప్రాప్రియేషన్, అప్పుడు ట్రాన్స్ఫర్ టు రిజర్వ్ యాడ్ చేస్తావా? నో. డివిడెండ్ పెయిడ్? నో. వై? బికాస్ యు ఆర్ స్టార్టింగ్ ఫ్రమ్ నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్ బట్ బిఫోర్ అప్రాప్రియేషన్. డివిడెండ్ పెయిడ్ ఇంకా డెబిట్ చేయకూడదు, సో ఇంకేముంది? ఇగ్నోర్ చేయడమే. ట్రాన్స్ఫర్ టు రిజర్వ్ డెబిట్ చేయకూడదు, ఇగ్నోర్ చేయడమే. అర్థమవుతుందా? మనం ఎక్కడి నుంచి స్టార్ట్ అవుతుందో చూసుకోవాలి. సో నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్ బట్ బిఫోర్ అప్రాప్రియేషన్. నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్, దీనికి ఏం చేయాలి? ప్రొవిజన్ ఫర్ ట్యాక్స్. యాడ్ ప్రొవిజన్ ఫర్ ట్యాక్స్. వై వీఆర్ యాడింగ్ ప్రొవిజన్ ఫర్ ట్యాక్స్? సో ట్యాక్స్, if you are paying tax, will there be any outflow or not? Yes, there will be an outflow. There will be an outflow. Okay, no doubt. Tax is an operating expense or not? Yes, tax is an operating expense. Tax operating expense and there will be a cash outflow. మరి డెబిట్ చేయాలి కదా, కరెక్టే కదా? మరి డెబిట్ చేసాము, దాన్ని ఏం చేయాలి? ఇగ్నోర్ చేయాలి లెక్క ప్రకారం అయితే. But why we are adding it back? Because provision for tax, it needs a separate disclosure. Separate disclosure కావాలి. డెబిట్ చేసాం, కరెక్టే, అది దానిలో డౌట్ లేదు. మరి ఎందుకు యాడ్ బ్యాక్ చేస్తున్నామంటే మళ్ళీ ఎండింగ్లో లాస్ట్లో చూడండి ఏం చేస్తున్నాం? ట్యాక్స్ పెయిడ్. వీఆర్ రెడ్యూసింగ్ ద ట్యాక్స్ పెయిడ్ సో దట్ షేర్ హోల్డర్స్ కెన్ ఈజీలీ సీ హౌ మచ్ ట్యాక్స్ హ్యాస్ బీన్ paid. As per accounting standard, it requires a separate disclosure కాబట్టి ఏం చేస్తాం? మనం యాడ్ చేస్తాం. అదర్వైజ్ చేయకూడదు, ఇగ్నోర్ చేయాలి. లెక్క ప్రకారం అయితే, లాజిక్ ప్రకారం ఇగ్నోర్ చేయాలి. ఎందుకని? బికాస్ ట్యాక్స్ ఈజ్ అన్ ఆపరేటింగ్ ఎక్స్పెన్స్ అండ్ దెర్ ఈజ్ అ క్యాష్ అవుట్ఫ్లో. బట్ వై వీఆర్ యాడింగ్ ప్రొవిజన్ ఫర్ ట్యాక్స్? బికాస్ ఇట్ నీడ్స్ a separate disclosure. Clear? Then you will get what? Net profit before tax. For suppose if you are starting from net profit before tax, పైన ఏం చేయాలి? ఇంకా ఇగ్నోర్ చేయాలి. If you are starting from net profit before tax, are you going to add dividend? No, you should not add dividend. You should not add dividend. What about transfer to reserve? No, you should not add. You should not add provision for tax. Okay, so net profit before tax. Second, next, add non-cash expenses like depreciation. So why we are adding depreciation? Depreciation is an operating expense, but there is no cash outflow, so that has to be added back. What about amortization of goodwill? Non-cash expense, add back. Non-operating expenses like interest paid. Non-operating expenses, example, Interest paid. Interest paid has to be added back. Why? There is an outflow, but why we are adding? Because it is a financing activity. Financing activity కాబట్టి ఏం చేయాలి? యాడ్ బ్యాక్ చేయాలి. క్లియరా? మైనస్ నాన్ ఆపరేటింగ్ ఇన్కమ్స్. నాన్ ఆపరేటింగ్ ఇన్కమ్ ఏం చేయాలి? మైనస్ చేయాలి. ఎందుకు? అర్లియర్ ఏం చేసి ఉంటావు? క్రెడిట్ చేసి ఉంటావు, యాడ్ చేసి ఉంటావు. నాన్ ఆపరేటింగ్ ఇన్కమ్ ఎగ్జాంపుల్ ఇంట్రెస్ట్ రిసీవ్డ్, డివిడెండ్ రిసీవ్డ్. పిఎండ్ఎల్ అకౌంట్కి ఏం చేసి ఉంటాం? క్రెడిట్ చేసి ఉంటాం. వీ మైట్ హావ్ క్రెడిట్ టు ద పిఎండ్ఎల్ అకౌంట్, క్రెడిట్ టు ద పిఎండ్ఎల్ అకౌంట్. చేయవచ్చా? చేయకూడదు. క్రెడిట్ చేయకూడదు. క్రెడిట్ చేస్తే ఏం చేయాలి? మైనస్. వీ షుడ్ రెడ్యూస్. సో నాన్ ఆపరేటింగ్ ఇన్కమ్స్. వాట్ ఆర్ ద ఎగ్జాంపుల్స్ ఫర్ నాన్ ఆపరేటింగ్ ఇన్కమ్స్? Interest received, dividend received. Add extraordinary expense. If there is any extraordinary expense, we should add back. Extraordinary expense ఉంటే యాడ్ బ్యాక్ చేయాలి. అదేంటి సార్ అవుట్ఫ్లో ఉంటుంది కదా, ఆపరేటింగ్ కూడా అయ్యి ఉండొచ్చు కదా. వై వీఆర్ యాడింగ్ బ్యాక్? బికాజ్ ఇట్ నీడ్స్ ఎ సపరేట్ డిస్క్లోజర్. ఇఫ్ దెర్ ఈజ్ ఎనీ extraordinary income, so that has to be reduced. క్రెడిట్ చేసాం, ఇప్పుడు ఏం చేయాలి? మైనస్ చేయాలి. ఎందుకు? బికాజ్ ఇట్ నీడ్స్ ఎ సపరేట్ డిస్క్లోజర్. సో వాట్ ఈస్ అన్ ఎగ్జాంపుల్ ఫర్ ఎక్స్ట్రాఆర్డినరీ ఎక్స్పెన్స్? కాంపన్సేషన్ పెయిడ్ అండర్ ఎ లా సూట్. ఫర్ ఎగ్జాంపుల్, కాంపన్సేషన్ పెయిడ్ అండర్ ఎ లా సూట్. Compensation paid under a lawsuit is what? Extraordinary expense, because it is not of a recurring nature. అది రికరింగ్ నేచర్ కాదు. కాంపన్సేషన్ అనేది రెగ్యులర్గా పే చేసేది కాదు. సో దట్స్ వై షేర్ హోల్డర్స్ షుడ్ నో ఇట్ నీడ్స్ అ సపరేట్ డిస్క్లోజర్ ఇఫ్ యు ఆర్ పేయింగ్ అ కాంపన్సేషన్ అండర్ అ లా సూట్. అంటే ఎలాంటి లా సూట్ అయి ఉండొచ్చు? ఎగ్జాంపుల్, ఓకే, ఎలాంటి లా సూట్? కేతో ఎవరున్నారమ్మా పేరు? కావ్య. ఓకే, సో షీ స్టార్టెడ్ కేఎఫ్సి. ఓకే, సో ఎవరైనా అడిగితే ఏంటి? షీఈస్ టెలింగ్ లైక్ కావ్య ఫ్రైడ్ చికెన్. ఓకే, షీఈస్ యూజింగ్ ద సేమ్ లోగో. సేమ్ కలర్ ప్యాటర్న్. ఏం చేస్తారు? Original owner will file a suit and she lost the suit and she is paying a compensation. She is paying a compensation to KFC. So this is an extraordinary expense. Okay, extraordinary income. Extraordinary income means what? Extraordinary income means, for example, in floods, Kavya fried chicken shop has been, okay, gone. So government has paid a compensation. So it is a regular income or irregular income? Irregular income. So that might be credited to what? P&L account. It needs a separate disclosure. So why it needs a separate disclosure? ఎందుకంటే రీజన్ ఏంటి? నువ్వు ఎక్స్ట్రాఆర్డినరీ ఇన్కమ్ మైనస్ చేసి మళ్ళీ లాస్ట్లో ఏం చేయాలి? యాడ్ చేయాలి. ఇక్కడ మైనస్ చేసి లాస్ట్లో యాడ్ చేస్తే షేర్ హోల్డర్స్ విల్ బీ ఏబుల్ టు సీ వాట్ ఈజ్ అన్ ఎక్స్ట్రాఆర్డినరీ ఇన్కమ్ అండ్ వాట్ ఈజ్ అన్ ఎక్స్ట్రాఆర్డినరీ ఎక్స్పెన్స్. ఇలా చేయలేదనుకోండి, ఓకే, మనకు ఓన్లీ నెట్ క్యాష్ ఫ్లో ఫ్రమ్ ఆపరేటింగ్ యాక్టివిటీ కనిపిస్తుంది. ఓకే, కేఎఫ్సి క్యాష్ ఫ్లో స్టేట్మెంట్ చూసాం, అసలు ఫుల్ క్యాష్ ఫ్లో ఫ్రమ్ ఆపరేటింగ్ యాక్టివిటీ ఉంది. అసలు ఎందుకు వచ్చింది అంటే రీజన్ ఏంటమ్మా? రోడ్ వైడింగ్లో షాప్ పోయింది, గవర్నమెంట్ వాళ్ళు కాంపన్సేషన్ ఇచ్చారు. అసలు మామూలుగా లేదుగా మా బిజినెస్ అనుకుంటే కరెక్టేనా? అది అర్థమైందా? లేదా ఫ్లడ్స్ వచ్చాయి, ఆ స్టాక్ ఏదో ఇదైపోతే ఏంటమ్మా దానికి వచ్చింది. అర్థమవుతుందా? సో ఇక్కడ పాయింట్ ఏంటంటే ఎందుకు సపరేట్ డిస్క్లోజర్? రీజన్ ఏంటి? షేర్ హోల్డర్స్ ఏంటి, అరే భలే ఉంది కదా క్యాష్ ఫ్లో అనుకుంటారు, కానీ అసలు ఆ క్యాష్ ఎలా వచ్చింది? అర్థమైందా? ఎర్త్క్వేక్ ఏదైనా రావడం, దానిలో ఏంటి గవర్నమెంట్ పే చేయడం, అర్థమైందా? అట్లా వచ్చి ఉండొచ్చు. సో దట్స్ వై ఇట్ నీడ్స్ ఎ సెపరేట్ డిస్క్లోజర్. సో దెన్ యూ విల్ గెట్ వాట్? క్యాష్ ఫ్లో ఫ్రమ్ ఆపరేటింగ్ యాక్టివిటీ బిఫోర్ వర్కింగ్ క్యాపిటల్ చేంజెస్. What is it? Cash flow from operating activity before working capital changes. So first we are starting with what? Net profit after tax and appropriation. Add transfer to reserve. Tell me why we are adding transfer to reserve. No cash outflow. Add dividend. Why we are adding dividend? Because it is not a operating activity. So net profit after tax. Next add provision for tax. Why we are adding provision for tax? It needs a separate disclosure. Net profit before tax. Net profit before tax. Add non-cash expenses like depreciation and amortization of a goodwill. Why we are adding? Because it is a non-cash expense, no cash outflow. Okay, and next what? Non-operating expense. Why we are adding non-operating expense? Because it is non-operating. That should come under what? Investing activity. I mean, financing activity, non-operating expense, interest paid. Minus non-operating income. Why we are reducing non-operating income? Why we are reducing non-operating income? Because it is non-operating. Interest received, dividend received. It should come under investing activity. So extraordinary expenses add. Why we are adding extraordinary expenses? It needs a separate disclosure. Minus extraordinary income. It needs a separate disclosure. Then you will get cash flow from operating activity before working capital changes. Not charges, changes. Working capital changes. Next we are considering working capital changes. Mahesh Babu, అద్దంలో చూసుకున్నావా? క్యాలిక్యులేటర్లో అంతకుముందు ఎవరో చూసుకున్నారు అలాగే. ఓకే, అందంగానే ఉంటావు కదా, ఎందుకు చూసుకోవడం? So cash flow from operating activity before working capital changes. Before working capital changes. So current assets increase. Current assets increase. ఇక్కడ ఫండ్ ఫ్లోకి మళ్ళీ ఇక్కడ కన్ఫ్యూజ్ అవ్వకండి. కరెంట్ అసెట్ ఇంక్రీజ్ మీన్స్ క్యాష్ అవుట్ఫ్లో. కరెంట్ అసెట్ ఇంక్రీజ్ మీన్స్ వాట్? క్యాష్ అవుట్ఫ్లో. ఎగ్జాంపుల్, సో డెటాస్ ఇంక్రీజ్ అయింది. డెటాస్ ఇంక్రీజ్ అయితే ఏంటి? యువర్ అవుట్ స్టాండింగ్ సేల్స్ హ్యావ్ గాట్ ఇంక్రీస్డ్. దట్ మీన్స్ యువర్ క్యాష్ విల్ డిక్రీజ్. అంటే ఇక్కడ సింపుల్గా గుర్తుపెట్టుకోవడానికి అయితే ఏంటంటే కరెంట్ అసెట్ ఇంక్రీజ్ మీన్స్ వీఆర్ పర్చేసింగ్ అన్ అసెట్, సో దట్స్ వై దెర్ ఈస్ ఎ క్యాష్ అవుట్ఫ్లో. బట్ యాక్చువల్ లాజిక్ ఈజ్ డిఫరెంట్. బట్ ఫర్ ద టైమ్ బీయింగ్ సింపుల్గా ఏంటంటే కరెంట్ అసెట్ ఇంక్రీజ్, క్యాష్ అవుట్ఫ్లో. మరీ అలా తెప్పకమ్మా, పడిపోద్ది మేడ. కరెంట్ అసెట్స్ ఇంక్రీజ్, ఆ కలికి యాక్షన్ తిప్పినట్టు తిప్పుతున్నాం. కరెంట్ అసెట్స్ ఇంక్రీజ్, క్యాష్ అవుట్ఫ్లో. క్యాష్ అవుట్ఫ్లో. కరెంట్ అసెట్ డిక్రీజ్, cash inflow. Current asset decrease means what? We are selling an asset, so that's why we have a cash inflow. For the timing ante. Current liability increase. Current liability increase means cash inflow. We are taking a debt, more debt. Current liability. We are talking about current liability, not non-current liability. Non-current liability goes to financing activity. అర్థమైందా? Next, current liability decrease. Current liability decrease means, for example, creditors decreased. Creditors decrease means what? We paid. So cash outflow. Okay. But whereas, do not get confused with fund. Fund means working capital. Fund means what? Working capital. మహేష్ బాబు, క్యాష్ current assets increase అయితే current assets increase అయితే cash decreases. If a current asset increase, cash decreases. If current assets increases, cash decreases. Okay. Next, current asset decrease, cash increase. What about working capital? Working capital means current asset minus current liabilities, nothing but net current assets. So we call it as what? Fund. We call it as what? Fund. We call it as a fund. If a current asset increase, cash decreases. Cash decreases. If a current asset increase, cash decreases. Cash decreases. Okay. What about working capital? Working capital. Working capital increases. Yes or no? Because working capital is equal to current assets minus current liabilities. Net current assets. Obviously, if current assets increase, what happens to the current working capital? Working capital will increase. Nothing but fund will increase. Here fund means not cash. Fund means working capital which includes cash. So, okay, fund includes cash. Fund includes cash. Fund is nothing but what? Working capital. Working capital is equal to net current assets which includes cash also. Okay, so current assets increase means cash decrease and working capital increase. Current assets decrease, cash increase, and what about working capital? So next one, current liabilities. Current liabilities increase means cash increase. Current liability increase means cash increase. What about working capital? Working capital decrease. Why working capital decreases? Working capital is equal to current asset minus current liabilities. Minus current liabilities. If that amount increases, what happens? Working capital will decrease. Next, current liabilities. Decrease. Current liabilities decrease means cash decrease. What about working capital? What about working capital? Increase. Yes or no? Minus current liability, and this current liability amount is decreasing, that working capital will increase. Clear? So this indirect one, cash flow from operating activities before working capital changes. Current assets increase means cash outflow. Current assets decrease, cash inflow. Current liabilities increase, cash inflow. Current liabilities decrease, cash outflow. Now you will get cash flow from operating activities before tax and extraordinary items. So extraordinary items. Extraordinary items can be what? Extraordinary income, extraordinary expense. So what about extraordinary expense? Minus. Previously we added, now minus, because there is an outflow. What about extraordinary income? Add. Now you will get cash flow from operating activity before tax minus tax paid. You will get net cash flow from operating activity. So in indirect method also, investing and financing activities will be same. Investing and financing same for both direct method and indirect method. So the only difference is what? Cash flow from operating activity. Cash flow from operating activities. Clear? Clear? So next, fund flow statement. If you see the fund flow statement, it is similar to cash flow statement indirect method. Cash flow statement indirect method. But instead of writing cash flow from operating activity, we write fund from operations. So to understand this statement, first you should know that there is no accounting standard for fund flow statement. That means what? No separate disclosures are required. No separate disclosures are required. Are you getting my point? No separate disclosures are required. Fund flow statement. So fund flow statement, first step is to prepare fund from operations. Fund from operations. How do we get fund from operations? Same. We start with net profit, after tax and appropriation. Add, transfer to reserve, because there is no fund outflow. There is no fund outflow. There is no working capital outflow, because your entry is P&L to general reserve. P&L to general reserve. Working capital is not getting affected. So that's why add, transfer to reserve. Next, add dividend. Why we are adding dividend? Because the heading is fund from operation, but dividend is not an operating activity. So dividend paid means there is a fund outflow, no doubt. But there is a fund outflow, but the reason is not an operating activity. So that's why add dividend. Net profit after tax. So here we are not adding the provision for tax. Why we are not adding the provision for tax? Because in cash flow statement we are adding provision for tax because it needs a separate disclosure. But for fund flow statement there is no accounting standard and it does not require a separate disclosure. So that's why we are not going to add provision for tax, and at the end we need not reduce tax paid. Clear? So add non-cash expenses. Why non-cash expenses are added? No fund outflow. No fund outflow. Plus non-operating expenses and losses. Non-operating expenses add. Why? Heading is fund from operation. Heading is fund from operation. So that's why add non-operating expenses and losses. Example, non-operating losses, loss on sale of fixed asset, loss on sale of machinery, building, etc. Next, minus non-operating income. You will get fund from operations. So what is missing here? Extraordinary expense, extraordinary income we are not considering. Why? Because fund flow statement does not require a separate disclosure. Shankar Bhai, fund from operations. Clear? Okay. Now fund flow statement. Fund flow statement. Fund flow statement. Sources and application. We take two. One is the source and second one is what? Application. అదేనా నోట్ చేసుకున్నారు ఇంతకుముందు మీరు? ఆల్రెడీ నోట్ చేసుకుంటే ఓకే ఫైన్, అదర్వైజ్ నోట్ చేసుకోండి. ఏ సోర్సెస్ ఫండ్ ఫ్లో స్టేట్మెంట్. ఫండ్ ఫ్లో స్టేట్మెంట్. ఫండ్ ఫ్రమ్ ఆపరేషన్ ఏంటి? సింపుల్గా ఇట్ ఈస్ నథింగ్ బట్ క్యాష్ ఫ్లో ఫ్రమ్ ఆపరేటింగ్ యాక్టివిటీ బిఫోర్ వర్కింగ్ క్యాపిటల్ చేంజెస్. దానికి కొన్ని వదిలేసాం, అంతేనా కదా. నెక్స్ట్ ఫండ్ ఫ్లో స్టేట్మెంట్. ఫండ్ ఫ్లో స్టేట్మెంట్ సోర్సెస్, అప్లికేషన్. సోర్సెస్ ఈజ్ నథింగ్ బట్ ఫండ్ ఇన్ఫ్లో. అప్లికేషన్ ఈజ్ నథింగ్ బట్ వాట్? ఫండ్ అవుట్ఫ్లో. Okay, in sources first we take fund from operations. Working capital inflow from operations, operating activities, fund from operations. Okay. Next, in cash flow statement we have a investing activity and financing activity. Yes or no? In investing activity and financing activity combined, so we take cash inflows in sources, cash outflows in applications. Ante. ఇన్వెస్టింగ్ యాక్టివిటీ అండ్ ఫైనాన్సింగ్ యాక్టివిటీస్లో నీకు ఇన్ఫ్లోస్ ఉన్నాయి, అవుట్ఫ్లోస్ ఉన్నాయి కదా. ఇప్పుడు ఏం చేస్తాం మనం? ఇన్ఫ్లోస్ అన్నీ సోర్సెస్ అవుతాయి బికాజ్ దెర్ ఈస్ అ ఫండ్ ఇన్ఫ్లో కాబట్టి. అవుట్ఫ్లోస్ అన్నీ అప్లికేషన్స్ అవుతాయి. ఇఫ్ యూ సీ ద ఫండ్ ఫ్లో స్టేట్మెంట్ సోర్సెస్, ఫస్ట్ వీఆర్ టేకింగ్ fund from operations. Second, sale of fixed assets, sale of shares and debentures, interest received, dividend received, issue of shares and debentures, loan taken. ఇప్పుడు ఏమర్థం అవుతుంది? అన్నీ కూడా ఏంటి? ఆల్ ఆర్ ఇన్ఫ్లోస్. ఆల్ ఆర్ ఇన్ఫ్లోస్. వాట్ అబౌట్ అప్లికేషన్? పర్చేజ్ ఆఫ్ ఫిక్స్డ్ అసెట్స్, purchase of shares and debentures, buyback of shares and redemption of debentures, loan repaid, interest paid, dividend paid. ఇప్పుడు ఈ రెండింటికి ఉన్న డిఫరెన్స్ ఏమంటాం? ఇక్కడ రాయలేదు. ఈ రెండింటికి ఉన్న డిఫరెన్స్ ఏమంటాం? ఇంక్రీజ్ ఆర్ డిక్రీజ్ ఇన్ వర్కింగ్ క్యాపిటల్. ఫస్ట్ సపోజ్ సోర్సెస్ మైనస్ అప్లికేషన్. సోర్సెస్ మైనస్ అప్లికేషన్, యు గాట్ పాజిటివ్. That means increase in working capital. Increase in working capital. Sources minus application negative. Decrease in working capital. అంతేగా మరి. సోర్సెస్ ఫండ్ ఇన్ఫ్లో, అప్లికేషన్ ఫండ్ అవుట్ఫ్లో. ఫండ్ ఇన్ఫ్లో మైనస్ ఫండ్ అవుట్ఫ్లో, ఓవరాల్ పాజిటివ్ వస్తే ఇంక్రీజ్ ఇన్ వర్కింగ్ క్యాపిటల్. ఇఫ్ ఇట్ ఈస్ నెగిటివ్, డిక్రీజ్ ఇన్ వర్కింగ్ క్యాపిటల్. So what is the purpose of preparing fund flow statement? To know the reasons for increase or decrease in working capital. అసలు ఫండ్ ఫ్రమ్ ఆపరేషన్స్, వర్కింగ్ క్యాపిటల్ ఏమైనా మన ఆపరేషన్స్ నుంచి ఇంక్రీజ్ అయిందా అనలైజ్ చేయడానికి. ప్రిపేర్ చేయకపోతే తెలియదు కదా మనకి. ప్రిపేర్ చేస్తే మనకి ఏం తెలుస్తుంది? ఫండ్ ఫ్రమ్ ఆపరేషన్స్. పర్లేదు, వీఆర్ జనరేటింగ్ వర్కింగ్ క్యాపిటల్ ఫ్రమ్ వాట్? ఆపరేటింగ్ యాక్టివిటీ. వి ఫీల్ హ్యాపీ. ఎస్ ఆర్ నో? క్లియరా? Sources minus application. Here it is missing. Sources minus application. If it is positive, increase in working capital. So next C we write A minus B. C what? A minus B. Increase or decrease in working capital. Increase in brackets positive sign, decrease in brackets negative sign. Clear? సో నా మరి మనం చేసింది కరెక్టో రాంగ్ తెలుసుకోవాలి కదా. వీఆర్ మెన్షనింగ్ ఇంక్రీజ్ ఆర్ డిక్రీజ్ ఇన్, వీ ఫౌండ్ అవుట్ ఇంక్రీజ్ ఆర్ డిక్రీజ్ ఇన్ వర్కింగ్ క్యాపిటల్. టు నో దిస్ వాట్ వీఆర్ ఫైండింగ్ అవుట్, వీఆర్ ప్రిపేరింగ్ అ వర్కింగ్ క్యాపిటల్ చేంజెస్ స్టేట్మెంట్. ఇన్ క్యాష్ ఫ్లో స్టేట్మెంట్ క్యాష్ ఈజ్ అ సింగిల్ ఐటమ్. అందుకని నీకేంటి? క్యాష్ ఫ్లో చేంజెస్ స్టేట్మెంట్ ఈజ్ నాట్ రిక్వైర్డ్. క్యాష్ ఫ్లో స్టేట్మెంట్లో if you see the last line, so you are adding the three numbers, you are getting what? Cash and cash equivalent generated during the year. Add opening, then you will get closing. అక్కడే తెలిసిపోతుంది కరెక్ట్ ఆర్ రాంగ్. బట్ వర్కింగ్ క్యాపిటల్ ఈజ్ నాట్ అ సింగిల్ ఐటమ్. వర్కింగ్ క్యాపిటల్ కంటైన్స్ వాట్? కరెంట్ అసెట్స్ అండ్ కరెంట్ లయబిలిటీస్. అండ్ అగైన్ ఇన్ కరెంట్ అసెట్స్ వీ హ్యావ్ అ స్టాక్, డెటాస్, బిల్స్ రిసీవబుల్, క్యాష్, ఎట్సెట్రా. ఎస్ ఆర్ నో? సో దట్స్ వై వీ నీడ్ టు ప్రిపేర్ అ సపరేట్ వర్కింగ్ క్యాపిటల్ చేంజెస్ స్టేట్మెంట్. ఇప్పుడు ఈ సోర్సెస్ మైనస్ అప్లికేషన్ చేస్తే మనకు ఒక అమౌంట్ వచ్చింది కదా, ఇంక్రీజ్ ఆర్ డిక్రీజ్ ఇన్ వర్కింగ్ క్యాపిటల్. ఈ నెంబర్ ఏం చేయాలి? ఈ నెంబర్ ఇక్కడ మ్యాచ్ అవ్వాలి. ఆల్రెడీ రాశారు ఇక్కడ. ఓకే, అర్థమవుతుందా? ఈ నెంబర్ మ్యాచ్ అవ్వాలి. సో వీ ప్రిపేర్ అ వర్కింగ్ క్యాపిటల్ చేంజెస్ స్టేట్మెంట్. వర్కింగ్ క్యాపిటల్ చేంజెస్ స్టేట్మెంట్. వీ టేక్ 4 columns: particulars, opening, closing, increase or decrease in working capital. So current assets, current liabilities. We take each item: stock, debtors, cash, bills receivable, creditors, bills payable, etc. We take all the current assets and current liabilities. You know that if current asset increase, working capital increase. If a current asset decrease, working capital decrease. If a current liability increase, working capital decrease. If a current liability decrease, current liability increase. ఓకే, ఇక్కడ టాలీ చేసుకుంటాం. వర్కింగ్ క్యాపిటల్ చేంజెస్ స్టేట్మెంట్లో వచ్చే నెంబర్ ఏదైతే ఉందో ఆ నెంబర్ ఏ నెంబర్తో మ్యాచ్ అవ్వాలి? సోర్సెస్ మైనస్ అప్లికేషన్. సోర్సెస్ మైనస్ వాట్? అప్లికేషన్. క్లియర్? ఓకే. సో you have to be careful. Issue of shares. If you are issuing shares, will there be a fund inflow or not? Will there be a fund inflow or not? Yes. So current to current, no change in working capital. Current to current, no change in working capital. Current to current means what? Example, payment made to creditors. Payment made to creditors. Payment made to creditors means there will not be any change in working capital. Why? What is the entry? Creditors to cash. Yes or no? So creditors is decreasing, cash is also decreasing. So working capital will not get affected. Yes or no? Collection from debtors. Collection from debtors. Cash to debtors. Cash is a current asset. Debtors is also a current asset. Current to current. No change in working capital. Yes or no? అంతేగా ఉంటుందా చేంజ్? సో వై దెర్ ఈజ్ నో చేంజ్ ఇన్ వర్కింగ్ క్యాపిటల్? సింపుల్, క్యాష్ టు డెటాస్ మీన్స్ క్యాష్ ఏమవుద్ది? ఇంక్రీజ్ అవుద్ది. డెటాస్ విల్ డిక్రీజ్, బట్ వర్కింగ్ క్యాపిటల్ will remain same. That means if there is a transaction between current to current, no change in working capital. Likewise, if there is a transaction between non-current and non-current, then also no change in working capital. Then also no change in working capital. Non-current to non-current means, for example, machinery is purchased by issue of equity shares. Machinery is purchased by issue of equity shares. Machinery is purchased by equity shares means what is the entry? Debit what comes in? Machinery account, debit. Okay. Equity share capital. Yes or no? Machinery account debit to equity share capital is the entry. Now tell me whether working capital will get affected or not. Working capital will not get affected. అర్థమైందా? Working capital will not get affected. For example, debt is converted into equity. Debt is converted into equity. Debenture is converted into equity. If you are converting debenture into equity, so working capital will get affected or not? Working capital will not get affected. Working capital ఏమి ఎఫెక్ట్ కాదు. అవుతుందా అవుదా? నో. క్లియరా? వర్కింగ్ క్యాపిటల్ విల్ గెట్ ఎఫెక్టెడ్ ఆర్ నాట్? ఆన్సర్ ఈజ్ నో. ఎందుకని? You know the concept of convertible debt, yes or no? In cost of a capital we discussed about convertible debt. Simple, if you are converting the debt into equity, what is the entry? Debentures account debit to equity share capital. I am talking about net entry. So will there be a change in working capital or not? Answer is no. So the working capital will get affected only if there is a transaction between current and non-current. If there is a transaction between current to non-current, then only there will be a change in working capital. Example, issue of equity share capital. Bank account debit to equity share capital. What happens to the working capital? Working capital will increase. Ante kada? That's why we have taken issue of a shares in sources. We have taken issue of a share capital in sources. Antena kada? Issue of a share capital. Issue of a share capital and what is the entry? Bank account debit to equity share capital. ఇప్పుడు ఏమవుద్ది? బ్యాంక్ ఏమో కరెంట్ అసెట్. ఓకే, ఈక్విటీ షేర్ క్యాపిటల్ కరెంటా నాన్ కరెంటా? నాన్ కరెంట్. సో వర్కింగ్ క్యాపిటల్ విల్ ఇంక్రీజ్ ఆర్ డిక్రీజ్? వర్కింగ్ క్యాపిటల్ విల్ ఇంక్రీజ్. ఎఫెక్ట్ ఉంటుందా ఉండదా? విల్ దేర్ బి ఎఫెక్ట్ ఆర్ నాట్? ఎస్. Purchase of plant and machinery. What is the entry? Machinery to bank. So will there be a change in working capital or not? Yes, there will be a change in working capital. ఎందుకంటే నీ క్యాష్ తగ్గిపోద్ది. నీ క్యాష్ తగ్గిపోతే ఏమవుద్ది? వర్కింగ్ క్యాపిటల్ డిక్రీజ్ అవుద్ది. క్లియరా? Am I clear? Okay. So fund will get affected, working capital will get affected only if there is a transaction between what, current and non-current. Okay, ఇది fund flow statement. So fund flow statement, what is the first step? Fund from operation. Second, fund flow statement. Next, working capital changes statement. Working capital changes statement, not application. In fund flow statement we have a two, sources and application. So what is the third one? Working capital changes statement. Clear? So question number 24 is a simple question. It is a past examination question, direct method. You can understand it is easy. So the following information has been provided by B Limited for the year ended on 31st March 2024. 31st March 2024. Sales for the year 96 lakhs, entirely made in cash. Cost of a goods sold was 75% of the sales. Cost of a goods sold was 75% of the sales. So that means 96 lakhs into 75%. 72 lakhs is the cost of a goods sold. Trade payables on 31st March 2024 was rupees 2 lakhs, more than the balance on 31st March 2023. 2 lakhs more than the balance on 31st March 2023. Closing inventory was higher than the opening inventory by rupees 1 lakh. Suppliers were paid rupees 71 lakhs during the year. So payment made to suppliers will come. Payment made to suppliers will be an operating activity. Operating expenses paid 7,20,000 comes under what? Operating activity. Taxes paid, operating activity, but shown at the end. Tax paid. So the company paid equity dividend of rupees 2,40,000 during the year. Equity dividend paid. Financing activity. Company acquired a land for rupees 8 lakhs. Company bought a land for rupees 8 lakhs. Investing activity. Bought a new machinery. Investing activity. Interest was received on investment for rupees 20,000. Interest received. Investing activity. Cash and cash equivalents on 1/4/2023. Opening cash and closing cash. You are required to prepare a cash flow statement for the year ending 31st March 2024 as per Accounting Standard 3. In this question, the special point is receipt from customers. Receipt from customers. So let us see. Okay. So is it a direct method or indirect method? It is a direct method. So cash flow from operating activity. Cash flow from receipt from customers is also given, entirely made in cash. So what is the receipt from customers? 96 lakhs. Receipts from customers, what is the amount? 96 lakhs. Payment to suppliers 71 lakhs. Operating expenses 7,20,000. Taxes paid 3 lakhs. What is the cash flow from operating activity? 14,80,000. Next, purchase of land outflow, purchase of machinery outflow, interest received on investment inflow. So cash flow from investing activity. Next, cash flow from financing activity, only one. Equity dividend paid. Add opening cash 80,000. What is the overall cash generated during the year? 60,000 plus 80,000. What is the cash at the end? Closing cash 1,40,000. So clear? So here the question is not complicated because payment to suppliers is given actually. So here unnecessary information is given to confuse you. One is cost of goods sold, trade payables, closing inventory. Of course, these 3 lines are very, very important. If This suppliers were paid rupees 71 lakhs during the year. This information is got given. For suppose if this information is not given, then we have to use what? The information cost of a goods sold. So all that information has to be used. So for example, if you see the question number 25. So in question number 24 itself, for suppose payment to suppliers is not given. So for suppose payment to suppliers is not given, then what is the way out to find out? So tell me, what is the cost of a good sold? 96 lakhs into 75%. 72 lakhs cost of a goods sold. Cost of a goods sold. Clear? Next, how can we find out the cost of a goods sold? Cost of a goods sold is equal to opening stock plus purchases minus closing stock if there are no operating expenses. But here operating expenses are given. So that's why cost of a goods sold is equal to opening stock plus purchases plus operating expenses minus what? Closing stock. Are you getting my point? So what is the cost of a goods sold amount? Cost of a goods sold is equal to opening stock plus purchases plus operating expenses minus what? Closing stock. So in this question the special point is what? Operating expense. Because I have seen one question, in that question what? Payment to suppliers is not given. If a payment to suppliers is not given, then what? We have to find out. So cost of a goods sold is equal to opening stock plus purchases plus operating expenses minus closing stock. So we can find out what? Purchases. Purchase is equal to what? Cost of a goods sold plus closing stock minus opening stock minus what? Operating expense. What is the cost of a goods sold here? 72 lakhs plus closing stock minus opening stock. So information is given. Closing inventory is higher than the opening inventory by rupees 1 lakh. That means closing stock minus opening stock is nothing but what? 1 lakh. Minus operating expenses. 7 lakh 20. 7 lakh 20. Clear? So what is the purchase amount? $65 lakh 80,000 purchases. Next, another information is given. So purchase is equal to what? 65 lakh 80. 65 lakh 80,000. Next, creditors is given, yes or no? Trade payables on 31st March 2024 was 2 lakhs more than the balance on 31st March 2023. Closing balance is higher than what? Opening balance. Closing balance is higher than the opening balance. That means what we have done? So creditors increased. Creditors increased means what? Okay. So creditors account. So what is the opening balance? We don't know opening balance. Let us assume opening balance is equal to 0. Then what is the closing balance? 2 lakhs. Purchase 65 lakh 80,000. 65 lakh what? 80,000. So what is the balancing figure? 60? 63 lakh 80,000. Okay, so this will be the amount paid to suppliers. Okay, but I think in this question they have not considered operating expenses, because exactly difference is what? In question they have given 71 lakh. We got 63 lakh 80,000. But there is another question. In that question, what operating expenses is considered? Yes or no? What is the question number? In corporate accounts. In corporate accounts, in one question, they have considered what? Operating expenses. Obviously, we have to consider cost of a good sold is equal to what? Opening stock plus purchase plus operating expenses minus what? Closing stock. Wages, డైరెక్ట్ వేజెస్. వాట్ అబౌట్ ఆపరేటింగ్? ఉన్నాయి ఆపరేటింగ్ ఎక్స్పెన్సెస్ దానిలో కన్సిడర్ చేస్తాం కదా, కాస్ట్ ఆఫ్ గుడ్స్ సోల్డే కదా. మీకు అర్థమైందా? ఇన్ కార్పొరేట్ అకౌంట్స్ దే హ్యావ్ కన్సిడర్డ్ వాట్? ఆపరేటింగ్ ఎక్స్పెన్సెస్ యాజ్ అ పార్ట్ ఆఫ్ కాస్ట్ ఆఫ్ అ గుడ్ సోల్డ్. ఎస్, ఇట్ హ్యాస్ టు బి కన్సిడర్డ్. అలా కన్సిడర్ చేస్తే మనకి ఎంత వస్తుంది? 63 lakh 80,000. ఒకవేళ అలా కన్సిడర్ చేయకపోతే దెన్ వి గెట్ వాట్? 73 lakhs. 73 lakhs. అర్థమైందా? సో 73 lakhs minus 2 lakhs, 71 lakhs. Payment to suppliers. Okay, clear? So, but in this question already payment to suppliers is given. So that's why we can ignore those 3 lines. అర్థమైంది నేను చెప్పింది ఏంటో? ఓకే. In corporate accounts, in one past examination question, they have not given payment to suppliers. And appudu em cheyali manam? We should find out cost of a good sold and then purchase, and then we have to find out payment to suppliers. So clear? Second question number 25 is simple. Sales for the year 96 lakhs. Sells goods for cash only. It comes under operating activity. 96 lakhs receipt from customers. Cost of a goods sold 60% of sales. Closing inventory was higher than opening inventory by rupees 20,000. Tax paid amount to 7 lakhs. Other expenses, not operating expenses, other expenses 21 lakh 45,000. Outstanding expenses on March 31st 2017 and 31st March 2018 totaled 82,000 and 91,000 respectively. New machinery and furniture costing rupees 10 lakh 50,000 in all were purchased. One equipment was sold for rupees 20,000. A rights issue was made. Of 50,000 shares of rupees 10 each at a premium of rupees 3 per share. The entire money was received with application. Dividends totaling rupees 4 lakhs was distributed among the shareholders. Cash in hand at bank 31st March 2017 and 31st March 2018 2 lakh 10,000 and 4 lakh 14,000 respectively. You are required to prepare cash flow statement as per accounting standard 3. Okay, for the year ended. So direct method. So cheppandama receipt from customers enta? So what is the receipt from customers? 96 lakhs. Payment to suppliers given in the question or not? Payment to supplier is not given in the question. So sales 96 lakhs into 60%. What is the amount? 57 lakh 60,000. Closing inventory was higher than opening inventory. Closing inventory was higher than opening inventory by rupees what? 20,000. Closing inventory was higher than the opening inventory by rupees 20,000. Okay. So tell me what is the answer? 80,000. Clear? Closing inventory was higher than the opening inventory. So the answer is 57 lakh 80,000. Clear? So, and we have other expenses as well. What are the other expenses? 21 lakh 45,000 other expenses overall total accrued. We have opening 82,000 and closing what? 91,000. So what should we do to find out the expenses paid? Opening, how do we get paid amount? Paid amount. Opening plus expenses accrued minus what? Closing. 91,000 plus 21 lakh 45 minus what? 82,000. Clear? So what is the expenses? 96 lakhs into 60% cost of a goods sold. What is the amount? 57 lakh 60,000 plus closing stock minus opening stock. That means 20,000 to be added. 57 lakh 80,000. 57 lakh 80,000 is what? Purchases. What about next expenses? Expenses is equal to 91,000 plus 21 lakh 45,000. సో మనం పేమెంట్ చేయకపోతే అసలు ఎంత ఉండాలి ఎక్స్పెన్సెస్? అవుట్ స్టాండింగ్ 91,000 ఆల్రెడీ ఉంది ప్లస్ 21 lakh 45 మొత్తం క్లోజింగ్ ఎంత ఉండాలి? 22 lakh 36,000 బట్ ద క్లోజింగ్ ఈజ్ ఓన్లీ 82,000. దట్ మీన్స్ రిమైనింగ్ వి పెయిడ్. సో 22 lakh 36,000 minus 82,000. What is the amount paid? 21 lakh. So here the total is given. Direct total is given 57 lakh 80,000 plus 21 lakh 54,000. Cash paid to suppliers and employees. So opening 82,000. I'm sorry. Opening 82,000. So calculation is what? 82,000 plus 21 lakh 45,000 minus what? 91,000. I'm sorry. Opening 82,000. Opening 82,000 plus 21 lakh 45,000 minus 91,000. 21 lakh 36,000. So overall cash paid to suppliers and employees 79 lakh 16,000. Next, tax paid. Purchase of fixed assets comes under what? Investing activity. Okay. So in this question the only special point is what? Finding out the payment to suppliers and expenses paid. ఓకే. ఎక్స్పెన్సెస్ ఎలా క్యాలిక్యులేట్ చేస్తాం? ఓపెనింగ్ ప్లస్ ఎక్స్పెన్సెస్ ఇంకర్డ్ మైనస్ క్లోజింగ్. అదేనా? పేమెంట్ టు సప్లయర్స్ కూడా అంతే. ఇదేంటమ్మా డైరెక్ట్ మెథడ్. సో క్లియరా? సో ఆఫ్టర్ బ్రేక్ చూద్దాం. సో ఫండ్ ఫ్లో స్టేట్మెంట్ ఈ క్వశ్చన్స్ ఒకసారి మార్క్ చేసుకోండి మీ బుక్లో. See the next question, question number 26. So if a payment to suppliers is not given, then how to find out it? So from sales we find out cost of a goods sold. Cost of a goods sold is equal to opening stock opening stock plus purchases minus closing stock. But if wages are given, in corporate accounts, in one question wages are given, in that case what? Opening stock plus purchases plus wages minus closing stock. Okay, so ignore operating expenses. Ignore what? Operating expenses. Okay, so either take what? Opening stock plus purchases minus closing stock, or else what? Opening stock plus purchases plus wages minus closing stock. Okay, so next see the question number 26. The following are the financial statement of a K Limited for the year ended March 31st. Balance sheet as on March 31st. Share capital, P&L account, long-term loan, creditors, fixed assets, stock, debtors, cash and cash equivalents. Income statement for the year ended. Cost of sales minus cost of sales minus operating expenses, administrative expenses, depreciation, dividend received, add dividend received less interest paid, less income tax paid, profit after tax. So K Limited paid dividend of rupees 9 lakhs during the year ended 31st March 2019. K Limited paid dividend of rupees 9 lakhs. Prepare a cash flow statement of a K Limited as per accounting standard 3 using indirect method. So we cannot prepare a cash flow statement using a direct method because receipt from customers or payment to suppliers is not given. Receipt from customers or a payment to suppliers not given. Okay, so how to prepare? First we start with what? Profit after tax, or you can directly start with profit before tax. What is the profit before tax? Or else you start with profit after tax. What is the profit after tax? 1650. So add income tax. Add what? Income tax. What is income tax? 700. Add income tax. Net profit before tax. What is the number? 1650 plus 700. 2350. Tax it might be 1300. Okay, so tax 1300. Tax 1300. Then profit after tax 1650 plus see this numbers once. 21,500 minus 14,700. 6,800 minus 2,400. 4,400 minus 1,000. 3,400. So 3,400. Next. Add dividend received. So do you have a question? Same question. So tell me the numbers. What are the numbers? Same, huh? I think these numbers are different. Okay. So dividend received 250. Dividend received 250. What about interest paid? 700. Interest paid 700. Income tax might be 1300. So income tax is missing. So here it is not in order. Okay. So 21,500 sales minus cost of our sales 6,800 minus administrative expenses 2,400 minus depreciation 1,000. You will get 3,400. Okay. Then dividend received 250. Next interest paid 750. 700. Income tax paid 1,300. You will get 1650. So 3,400 plus 250. 3,400 plus 250. You will get 3,650. So from 3,650 minus 700. 2950 minus tax 1300. 1650. Clear? So we should start from 1650. 1650. So 1650 add income tax. What is income tax? 1300. So profit before tax 2950. Next, what is the next one? Previous one. Interest paid 700. Add back. Dividend received minus. Depreciation add. Yes or no? 1650 add income tax 1300 add interest paid 700 minus dividend received 250 add depreciation 4400. So or else we can directly start from this what? 4400. Clear? Okay. So next what? So this is cash flow from operating activities before working capital changes. So see the balance sheet. What is the working capital? Stock, debtors. We cannot take cash because purpose of preparing cash flow statement is to find out increase or decrease in cash. So stock, increase, stock. So be careful. Opening balance is given on the right. Opening balance is given on the right. So stock increased or decreased? Decreased. Stock decrease means cash. Stock decrease means cash. Inflow or outflow? Inflow. So cash inflow 400. Next, decrease in debtors. Decrease in debtors means cash inflow. So what about the current liabilities? We have only creditors. Creditors increased. Creditors increase means again cash inflow 50. So now you will get cash flow from operating activities before tax minus tax paid 1300. So cash flow from operating activity 3900. Clear? Next, cash flow from investing activities. So dividend received is already given. Dividend received. Okay. So what about fixed assets? Fixed assets opening balance is 8500. 8500, but the closing balance is 10500. Out of 8500, depreciation is 1000. So that means the balance of fixed assets should be 7500. But the closing balance is 10500. That means we bought, okay, 3000 rupees worth of a fixed assets. So purchase of fixed assets 3000. Next, cash flow from financing activities. Cash flow from financing activities. Interest paid 700. Dividend paid is already given below the income statement 9 lakhs. 9 lakhs means 900. Next, see the long term loan balance sheet. Long term loan opening 5000, closing 5500. That means what? 500. We have taken a loan inflow. So clear? What about share capital? Share capital is opening and closing same. That means there is no issue of a share capital. There is no issue of a share capital. Clear? So clear? So you can start from P&L account also. If you see the P&L account, so what is the P&L account? Difference 5000 minus 4250. 750. You can start from 750 also. What is this 750? Profit after tax and appropriation. Profit after tax and appropriation. Add back. Transfer to general reserve. There is no general reserve. Add dividend. So what is the dividend amount? 9 lakhs. 9 lakhs means 900. So 750 plus 900, you will get 1650. What is this? What is this 1650? Profit after tax, but before appropriation. For 1650, you can add 1300 tax. You will get 2950. What is this 2950? Profit before tax. So clear? So net increase in cash during the year 50. Add opening cash 300 and closing cash 350. See the next question, question number 27, June 2025. June 2025. So balance of current assets and current liabilities were as follows. Calculate cash flow from operating activities. Net profit before tax is given. Net profit before tax. Items considered in determining the above net profit. What are the items considered? Interest on long-term borrowing. What should we do? Add back. Interest on long-term borrowing is already considered. Already considered means that might be debited. So what? Add back. Depreciation, add back. Amortization, add back. Gain on sale of a machinery, minus. So that means 3,40,000 plus 40 plus 85 plus 50 minus 30. 4,85,000 is the cash flow from operating activity before working capital changes. Clear? 4,85,000 is the cash flow from operating activity before working capital changes. So the opening and closing balances of current assets and current liabilities are given. First, trade receivable. Trade receivable decrease. Trade receivable decrease means cash inflow. What is the cash inflow? 35,000. Trade payables. Trade payables means creditors. Creditors increase means cash inflow 10,000. Inventories increase. Inventory increase means cash outflow 20,000. Prepaid expense increase means prepaid expense is a current asset. Prepaid expense increase means cash outflow. Income received in advance. So it is not a prepaid expense, it is a prepaid income. Income received in advance increased. Okay. Cash inflow na outflow na? So income received in advance, previously what, 5,000, but now it is 15,000. Okay. So 10,000. So overall net cash flow from operating activities 5,15,000. Clear? So this is a June 25 question, exam question. Next, see the question number 28. 28. S Limited has furnished the following information for the year ended 31st March 2019. Net profit is given. Net profit 35,500. Dividend is given 10,000, including interim dividend paid. Provision for income tax. Income tax paid. So provision for tax is different from income tax. Income tax paid. Generally we create a provision in previous year. We pay income tax in assessment year. Okay. So in balance sheet provision for tax account is not there, but generally what happens is we create a provision in previous year and that provision will be paid in assessment year. And again for next year we create a provision in assessment year. So here provision for income tax is what? 7,500. Income tax paid during the year is also 7,500. Both are same, but both need not be same. Both need not be same. Why both need not be same? Because the reason is in previous year we create a provision for income tax. Assessment. So when do we do assessment? We do business from 1st April to 31st March, yes or no? To find out the PGBP, first of all financial year has to close. To close the books also we have to create the provision for income tax, yes or no? So we create a provision in previous year. We create provision in previous year, but we pay income tax in subsequent financial year. Subsequent financial year. So that's why provision and income tax paid may not be same. So for example, provision for income tax. When we create provision for income tax, what is the entry? P&L account debit to provision for tax. So let us assume we are in a financial year. Yes or no? What is the financial year? 25-26. 25, 26. For 25, 26, we are creating a provision. In P&L account, we pass a journal entry. We pass a journal entry in books. What is the entry? P&L account debit to provision for tax, 2 lakh rupees amount. 2 lakh rupees amount. So this financial year, we create a provision. Next year, in 26, 27, we pay tax. We pay tax. Okay. So then what is the entry? Provision for tax account debit to bank. Provision for tax account debit to bank. Again for the next year. That is 26 to 27. We have to create a provision. So what is the entry? P&L account debit to provision for tax. But for next year, provision may be what? 3 lakhs. Provision may be what? 3 lakhs. So when we prepare a cash flow statement, we should add back the provision for tax. That means for next year, if we are preparing a cash flow statement, we add back 3 lakhs. But at the end, we reduce the tax paid 2 lakhs. Are you getting my point? So we add provision for tax, but at the end we reduce tax paid. Here, okay, it is compensating. Both are same, but both need not be same. So generally we add back provision for tax. Okay, because for P&L account we debit provision for tax. So that's why we add back provision for tax. But whereas at the end, while reducing, we take actual tax paid. Actual tax paid. Okay. Same applicable to proposed dividend. Same applicable to proposed dividend. Because for this financial year 25, 26, we pay dividend next year. We pay dividend next year, yes or no? You know the concept of AGM, annual general meeting. Annual general meeting must be conducted within 6 months of a closure of financial year, yes or no? Why 6 months time is allowed for conducting an AGM? Because financial year will close on 31st March 2026. Okay, management need time to prepare books of accounts, audit, and after auditing, then only the audited financial statement will be placed before the members in an annual general meeting. In that annual general meeting, Board of Directors will recommend payment of a dividend. Board of Directors has to recommend payment of a dividend. And shareholders in annual general meeting, they have to approve the payment of a dividend. Are you getting my point? Like tax, dividend also, for the financial year 25-26, when the dividend is going to be paid? In next financial year. In AGM, generally, you know the concept of final dividend and interim dividend. Interim dividend means dividend which is declared between 2 AGMs. Final dividend means dividend which is declared in annual general meeting. సింపుల్ కామన్ సెన్స్, నువ్వు బిజినెస్ చేస్తున్నావు ఎప్పటి నుంచి? 1st April నుంచి 31st March వరకు బిజినెస్ చేసావు. నీకు ప్రాఫిట్ ఎంత వచ్చింది తెలియాలంటే ఎప్పుడు తెలిసిద్ది? 31st March తర్వాతే తెలుసుద్ది. అప్పుడే నువ్వు ట్యాక్స్ ఎంత పే చేయాలో తెలిసిద్ది. అందుకే నీకు అసెస్మెంట్ ఇయర్ ఎప్పుడు అవుతుంది? ద ఫైనాన్షియల్ ఇయర్ విచ్ ఈజ్ సబ్సిక్వెంట్ టు ప్రీవియస్ ఇయర్, అవునా కదా? అలాగే నీకు డివిడెండ్ డిక్లేర్ చేయాలా లేదో కూడా ఎప్పుడు తెలిసిద్ది? ఫైనాన్షియల్ ఇయర్ క్లోజ్ అయ్యాక నీకు ప్రాఫిట్స్ వచ్చాయా లాస్ వచ్చాయో తెలుస్తుంది. అప్పుడు నువ్వేం చేస్తావు? బుక్స్ ప్రిపేర్ చేసి బుక్స్ ఆడిట్ చేయించుకొని దెన్ దీస్ బుక్స్ ఆర్ ప్లేస్డ్ బిఫోర్ ద మెంబర్స్ ఇన్ అన్ యాన్యువల్ జనరల్ మీటింగ్. యాన్యువల్ జనరల్ మీటింగ్లో షేర్ హోల్డర్స్ ముందు పెడితే అప్పుడేంటి? షేర్ హోల్డర్స్ కూడా కాదు, ముందు బోర్డ్ ఆఫ్ డైరెక్టర్స్ ఏం చేయాలి? రికమెండ్ చేయాలి డివిడెండ్ పే చేద్దామని చెప్పి. ముందు బోర్డ్ ఆఫ్ డైరెక్టర్స్ డివిడెండ్ పే చేద్దామని రికమెండ్ చేస్తే దాన్ని ఎవరు అప్రూవ్ చేయాలి? మళ్ళీ మెంబర్స్ అప్రూవ్ చేయాలి. మెంబర్స్ అప్రూవల్ ఇవ్వాలి. అవును డివిడెండ్ పే చేయండి మాకు కావాలి డబ్బులు అని అంటే అప్పుడు ఏం చేస్తాం? డివిడెండ్ పే చేస్తాం. ఆ డివిడెండ్ డిక్లరేషన్ ఎక్కడ అవుద్ది? ఏజీఎంలో అవుతుంది, ఇన్ యాన్యువల్ జనరల్ మీటింగ్. ఏజీఎంలో డిక్లరేషన్ అయిపోయిన తర్వాత దట్ డివిడెండ్ హ్యాస్ టు బి పెయిడ్ విత్ ఇన్ 30 days. డిక్లరేషన్ అయిన ఎన్ని డేస్లో పే చేయాలి? 30 daysలో పే చేయాలి. 30 daysలోపు ఒకవేళ పే చేయకపోతే అక్కడ నుంచి విత్ ఇన్ 5 days దట్ హ్యాస్ టు బి ట్రాన్స్ఫర్ టు ఎ సపరేట్ బ్యాంక్ అకౌంట్. ద అమౌంట్ హ్యాస్ టు బి ట్రాన్స్ఫర్ టు అ సపరేట్ బ్యాంక్ అకౌంట్. సపరేట్ బ్యాంక్ అకౌంట్కి ట్రాన్స్ఫర్ చేయాలి. లేదు నువ్వు పే చేసావు బట్ షేర్ హోల్డర్ ఇన్ఫర్మేషన్ ఈజ్ నాట్ అవైలబుల్. షేర్ హోల్డర్ ఇన్ఫర్మేషన్ ఈజ్ నాట్ అవైలబుల్. సో దాన్నే మనం ఏమంటాం, వి కాల్ ఇట్ యాజ్ అన్క్లెయిమ్డ్ డివిడెండ్. అన్క్లెయిమ్డ్ డివిడెండ్. కంపెనీ డివిడెండ్ పే చేస్తుంది కానీ తీసుకోవడానికి ఎవడు లేడు. అలాంటి కేసెస్ అలాగా, ఎగ్జాంపుల్కి మీ గ్రాండ్ ఫాదర్ ఎవరో షేర్లు కొని ఉంటారు ఐటీసీలో, షేర్ సర్టిఫికేట్ నీకు ఎవడో మర్చిపోయాడు, ఆయన వెళ్ళిపోయాడు. వెళ్ళిపోవడం అంటే ఏంటి, పైకి వెళ్ళిపోయారు. అసలు నీకే తెలియదు ఐటీసీ కంపెనీలో షేర్లు ఉన్నాయని. నువ్వెలా డివిడెండ్ అడుగుతావు వెళ్ళి? అడగడానికి మీ తాత లేడు. అర్థమవుతుందా? ఇప్పుడు ఆ డివిడెండ్ ఏమంటాం మనం? అన్క్లెయిమ్డ్ డివిడెండ్ అంటాం. అన్క్లెయిమ్డ్ డివిడెండ్. అది అలానే బ్యాలెన్స్ షీట్లో లయబిలిటీగా కనిపిస్తుంది. అర్థమైందా? నువ్వు క్లెయిమ్ చేసుకోలేదనుకో, 7 years 8 years టైం ఉంది, నువ్వు అప్పటికీ క్లెయిమ్ చేసుకోలేదు, నీకు తెలియలేదు, క్లెయిమ్ చేసుకోలేదు, అప్పుడేంటి? సో దట్ విల్ బి ట్రాన్స్ఫర్ టు ఇన్వెస్టర్ ప్రొటెక్షన్. ఇన్వెస్టర్స్ ప్రొటెక్షన్. ఓకే. అండ్ ఎడ్యుకేషన్ అకౌంట్, ఐపీఈ అకౌంట్కి ట్రాన్స్ఫర్ అయిపోతుంది. అర్థమవుతుంది? అంటే నీ అన్క్లెయిమ్ డివిడెండ్, ఈ కంపెనీస్లో ఉన్న అన్క్లెయిమ్ డివిడెండ్ మొత్తం ఎక్కడ ట్రాన్స్ఫర్ అయిపోద్ది? ఇన్వెస్టర్స్ ప్రొటెక్షన్ అండ్ ఎడ్యుకేషన్ ఫండ్. ఆ మనీ దేనికి యూజ్ చేస్తారు? ఇన్వెస్టర్స్ని ప్రొటెక్ట్ చేయడానికి లేదా వాళ్ళని ఎడ్యుకేట్ చేయడానికి యూజ్ చేస్తారు. అర్థమైందా? అంటే ఇన్కమ్ ట్యాక్స్ కానీ డివిడెండ్ కానీ సేమ్. ఎప్పుడు పే చేస్తాం? నెక్స్ట్ ఇయర్. అందుకనే ప్రపోజ్ చేసేది, ప్రపోజ్ డివిడెండ్ డెబిటెడ్ టు P&L అకౌంట్ దిస్ ఇయర్ బట్ పెయిడ్ ఇన్ నెక్స్ట్ ఇయర్. అర్థమైందా? ఓకే. సో దట్స్ వై provision for tax and income tax paid may not be same. Clear? So provision for income tax paid, loss on sale of asset, book value of asset sold, depreciation charged to P&L, profit on sale of investment, value of investment sold, interest expense due అంటే which is debited to the P&L account. Interest paid, actual amount. ఇక్కడ అబ్జర్వ్ చేశారా? 14,650 is the interest due during the year. That means this is the amount we debit to the P&L account. But what is the actual amount paid? 15,000. That means in cash flow from operating activities we add back 40,650. But in financing activities we consider only 15,000 as a outflow. Increase in working capital excluding cash and bank balance, direct increase in working capital. Increase in working capital means increase in current assets, increase in net current assets. That means cash. Increase in net current assets means cash outflow. Purchase of fixed assets, opening cash balance and closing cash balance. In this question the special point is net profit is given, yes or no? So this net profit 35,500, whenever they mention net profit in FM or business valuation final level, that should be assumed as net profit after tax but before appropriation. Net profit after tax but before appropriation. So here net profit after tax but before appropriation is equal to 35,500. Not after appropriation, that is net profit after tax but before appropriation. So after tax but before appropriation means we should add only tax. What is the provision for tax? 7,500. So 35,500 plus 7,500, 43,000. What is this 43,000? Net profit before tax. Net profit before tax. See each item. Income tax paid we reduce at the end, yes or no? What about loss on sale of asset? Loss on sale of asset, it might be debited to the P&L account. Debit chesundam. So operating or non-operating? It is a non-operating loss. Our principal business is not to purchase and sell assets. మన ప్రిన్సిపల్ బిజినెస్ అదేం కాదు కదా. సో కాబట్టి యాడ్ లాస్ ఆన్ సేల్ ఆఫ్ అసెట్. వాట్ ఇస్ ద లాస్ ఆన్ సేల్ ఆఫ్ అసెట్? 60. Okay, here the numbers are income tax paid 6,300. Income tax paid 6,300. What about loss on sale of asset? 60. Okay, loss on sale of a fixed asset 60. Okay. So add loss on sale of a fixed asset. So 50. So 60. What about depreciation charged to P&L? What is the depreciation charged? 30,000. Add back. Next, profit on sale of investment. 50. 150. Profit on sale of investment 150. Minus, yes or no? Profit on sale of investment 150. Next, interest expense. What is the interest expense? 15,000. 15,000. So tell me the calculation. 87,910. So once again tell me, what is the net profit after tax? 35,500. Add tax 7,500. 43,000 is the net profit before tax. Add loss on sale of asset. What is the loss on sale of asset? 60. Next, depreciation. What is the depreciation amount? 30,000. 30,000 add. Profit on sale of investment 150 negative. Next, interest expense. Interest expense 15,000. Interest expense 15,000. Why this 40,650 is there? Value of investment sold. Okay. Interest expense 15,000. So what is the total? 87,910. Next, increase in working capital. Increase in working capital means cash outflow. 84,100. 3,008. So what is this 3,810? Net profit. So net cash flow from operating activity before tax. What is the tax paid? 6,300 tax paid. 2490 negative. What is this 2490 negative? This should be written in outer column. Net cash flow from operating activity. Net cash flow from operating activity 2490. Outer column lo rayali. Next, cash flow from investing activities. Cash flow from investing activities. First time ichadu manaki sale of asset. What is the book value of asset? 250. Loss 60. That means we are going to get only 190. Next, sale of investment. 40,650 plus profit. What is the profit? 150. So 40,800 minus purchase of fixed asset 840. So net cash generated. Net cash inflow na outflow na? Net cash inflow. What is the net cash inflow? 40,150. Next, the financing. What is the financing activity? First one, interest paid 15,700. Dividend paid 10,000. Is there any other activity? Net cash 39,000. Sale of asset 250 minus 60 190. Sale of investment 40,800. Purchase of fixed asset 840. So purchase of fixed asset 840. 840. Okay, what is the answer? 840 or 40? 840. So what is the number? 40,000 150. Next interest paid 15,700. Dividend paid 10,000. 15,000 780. Dividend paid. What is the dividend paid? 10,000. So 25,000. 25,780. So what is the answer? 40,150 minus 2490 minus 25,780. 11,880. Add opening cash 1,032. 12,912. Clear? So question number 29 I will tell tomorrow. It is a little complicated financing activity. Next, see the 30th question. 30th question. The following information is provided by K Limited regarding its retained earnings. Balance of retained earnings 1st April 2022. What is the balance? Balance of retained earnings 3,25,600. Net profit after tax 6,48,480. Tax refund 25,470. Total 9,99,550. Loss on sale of a plant and machinery 14,460. Goodwill written off 95,370. Dividend paid 4,70,350. So overall balance of retained earnings 4,19,370. Clear? So additional information. Plant and machinery having a written down value of rupees 54,360 was sold in October 2022. Depreciation of rupees 68,250 has been deducted while arriving at net profit for the year. So depreciation 68,250 has been deducted. Plant and machinery were purchased during the year at a cost of rupees 1,60,000, but the payment was made in the form of 8% debentures of rupees 100 each for the same. 72,800 debentures have been redeemed during 2022. Prepare a statement of sources and application of fund for the year ended 31st March 2023. So they are asking you to find out what sources and application of a fund. We cannot prepare working capital statement because balance sheet is not given. So balance sheet is not given, we cannot find out what, we cannot prepare working capital changes statement. Okay. So sale of a plant and machinery. So first of all, what is a plant and machinery having a written down value of 54,360 was sold in October 2022. So what is the loss on sale of a plant and machinery? 14,460. That means what is the sale value? What is the sale value? 39,900. 54,360 minus 54,360 minus 14,460. 39,900. So 39,900 is a source of a finance. It is a source of a finance. Clear? Okay. So redemption of our debentures. 72,800 debentures have been redeemed during 2022. Is it a source or application? Sale of asset means fund inflow. If you are selling a plant and machinery, it is a fund inflow. So that's why source. What about redemption of debenture? Redemption of debenture. Source or an application? Application, because your cash will decrease. Cash decrease means working capital decrease. Cash is a part of working capital. So your working capital decrease. So that's why what? Redemption of debentures. application. Okay. Plant and machinery were purchased during the year at a cost of 1,60,000, but the payment is made in the form of 8% debentures. No fund inflow, no fund outflow. I have already told you, if there is a transaction between non-current and non-current, working capital will not get affected. If it is a transaction between current and current also, working capital will not get affected. So third point, is it going to affect? Is it going to affect or not? No. Clear? Okay. So next, see the statement given. What is the dividend paid amount? 4,70,350. So is it a source or application? It is application. 4,70,350. So we have only two applications. One is redemption of debentures. Second is payment of a dividend. Sale of plant and machinery is a source. Refund of a tax, source. If a tax is refunded, what happens? Your cash balance will increase. So it is a source. So we have to find out what fund from operations. Net profit after tax. What is the net profit after tax? 6,48,480. So one point is given. Depreciation of rupees 68,250 has been deducted while arriving at the net profit for the year. So you have arrived the profit. What is the profit? 6,48,480. So this profit is arrived after reducing a depreciation. What is the depreciation amount? 68,250. 68,250. So depreciation is a non-cash expense already deducted. So we have to add back. Okay. So 6,48,480 plus 68,250. 7,16,730. So total sources 7,62,100 total sources, and your application is 72,800 and 4,70,350. The balancing figure is net increase in working capital. So why we are not adding goodwill written off? Why we are not adding loss on sale of plant and machinery? If you see the statement, balance of retained earnings is given, add net profit after tax, next tax refund is added, later on they are reducing what? So that 6,48,480 is before reducing loss on sale of plant and machinery, before writing off goodwill, and before paying dividend. మీకు అర్థమవుతుందా? జనరల్గా మీరు తీసుకుంటే నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్కి ఏం యాడ్ చేయాలి? నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్కి మనం ఏం యాడ్ చేయాలి? యాడ్ డిప్రిసియేషన్, యాడ్ గుడ్విల్ రిటర్న్ ఆఫ్, యాడ్ లాస్ ఆన్ సేల్ ఆఫ్ అసెట్స్. ఎస్ ఆర్ నో? ఇక్కడ లాస్ ఆన్ సేల్ ఆఫ్ అసెట్ ఎందుకు యాడ్ చేయలేదు? జనరల్గా అయితే లాస్ ఆన్ సేల్ ఆఫ్ అసెట్ మనం డెబిట్ చేశాకే, ఓకే, డెబిట్ చేశాకే మనకి నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్ వస్తుంది. కానీ ఇక్కడ ఏంటి? క్లియర్గా చెప్పాడు నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్ అని. 6,48,480 ఇచ్చి ఆ తర్వాత కన్సిడర్ చేశాడు ఏంటి? లాస్ ఆన్ సేల్ ఆఫ్ అ ప్లాంట్ అండ్ మెషినరీ. అంటే ఆ 6,48,480 అరైవ్ అవ్వడానికైతే డెబిట్ చేయలే. ఇంకా డెబిట్ చేయాలా చేయకూడదా? చేయకూడదు, చేయలేదు. కాబట్టి ఏం చేస్తాం? ఇగ్నోర్ చేస్తాం. మరి డిప్రిషియేషన్ ఎందుకు యాడ్ చేసాం? క్లియర్గా చెప్పాడు కింద, depreciation of rupees 68,250 has been deducted while arriving at a net profit. ఆ 648,480 రావడానికి మనం ఏం చేసాం? డిప్రిషియేషన్ని ఆల్రెడీ డిడక్ట్ చేసాం. చేయాలా చేయకూడదా? చేయకూడదు, బికాస్ దెర్ ఈజ్ నో ఫండ్ అవుట్ఫ్లో. కాబట్టి ఏం చేసాం? యాడ్ బ్యాక్ చేసాం. మన ప్రొఫార్మాని మీరు చూసుకుంటే చేయలేము. ఇక్కడ ప్రొఫార్మాని మనం బై హార్ట్ చేస్తే. ఎందుకని? ప్రొఫార్మా ఏంటి? నెట్ ప్రాఫిట్ ఆఫ్టర్ ట్యాక్స్, యాడ్ ప్రొవిజన్ ఫర్ ట్యాక్స్, యాడ్ డిప్రిసియేషన్, యాడ్ గుడ్విల్ రిటర్న్ ఆఫ్, యాడ్ లాస్ ఆన్ సేల్ ఆఫ్ ఫిక్స్డ్ అసెట్, మైనస్ ప్రాఫిట్ ఆన్ సేల్ ఆఫ్ అసెట్, మైనస్ ఇంట్రెస్ట్ రిసీవ్డ్, మైనస్ డివిడెండ్ రిసీవ్డ్. అన్ని అడ్జస్ట్మెంట్స్ లేవు ఇక్కడ. ఎందుకు లేవు? లాస్ ఆన్ సేల్ ఆఫ్ ప్లాంట్ అండ్ మెషినరీ ఈస్ కన్సిడర్డ్ ఆఫ్టర్ పేమెంట్ ఆఫ్ అ ట్యాక్స్. అందుకని దాన్ని ఇగ్నోర్ చేసాం. గుడ్ విల్ రిటర్న్ ఆఫ్ కూడా కన్సిడర్ చేయాల, ఇగ్నోర్ చేసాం. ఎందుకు అంటే 6,48,480 ఏదైతే ఉందో అది ఎప్పుడు వచ్చింది మనకి? ఈ గుడ్ విల్ కన్సిడర్ చేయలేదు, ఇంకా లాస్ ఆన్ సేల్ ఆఫ్ ప్లాంట్ అండ్ మెషినరీ కూడా ఇంకా డెబిట్ చేయలేదు. సో దట్స్ వై. ఓకే, క్లియరా? ఓకే. So these questions, one question is pending, I will discuss tomorrow, okay, because there is no clarity in question. So question number 29, 9 marks question, June 2023. So this question I will discuss tomorrow, okay. So clear? So next, capital structure, okay. Capital structure means capital mix of a capital. So there can be 100% capital or 100% equity, 100% equity or 90% equity, 10% debt, or 80% equity, 20% debt. But there cannot be 100% debt, because in company there will be equity shareholder, yes or no? So there cannot be 100% debt, 100% debt. So capital structure means a capital mix. So why we are discussing this topic? So while procuring funds, we need to consider 4 factors. What are the 4 factors? Risk, control, cost, flexibility. Risk, cost, control, flexibility. Yes or no? Okay. So from risk point of view, which is the best source? Equity is the best source, because payment of a dividend is not mandatory. Repayment of a capital is also not mandatory. From control point of view, which is the best option? Debt is the best option. Flexibility point of view, debt is the best option. Flexibility point of view, debt is the best option. What about the cost point of view? Cost point of view is also, that is the best option. Okay, clear? But overall, which is the best option, equity or a debt? So the ultimate objective of a financial management is to maximize wealth. Our wealth should get maximized. So okay, during the time value for money, I have told you one formula. Value of a firm is equal to EBIT divided by KO. Value of a firm is equal to EBIT divided by KO. So KO is in the denominator, yes or no? So if a KO increases, what happens? Value decreases. If a KO increases, value decreases. Okay. So to understand this KO, so already we have completed cost of a capital. How we are calculating this KO? Okay, weighted average cost of a capital. First we calculate the specific cost, and then what? By doing weighted average we get KO. Yesterday also I have given 4 questions to practice. In that one question, if you have seen the second part, I think, okay, if I remember, second part, if you are taking any additional debt, generally, so the fundamental point is, if risk increases, required return increases, and if required return increases, value decreases. Yes or no? So in cost of a capital, so we have a concept like, for suppose if you are taking any additional debt, okay, so then additional finance risk is placed on an equity shareholder. Are you getting my point? And we have seen one more problem, like for first 2,50,000, 10% rate of interest, and beyond that 12% interest. Likewise we have seen, yes or no? So here one point you have to understand. For suppose right now the firm is having 100% equity, but the firm is taking debt. If a firm is taking debt, then what happens? Okay, so our finance risk is being placed on equity shareholders. Right now equity shareholders do not have any tension to pay interest or a Debt, yes or no? But if a firm is taking a debt, then what happens? The finance risk is being placed on equity shareholders. Ultimately, that risk has to be taken by the equity shareholders. We are talking about the company, but company belongs to what? Equity shareholders. Yes or no? So now the point is, finance risk, additional finance risk is being placed on equity shareholders. Then what happens to KE? KE will increase. KE will increase. Cost of equity, KE will increase. Yes or no? Why cost of equity KE is increasing? Because risk is increasing, then obviously required return will also increase. So that's why 100% equity firm is called as unlevered firm. Unlevered. There is no influence of a power. Okay, we are not using any fixed charges capital, fixed financial charges capital. So 100% equity firm is called as what? Unlevered firm. Okay, so right now unlevered firm, so there will be KE. Equity shareholders have some expectation. But if unlevered firm is getting converted into a levered firm, that means firm is taking a debt. So then what happens? KE will increase. Nothing but the conclusion is KE of a levered firm is always greater than KE of a unlevered firm. So what is the basis for this? If risk increases, required return will also increase. What kind of a risk is increasing here? Finance risk. So that we have discussed in leverages chapter. Finance risk means risk arising due to the usage of a debt funds. Am I clear? Okay. So capital structure. Why we are discussing? Capital structure means a capital mix. In this chapter, our objective is to determine the optimum capital structure. Optimum means best capital structure. Okay, what is the best capital structure? Okay, a capital structure is said to be best if the cost of a capital is minimum and the risk is at a manageable level. So best capital structure is a capital structure where the cost of a capital is minimum. So why we are telling it as a best capital structure? Because if a cost of a capital is minimum, overall cost of a capital is minimum, then value of a firm will get maximized. So value of firm is equal to EBIT divided by KO. So first you have to understand one fundamental point. If risk increases, required return increases. If required return increases, value decreases. So that is what we are discussing. We should keep our KO as low as possible. What is this KO? Minimum return required to be earned by the company to meet the expectation of our investors. If you keep the expectations of our shareholders or investors as low as possible, then it will be easy to meet, yes or no? Then it will be very easy to meet, then automatically value will increase. Okay? Are you getting my point? So likewise, you have to keep your parents' expectation as low as possible. You might be prepared for rank, you might be prepared for both groups, but you should keep your parents' expectations as low as possible. I always keep my parents' expectation as low as possible. I will prepare for the worst. Okay? Why the reason? For suppose, even you are preparing for both, you have to prepare your parents for what? Single group. Then what happens? It is easy to meet the expectation. You can meet the expectations easily. Okay? And that automatically will increase the value. You're getting my point? So always we should keep the opposite person's expectation on us as low as possible. Then we can meet their expectations and automatically value will increase. Okay? So clear? So here objective is to determine what? Optimum capital structure. Best capital structure. There are two objectives of a financial management: profit maximization, wealth maximization. Superior objective, wealth maximization. By the end of this chapter also, we will not be knowing what is the optimum capital structure. These are the theories. Okay, by applying these theories, We determine the optimum capital structure. We cannot conclude 30-70 is the optimum capital structure. 50-50 is the capital structure. We cannot determine. Okay. So we cannot come to the conclusion. So these are the different perceptions, different theories. Okay, we cannot say 100% equity is the best capital structure. We cannot say 70 equity, 30% debt is the capital structure, best capital. We cannot say like that. So for some industries, there are regulations. They have to maintain a fixed capital structure, like electricity companies, 70-30. They have to maintain. So for them, this capital structure and all is not relevant. This chapter is not relevant because they cannot determine their own capital structure. They have to follow what 70-30. Are you getting my point? So there are different theories. First one, favorable financial leverage. Favorable financial leverage means financial leverage is said to be favorable if return on investment is greater than rate of interest. Greater than the rate of interest. Return on investment means EBIT divided by capital employed. So why the financial leverage is said to be favorable? Simple. My rate of interest is 10%, return on investment is 20%. So what is the meaning of this? On every 1 rupee invested, I am earning 0.2 rupees. But I will be paying only 0.1 to the debt holder. What about remaining 0.1? Remaining 0.1 will be enjoyed by equity shareholders. So that means leverage is favorable to financial leverage. That means leverage means influence of a power. Example, debt. So financial leverage is said to be favorable to the equity shareholders because return on investment is greater than rate of interest. For suppose return on investment is only 8%. Only 8%. Then what? So I am earning only 0.1 on every 1 rupee invested. Sorry, 0.08. I am earning only 0.08 on every 1 rupee invested, but I have to pay 0.1. So that means equity shareholder is paying out of his pocket. So then return on equity will decrease. Return on equity decrease. So if financial leverage is favorable, with the increase in debt proportion in capital structure, return on equity increases, earnings per share increases, and vice versa. Are you getting my point? 20% is return on investment, rate of interest is 10%. With the increase in debt proportion in capital structure, earnings per share increases, return on equity will also increase. Simple logic, they are enjoying the extra 10% extra benefit, yes or no? So clear? Is it clear? Okay. So when financial leverage is unfavorable, if it is unfavorable, then with the increase in debt proportion, what happens? Return on equity decreases, earnings per share decreases because equity holders have to pay to the debt holders from their pocket. That's why. Okay, simple concept. Favorable financial leverage. Clear? So, but sir, then we can conclude like favorable. If financial leverage is favorable, then we should keep on increasing the debt proportion. So if we increase debt proportion, then automatically what happens? Earnings per share will increase. Return on equity will also increase. So no doubt we can do this if our objective is to maximize only profit. But our objective is to maximize wealth. If you keep on increasing the debt proportion, so from one side KD will increase, cost of a debt will increase. That in one question we have seen. For first 2,50,000, 12% interest. Next 2,50,000, 13%. Why rate of interest is also increasing? See from the other side. If risk increases, required rate of return increases. If I am giving 2,50,000 to one person, there is a risk. If I am giving another 2,50,000 to that same person, risk will increase in a greater proportion. So that's why in finance there is one rule. If you have a 1 crore, you should not give 1 crore to one single person. You should not lend 1 crore to a single person. So that is high risk. If you have a 1 crore, okay, give 1 lakh each to 100 people. Then what? Even if 2-3 people make a default, still you are safe. You will at least recover what, 97 lakhs or 96 lakhs. But if you are lending 1 crore to one single person, risk is too high. Clear? Okay. So favorable financial leverage, simple. So earnings per share will maximize with the increase in debt proportion. But why we are not concluding? Simple reason, if debt proportion increases, what happens? The expectation of debt holders and expectation of equity holders both will increase, and the overall KO will increase. KO will increase. Clear? If KO increases, what happens to the value? Value decreases. So we have to take care of what? Both profit as well as risk. Superior objective is wealth maximization. So that's why we have other concepts as well. Financial break-even point. Financial break-even point. So financial break-even point means minimum level of a EBIT required to meet the fixed financial charges. We have a costing break-even point also. You should understand the difference between the costing break-even point and financial break-even point. Costing break-even point is minimum sales required to meet fixed costs. Minimum sales. Okay. Minimum sales required to meet what? Fixed cost. So that's why in that case, what is your formula? Fixed cost divided by contribution per unit. Okay. So in this chapter, financial break-even point means minimum level of a EBIT. It is also a break-even point. Costing break-even point means no profit, no loss. So here also break-even point means what? No profit, no loss to equity shareholders. Equity shareholders. Okay. So at financial break-even point, earnings per share is equal to 0. Earnings per share is equal to 0. Clear? So why are we determining the costing break-even point? What is the purpose? For example, costing break-even point is equal to 1 lakh units. 1 lakh units. So why we are finding it out? Simple reason. If I start a business, okay, I should sell minimum 1 lakh units. If I couldn't sell 1 lakh units, better what? I drop. Okay, I will not proceed. Are you getting my point? Okay. Likewise here also, why I am calculating this financial break-even point? So for suppose my financial break-even point minimum level of EBIT required to meet fixed financial charges. Example, it is 2 lakhs. For suppose if my expected EBIT is only 1 lakh, so then what? I should change my capital structure to 100% equity. I should change my capital structure to 100% equity. Why? Because if it is 100% equity, there are no fixed financial charges. I told the meaning of fixed financial charges. Financial charges means equity dividend, preference dividend, interest. In these three, what are the fixed financial charges? Interest and preference dividend. These two are the fixed financial charges. If your capital structure is 100% equity, then what? So there is no what? There are no fixed financial charges. Then what is the minimum level of EBIT required to meet fixed financial charges? 0. So capital structure, if it is 100% equity, financial break-even point is equal to 0. Okay, if it is equity and debt, for suppose our capital structure is equity and debt. If there is a debt, then what is your fixed financial charge? Interest. So that means you should earn minimum EBIT to meet your interest. So that means what is the financial break-even point? Interest. Be careful, in costing we are finding out sales. Here we are finding out what EBIT, minimum level of EBIT required to meet fixed financial charges. But be careful if it is a equity and preference. Equity and preference. Preference dividend is paid after payment of a tax. So that's why financial break-even point, if there is equity and preference, preference dividend divided by 1 minus tax rate. For suppose our capital structure is containing equity, debt and preference, then interest plus preference dividend divided by 1 minus tax rate. Interest plus preference dividend divided by 1 minus tax rate. So for suppose first case 0, right? Second case, let us assume it is 1 lakh. Second case 2 lakhs and third case 2 lakhs. If my expected EBIT is only 50,000, then I should go for what? First option. Why I should go for first option? Because you know that minimum you require what? 50,000. Minimum you require what? 50,000. But whereas, okay, what is your financial break-even point? 1 lakh. For example, if your financial break-even point is 1 lakh, your expected EBIT is what? 50,000. Then you should go for what? 100% equity. 100% equity. Clear? So are able to understand what is the purpose of finding out financial break-even point? Financial break-even point. We should know which capital structure we should choose. Okay. Clear? So capital structure. So this is one theory to determine what the best capital structure. Okay, financial break-even point. Next, EBIT EPS indifference point. Many a times this question has been asked. EBIT EPS indifference point. Indifference point you might have came across in economics and also what costing and again in finance. Okay, in costing, indifference point is different. In costing, indifference point, in marginal costing, you might have came across indifference point. Indifference means no difference. Same. Okay. Same. Okay. So indifference means what? What is the meaning? Indifference means same. Indifference means same. In costing, indifference point is different. For example, to understand the costing indifference point, Xerox machine is the best example. If you are taking a printer, for example, in office you might have seen printer. Okay. If you are taking a printer, then what happens? Your variable cost per unit will be high. Variable cost per unit will be high. Okay. So if you are taking a small printer or Xerox machine, your variable cost per unit, that means cost per paper will be high. Okay. But if you are going for a costly machine, Xerox machine, then what happens? Your variable cost per unit will decrease. Variable cost per unit will decrease. Getting my point? So then tell me which option I should choose. Okay, depends upon the number of papers I want. For suppose if I want only less number of papers for office, then what I will go for what? I will go for small printer. Simple logic. Yes or no? For suppose if you are starting a practice, as a cost accountant, if you want to start a practice, so will you buy a Xerox machine or a small printer? Small printer. Why the reason? Simple reason. Because you are not going to what? Print large number of papers, yes or no? So that's why. Okay. So the point is, if you want less number of prints, you go for what? Small printer. But for suppose if you want huge number of papers printing, then what? You go for large one. Yes or no? This is simple common sense point. But at what level, beyond which level I should go for a large printer? Beyond which level I should go for a large printer? So beyond which level means that level is called as what? Indifference point. indifference point. So indifference point is equal, how do we get indifference point? Change in fixed cost divided by change in variable cost per unit. Change in fixed cost divided by change in variable cost per unit. Change in fixed cost divided by change in variable cost per unit. That is an indifference point for what? Costing. That is for costing, but here indifference point is completely different. Okay. You can take example, take two columns, fixed cost and option 1 and option 2. Take two columns, option 1, option 2. Particulars, option 1, option 2. Particulars, option 1 and option 2. In particulars option 1 and what? Option 2. Fixed cost. ₹2,00,000. Variable cost per unit 10 per unit. Sorry. Fixed cost option 1 ₹2,00,000, option 2 ₹4,00,000. Variable cost per unit. So do not write, just see variable cost per unit. For example, 5 per unit, 5 per unit, and second case 10 per unit. Example. So this is an exceptional case. So tell me, here there will not be any indifference point. There will not be a point where the two options will be same. Why? First case fixed cost ₹2,00,000, second case ₹4,00,000. First case variable cost per unit 5 per unit, second case 10 per unit. Always option 1 is the best option. Always option 1 is the best option. Why? Fixed cost is less, variable cost is also less. But for suppose, that means what? Option 1 is always dominating option 2. So there is no indifference point. There is no indifference point. Are you getting my point? So for you and me, there can be an indifference point. You and me, so your net worth and my net worth, what? They might become same at some point of a time. At some point of a time, okay? So variable cost per unit, for example, if it is 10 per unit and what? 5 per unit. So now what? If we are producing less number of units, then we go for what? Option 1. We choose an option which is having a less fixed cost. If I am going to produce huge number of units, then what I go for? Option 2, an option which is having a less variable cost per unit. What is that huge number? Beyond which number I can go for option 2? Okay, up to which number I can use option 1? So for that purpose, we have to find out what? Indifference point. Simple. If I go for option 2, what is my extra fixed cost? ₹2,00,000 is my extra fixed cost. Change in fixed cost divided by what is the amount I am saving per unit? I am saving ₹5 per unit. So ₹2,00,000 divided by ₹5 per unit. For how many units? ₹2,00,000 divided by 5, 40,000. 40,000 units is the indifference point. At 40,000 units, both options will be same. At 40,000 units, both options will be same. Example, ₹2,00,000 plus 40,000 into 10. That means ₹4,00,000. What is the amount? ₹6,00,000. Second case, ₹4,00,000 plus 40,000 into 5. That will be what? 2 lakhs, 6 lakhs. So this 40,000 units is called as what? Indifference point, the level at which both options will be same. Now, if your expected production is less than 40,000, I will go for what? Option 1. If my expected production is beyond 40,000, I will go for what? Option 2. Simple. Are you getting my point? Indifference point. Now, likewise, we have a indifference point in finance as well. Finance. What is this indifference point? So, in the above case, we are finding out the number of units. Number of units at which both options will be same. Here, EBIT, EPS indifference point means it is the level of a EBIT. We are finding out the level of EBIT, not units. It is the level of a EBIT at which earnings per share would be same. In the previous example, total cost will be same. In previous example, we are finding out number of units at which total cost will be same under the two given options. Here I am finding out what? The level of a EBIT at which earnings per share would be same under the given two financial plans. Under the given two financial plans. Under the given two capital structures. Two capital structure. EPS should be same. EPS should be same. So that's why on left hand side I am taking EPS under plan 1. On right hand side I am taking EPS under plan 2. If you see the left hand side formula, so that is a formula for what? EPS. How will I get EPS? EBIT minus interest. So on left hand side if you see the formula, EBIT minus I1. I1 means interest under plan 1. Sir, why I am not taking EBIT 1? So EBIT 1 and EBIT 2 I am not taking. Why? Because I am finding out the EBIT. Here I am going to find out what? EBIT at which earnings per share under two plans will be same. So EBIT minus what? I1. After reducing interest, what is the next one? Tax. Yes or no? So that's why what? EBIT minus I1 into 1 minus T, tax rate. Into 1 minus tax rate. Sir, why we are not taking T1? Because irrespective of a capital structure, your tax rate will be same. Your tax rate will remain same, yes or no? Tax rate 30% means 30% applicable for what? Capital structure 1 and capital structure 2 also. So that's why I am taking what? T. You will get earnings after tax minus what? PD1, preference dividend 1. Preference dividend I am taking 1. Why I am taking 1? 1 means what? Preference dividend under plan 1. Because preference dividend depends upon the plan, capital structure. Divided by what? E1. E1 means number of equity shares. Nothing but we are taking what? Earnings available to equity shareholders under plan 1 divided by number of equity shares under plan 1 is equal to EBIT minus I2 into 1 minus T minus PD2 divided by what? E2. Okay. So be careful. So here we are going to find out what? Using this equation we are going to find out what? EBIT. EBIT at which earnings per share would be same under given two financial plans. In question they might give one EBIT. So students might substitute that EBIT in this equation. Then you will get what? EPS under plan 1 on left hand side, EPS under plan 2 on right hand side. You are not finding out indifference point. Indifference point means we have to find out the level of EBIT at which EPS would be same. Clear? So this is an indifference point. Indifference point. Simple question, indifference. Next. Capital structure theories. Capital structure theories. We have 4 capital structure theories. Here 4 capital structure theories. Four capital structure theories. First capital structure theory, net income approach. These four are four different perceptions. Okay. Capital structure theories. First one, net income approach. Net income approach. So what is this net income approach? So we all know that debt is cheaper than equity. We have seen the reasons for why the debt is cheap, yes or no? Why debt is cheaper than equity? First reason, tax savings on interest. Second, issue cost of a debt is less than the issue cost of a equity. And next what? Next, expectation of debt holders is less than the expectation of equity shareholders. Yes or no? Okay, so debt is cheaper than equity. So what is this net income approach? Net income approach is simple. Debt is cheaper than equity. Debt is cheaper than equity. For suppose milk and water, which is cheaper? Water is cheap, yes or no? For suppose if you are increasing the water proportion in milk, then what happens to the overall cost? Overall cost will, for suppose 1 liter milk, pure milk, what you are doing is 100 ml milk. So you are adding 100 ml water and what? Taking back 100 ml milk. Then what happens? So nothing but you are adding water to the milk. Then what happens? Overall cost will decrease. Overall cost will decrease or not? Overall cost will decrease. Likewise, here also, we all know that debt is cheaper than equity. Why debt is cheaper than equity? Because we can save tax. We can save tax on payment of interest. And next second, we can save tax on payment of interest. And next second one, cost of issue of a debt is less than cost of issue of equity. And next what? Expectation of debt holders are less than the expectation of equity shareholders. Okay. So as debt is cheaper than equity, if you increase the proportion of a debt in capital structure, if you increase the proportion of debt in capital structure, the overall cost of a capital decreases, overall cost of capital decreases and value of a firm increases. Because if KO decreases, value of firm increases. Value of firm is equal to what? EBIT divided by KO. Okay. So further I have taken an example. See the example. Source, proportion, specific cost and proportion into specific cost. In first case, what is the proportion of a debt? 0.2. Proportion of debt is 0.2. What is the meaning of this 0.2? For every 1 rupee investment, so 20 paisa is from debt. So what is the overall cost of a capital? 18%. Let us assume EBIT is equal to what? 2,70,000. So 2,70,000 divided by 18%. So 15 lakhs is what? Value of a firm. 15 lakhs is what? Value of a firm. 15 lakhs is a value of a firm. This is case 1. For example, case 2. What is the case 2? Debt proportion increase. For suppose, let us change the proportions. Equity 0.5, debt 0.5. We reduced equity proportion, increased what? Debt proportion. Specific cost. Cost of equity 20, cost of a debt 10. So what is the KO now? 15%. KO is equal to 15. So what is the value of a firm? Value of a firm is equal to 2,70,000 divided by 15%. So what is the value of firm? 18 lakhs. So is this example matching with the text or not? What is the text? With the increase in debt proportion in capital structure, the overall cost of capital decreases and value of firm increases. Value of firm increases. Clear? Okay. But if you have a deep understanding of a financial management, So question will rise in your mind. So what is the question? Sir, you are saying that if debt proportion increases, overall cost of capital decreases because debt is cheaper than equity. So and the value of firm increases. Okay, fine. Whatever you're saying is correct. You feel like. But if you have a deep understanding, then obviously the next question is, sir, so in one question we have seen that up to 12 lakh 50, up to 2 lakh 50, what is the rate of interest? What is the rate of interest? 12% or something? Yes or no? Beyond 2 lakh 50, 13%. So forget about amounts. I think the theme is same. Up to certain amount, rate of interest is something. But beyond that, rate of interest is what? Increasing. We know the logic for that because from the opposite side, the risk is increasing, so the rate of interest will also increase. Yes or no? Okay. So the logic is you are increasing the debt proportion, but if you are increasing the debt proportion, two things will happen. Two things will happen. Okay. First thing, your cost of a debt will increase. Cost of a debt will increase. So, but we are not talking about increase in cost of a debt. Yes or no? First example. So, okay, forget about cost of a debt for the timing. At least, if you are changing the proportions, if you are increasing the debt proportion, the finance risk taken by the equity shareholders will increase. So that also in cost of a capital, few questions were discussed. In cost of a capital. In cost of a capital, we have discussed few questions wherein, okay, in second part of the question, okay, company will be taking an additional debt. If a company is taking an additional debt, the expectation of equity shareholders will increase, KE will increase. So here, for every 1 rupee, earlier 0.2 debt, now you are taking 0.5 debt. The finance risk is increasing. Finance risk is increasing. So then if finance risk increases, then what happens? Expectation of equity shareholders will also increase. KE will increase, yes or no? So that's what I told in the beginning. KE of a levered firm is always greater than KE of an unlevered firm. KE of a levered firm is always greater than what? KE of an unlevered firm. Okay. So here, if you see the question, in the first case, I am taking what? K is same in both the cases. First case 20%, second case also what? 20%. So it is not the same. First suppose you are doing BCom, you expect 10,000 salary. Instead of doing BCom, you came to CMA. Will you expect the same 10,000? No. You expect what? More than 10,000. Why? Risk increasing. If risk increases, required return will also increase. Likewise, equity shareholders' expectation will also increase. So that's why KE. What net operating income? What is the next approach says? In net income approach, what we are ignoring 2 points actually. What are the 2 points? What are the 2 points? So if a debt proportion increases, cost of a debt increases, cost of equity will also increase. So we are ignoring those 2 points, which is not correct. So that's why what net operating income approach is saying, net operating income approach is capital structure decision is irrelevant to the value of a firm and cost of a capital. Okay. So whatever the proportion you take debt, the cost of a capital will remain same and the value of firm will also remain same. So what is the logic given by this approach? Simple. If you are increasing the debt proportion, debt is obviously cheaper than equity. The overall cost of capital has to come down, but it will get exactly offset due to the increase in expectation of equity shareholders. Are getting my point? So due to cheaper debt, no doubt overall cost of capital has to come down, but it will get exactly offset due to the increase in what? Expectation of equity shareholders. So for example, if you see the example again, For next approach, what is the next approach? Net income approach. So be careful. What is the first approach? Net operating income approach, EBIT. Net operating income means what? EBIT. After EBIT it comes net income, profit after tax, yes or no? Likewise, you might get confused between the approaches. First approach is NOI approach, net operating income approach, EBIT. Second approach is net income approach, profit after tax approach, net income approach. So see the case 1. Case 1 18%, the same one we have taken from the first approach. Case 2. Case 2. So cost of equity will not remain same. Cost of equity earlier 20%, but now 26%. Why 26%? Because debt proportion is increasing. So that's why what happens? Expectation of equity shareholders will increase. So expectation of equity shareholders increased. And again we got the same overall cost of a capital. And the value of firm will also remain same. Okay. Now again there will be a question mark. Sir, no doubt we got convinced with your explanation. Okay. Because if debt proportion increases, cost of equity increases. But how come exactly 26%? Okay, that should be the question mark. Are you getting my point? Debt proportion is increasing. If debt proportion increases, cost of equity KE increases. We got convinced. But how come exactly what? 26%. Why it can't be what? 27%, 25%, 28% or something else? Okay, so that is the drawback of this method. So that is what? So this method has not given a behavioral justification for exact offset. Okay, so we are telling that what? It will get offset. It will get what? Offset, okay, due to the increase in expectation of equity shareholders. కానీ ఇక్కడ డ్రాబ్యాక్ ఏంటి? అసలు అలా ఎలా ఎగ్జాక్ట్ ఆఫ్సెట్ అవుతుంది? నువ్వు చెప్పింది కరెక్టే, డెట్ ప్రపోర్షన్ ఇంక్రీజ్ అయితే ఎక్స్పెక్టేషన్ ఆఫ్ ఈక్విటీ షేర్హోల్డర్స్ కూడా ఏమవుద్ది? ఇంక్రీజ్ అవుద్ది. కానీ ఇక్కడ ఏం జరగాలి? అసలు అలా ఎలా 26% వస్తుంది? అయితే 25 అవ్వాలి, 25.4 అవ్వాలి, 27 అవ్వాలి, 28 అవ్వచ్చు, ఏదైనా అవ్వచ్చు కదా. ఎగ్జాక్ట్గా 26 ఎలా అవుతుంది? మళ్ళీ ఎగ్జాక్ట్గా ఆఫ్సెట్ అయ్యి 18% ఎలా వస్తుంది అనేది క్వశ్చన్. సో ద బిహేవియరల్ జస్టిఫికేషన్ వాజ్ నాట్ గివెన్ బై దిస్ అప్రోచ్. జస్టిఫై చేయలే ఈ అప్రోచ్లో. సో దట్స్ వై వీ హ్యావ్ అ మోదీ-గిలానీ మిల్లర్ అప్రోచ్. మోదీ-గిలానీ మిల్లర్ అప్రోచ్. మోదీ-గిలానీ మిల్లర్ ఏం చెప్తాడు? సేమ్ చెప్తాడు. హీఈస్ ఆల్సో సేయింగ్ ద సేమ్ థింగ్ యాజ్ నెట్ ఇన్కమ్ అప్రోచ్. Sorry, first one. What is the first one? I'm sorry, first one is net income approach. Reverse, I'm sorry. First one, net income approach. Second one, net operating income approach. I'm sorry. Reverse. Modi-Gilani Miller approach. Modi-Gilani Miller approach. What is the Modi-Gilani Miller approach? Same as net operating income approach. Okay, same as net operating income approach. But this approach has given a justification through an arbitrage process. So this approach is also same as net operating income approach. First approach, net income approach, profit after tax approach. Second one, EBIT approach, reverse, EBIT approach. So net income approach, net operating income approach, and next what? Modi-Gilani Miller approach. Modi-Gilani Miller is also saying the same thing. What is the same thing? Overall cost of capital will remain same. Value of firm will also remain same. So capital structure is not going to affect value of a firm. So this Modi-Gilani Miller always says irrelevant. In dividend decision also what? Dividend decision is irrelevant to the value of firm. So value of firm or value of equity will remain same. And in Walter's model, R means return on equity. Somebody, you might have getting confused. R means what? Return on equity. In Walter's model, dividend decision. Yesterday someone has asked out. R means what? Return on equity only. But whereas in questions, Sometimes what? They are not mentioning return on equity, they are giving what? Return on a investment or a return on a capital employed. Then I will be taking what? Return on investment. But if there is a scope to find out return on equity, I think last question. So we have to find out what? Return on equity, and then we have to find out price as per Walter's model. Clear? So now Modi-Gilani-Miller approach, same as what? Net operating income approach, but this approach has given a justification through arbitrage process. So in CMA Inter FM, they are not asking questions on an arbitrage process. So that's why I'm not going to explain arbitrage process questions. But the concept is, what Modi-Gilani-Miller says is, there are two businesses. There are two businesses. Let us assume, okay. So Praveen, Pandu business, okay. And our Manikanta. So both are doing a business, same business. Visualize same business. They are doing same business, okay. So tea time or something. So they are doing same business. The only difference is what? Investment is also same. Investment amount is same. Nature of business is same. The location is also same. Everything is same. The only difference is what? The only difference, capital structure. Pandu, okay, he got dowry, okay, 100% equity. 100% equity. Siggu. తప్పు కదా, డౌరీ తీసుకోవచ్చా? తీసుకోకూడదు కదా, మరి ప్రౌడ్ ఫీల్ అవుతున్నా. ఓకే, సో ఫర్ ఎగ్జాంపుల్ 100% ఈక్విటీ, 100% ఈక్విటీ. మహిసంజితో చూడు చీప్ లుక్ ఇచ్చింది, డౌరీ తీసుకున్నాడు ఎదవని. సరే, సో హియర్ ద పాయింట్ ఈజ్ 100% ఈక్విటీ. ప్రవీణ్ బిజినెస్ 100% ఈక్విటీ. మణికంఠ మ్యారేజ్ అవ్వాల, పిల్లని ఎవరు ఇవ్వలేదు. ఓకే, సేదో పాపం సేవింగ్స్ 20% ఉన్నాయి. 20% ఈక్విటీ, 80% డెట్. 20% ఈక్విటీ, 80% డెట్. ఓకే, am I clear? Okay, so now the amount of investment is same, nature of business is same, location is also same, everything is same, the product, everything is same, everything is same. The only difference is what? 100% equity, 20% equity and 80% debt. Okay, so sales are going to be same or not? Yes, sales are going to be same. Minus variable cost, contribution, minus what? Fixed cost. EBIT is going to be same. EBIT is going to be same. Am I correct? EBIT is going to be same. So when the EBIT is going to be same, for suppose there are no taxes, if there are no taxes, this EBIT will be divided between what? Equity holders and debenture holders. So tell me, the benefit received by investors include what? Equity plus debt. So the benefit received by investors will be same or not? When there are no taxes, EBIT of what? Pandu business and Manikanda business, both are what? Same. Both are same. Now my point is, when the benefit is same, then why do the value will change? Why the value will change? So that is the question. I mean, so that is the question what raised by Modi-Gilani-Miller. Okay, for example, there are two water bottles and two water bottles giving us same benefit. So then what? I will pay what? Same price for same, I mean two bottles, yes or no? So why do I pay extra price when I get benefit, same benefit? Inka sigubadutuna unnadu manadu. When I get a same benefit from two assets, are getting my point? మీకు అర్థం అవుతుందా? నాకు వచ్చే బెనిఫిట్ సేమ్ అన్నప్పుడు నేను ఎందుకు ఎక్కువ పే చేస్తా? ఇప్పుడు 2 acres ల్యాండ్స్ ఉన్నాయి, ఇక్కడ పక్కనే 2 acres ఉన్నాయి, రెండు కూడా సేమ్ ఒకేలా ఉన్నాయి ల్యాండ్స్. ఆ రెండింటి నుంచి ఒకేలా బెనిఫిట్ వస్తుంది. ఒకదానికి 2.5 CR పే చేసి ఇంకో దానికి 2 crores పే చేస్తారా? పే చేయరు కదా. ఏం చేస్తారు? రెండింటికి సేమ్ పే చేస్తారు కదా. అలాగే ఇక్కడ మనం 2 businesses అని చెప్పాం. ఒకటి పండు బిజినెస్, ఇంకోటి మణికంఠ బిజినెస్. బోత్ ఆర్ ఎర్నింగ్ సేమ్ EBIT, ట్యాక్సెస్ లేనప్పుడు ఆ ఈబీఐటీని ఎవరు పంచుకుంటారు? ఈక్విటీ హోల్డర్స్, డిబెంచర్ హోల్డర్స్ పంచుకుంటారు, అంతేనే కదా. సో ఇన్వెస్టర్స్కి మొత్తంగా చూసుకుంటే వచ్చేది ఆ ఈబీఐటీనే కదా. వచ్చే బెనిఫిట్స్ ఏమన్నప్పుడు అసలు వాల్యూ ఎందుకు మారుద్ది? మారదు కదా. సో దట్ వాజ్ ద లాజిక్ గివెన్ బై వాట్? మోదీ, గిలానీ, మిల్లర్. లేదు మారుద్దనే అనుకుందాం, ఓకే. ఫర్ సపోజ్ ద వాల్యూ ఈజ్ నాట్ సేమ్. హిస్ లాజిక్ ఈజ్ వాల్యూ ఆఫ్ అ లీవర్డ్ ఫర్మ్ మస్ట్ బీ ఈక్వల్ టు వాట్? వాల్యూ ఆఫ్ అ అన్లీవర్డ్ ఫర్మ్. వాల్యూ ఆఫ్ అ లీవర్డ్ ఫర్మ్ ఈజ్ ఈక్వల్ టు వాట్? వాల్యూ ఆఫ్ అ అన్లీవర్డ్ ఫర్మ్. లేదు, ఫర్ ద టైమింగ్ వాల్యూ ఆఫ్ అ లీవర్డ్ ఫర్మ్ ఈజ్ గ్రేటర్ దాన్ ద వాల్యూ ఆఫ్ అ అన్లీవర్డ్ ఫర్మ్. వాల్యూ ఆఫ్ అ లీవర్డ్ ఫర్మ్ ఈజ్ గ్రేటర్ దాన్ వాల్యూ ఆఫ్ అ అన్లీవర్డ్ ఫర్మ్. So then what I will do? I will do an arbitrage process. ఆర్బిట్రేజ్ ప్రాసెస్ అంటే ఏంటి? ఎగ్జాంపుల్కి నా దగ్గర ఒక 1 గ్రామ్ గోల్డ్ ఉంది, నీ దగ్గర ఒక 1 గ్రామ్ గోల్డ్ ఉంది, ఓకే. ఎవడో వచ్చి ఏంటి 15,000 రూపీస్ పే చేస్తా అన్నాడు 1 గ్రామ్ గోల్డ్కి. మార్కెట్లో 13,000 ఉంది. ఏం చేస్తా నేను? వాట్ ఐ విల్ డూ? I will sell this 1 gram gold for rupees 15,000 and I will buy in the market for rupees 13,000. So what is the benefit? I will get 2,000. ఎందుకు? ఇది గోల్డే, అది గోల్డే. సో ఇక్కడ వచ్చే బెనిఫిట్, నాకు అక్కడ వచ్చే బెనిఫిట్ రెండు కూడా ఏంటి? సేమ్. కాబట్టి నాకు నేను ఆర్బిట్రేట్ చేస్తా, అంతేనే కదా. అలాగే హియర్ లీవర్డ్ ఫర్మ్ ఈజ్ దేర్ అండ్ అన్లీవర్డ్ ఫర్మ్ ఈజ్ దేర్. Levered firm value is greater than what? Unlevered firm. Then what the investors will do? Investors will sell their shareholding in levered firm and they start purchasing the shares in what? Unlevered firm. So this process is called as what? Arbitrage process. So then what happens? Investors keep on selling the shares in levered firm and they keep on buying shares in what? Unlevered firm. So this value of levered firm will decrease because if you keep on selling, then what happens to the value? Value decrease. If you keep on buying, what happens? Value will increase. You know the bull and bear market. In stock market, bull means nothing but what? The investors who have a perception that the price will increase, they keep on buying shares. Bear means investors who have a perception that the price will decrease and they keep on what? Selling. Are you getting my point? So value of a levered firm. లిఖిత ఏంటి వాయిస్తున్నావు ఏదో? రెహమాన్ బూనేడమ్మా. Value of a levered firm is greater than value of a unlevered firm. If value of a levered firm is greater than value of a unlevered firm, then what investors will do? Investors will sell their shareholding in levered firm and will keep on buying the shares in unlevered firm. So what happens? Levered firm value will decrease, unlevered firm value will increase. At a certain point of a time, levered firm and unlevered firm will reach an equilibrium point. ఈక్వల్ అయిపోతాయి. ఈక్వల్ అయిపోయిన తర్వాత ఇంక మళ్ళీ ఆర్బిట్రేజ్ ప్రాసెస్ ఉంటుందా ఉండదా? ఉండదు. ఎగ్జాంపుల్కి నా దగ్గర ఒక 1 గ్రామ్ గోల్డ్ ఉంది, 13,000 రూపీస్, మార్కెట్లో కూడా 13,000 ఉంది. ఇప్పుడు ఏం చేస్తాను? ఇక్కడ అమ్మేసి మళ్ళీ కొనుక్కుంటానా? అలా ఎవడని చేస్తాడా? చేయడు కదా. అర్థం అవుతుందా? బుర్రన్నోడు చేయడు. సో దట్స్ వై వీ అజ్యూమ్ ఇన్ క్యాపిటల్ స్ట్రక్చర్ థియరీస్ ఇన్వెస్టర్స్ ఆర్ రేషనల్ అంటే వాళ్ళకి బుర్ర ఉంది, ఎప్పుడు ఏం చేయాలో తెలుసు వాళ్ళకి, ఓకే. సో దట్స్ వై what Modi, Gilani, Miller says is, when the benefit given by the firm is same, why do the value of firm will change? Depending upon the capital structure. అలా చేంజ్ అవ్వదు. లేదు, ఒకవేళ if value of levered firm is not equal to value of a unlevered firm, so what investors will do is, okay, so they will sell in overvalued firm and will purchase in what? Undervalued firm. And they will bring two firms' values to the equilibrium point. తీసుకొస్తారంటాడు, ఓకే. సో దిస్ ఈజ్ ద ఎక్స్ప్లెనేషన్. బట్ ఫర్ ఎగ్జామినేషన్ ద పాయింట్ ఈజ్ వాల్యూ ఆఫ్ అ లీవర్డ్ ఫర్మ్ ఈజ్ ఈక్వల్ టు వాట్? వాల్యూ ఆఫ్ అ అన్లీవర్డ్. దిస్ ఈజ్ యాజ్ పర్ వాట్? ఓకే, మోదీ, గిలానీ, మిల్లర్ అప్రోచ్. ఓకే, నెక్స్ట్ ట్రెడిషనల్ అప్రోచ్. Next what? Traditional approach. Traditional approach. What is this traditional approach? Cost of a debt is cheaper than equity with the increase in as the cost of debt is cheaper than equity, comma. Okay, so traditional approach is completely different. Traditional approach, what he says is, what this approach says, simple. Debt is cheaper than equity, no doubt. So with the increase in debt proportion in capital structure, up to a certain point, the overall cost of capital decreases. Are you getting my point? Up to a certain point, okay, with the increase in debt proportion, overall cost of capital decreases and value of firm increases up to a certain point, But beyond that, the reverse trend emerges. సో అంటే మీనింగ్ ఏంటి ఇక్కడ? నువ్వు చెప్పింది కరెక్టే, డెట్ ఈజ్ చీపర్ దాన్ ఈక్విటీ కాబట్టి డెట్ ప్రపోర్షన్ ఇంక్రీజ్ అయితే క్యాపిటల్ స్ట్రక్చర్లో ఓవరాల్ కాస్ట్ ఆఫ్ క్యాపిటల్ ఏమవుద్ది? డిక్రీజ్ అవుద్ది. వాల్యూ ఆఫ్ ఫర్మ్ ఏమవుద్ది? ఇంక్రీజ్ అవుద్ది. కానీ ఒక పాయింట్ తర్వాత రివర్స్ ట్రెండ్ ఎమర్జ్ అవుద్ది. ద రివర్స్ ట్రెండ్ విల్ ఎమర్జ్. సార్ రివర్స్ ట్రెండ్ అంటే ఏంటి? నువ్వే చెప్తున్నావు కదా, డెట్ ప్రపోర్షన్ ఇంక్రీజ్ అయితే కేడీ ఇంక్రీజ్ అవుద్దని, అలాగే డెట్ ప్రపోర్షన్ ఇంక్రీజ్ అయితే కేఈ ఇంక్రీజ్ అవుద్ది అంటున్నావు కదా. అది కూడా ఒక పాయింట్ తర్వాత నీకేమవుతుందంటే గ్రేటర్ ప్రపోర్షన్ ఇంక్రీజ్ అవుతుంది. గ్రేటర్ ప్రపోర్షన్ ఇంక్రీజ్ అవ్వడం అంటే ఎగ్జాంపుల్కి ఇప్పుడు నువ్వు ఫస్ట్ ఫ్లోర్ నుంచి దూకావు అనుకో, మామూలుగా ఒక కాలు ఇరుగుతుంది. రెండో ఫ్లోర్ నుంచి దూకావు అనుకో, రెండో కాలు ఇరిగిద్ది అనుకుందాం. ఓకే, మూడో ఫ్లోర్ నుంచి దూకినప్పుడు మూడో చెయ్యి చెయ్యి ఇరుగుద్ది అని చెప్పి అంటావా? నాలుగో ఫ్లోర్ నుంచి చెయ్యి ఇరుగుద్ది, ఇంకో చెయ్యి ఇరిగిద్ది, అలా కాదు కదా. ఏమవుద్ది నీకు? నాలుగో ఫ్లోర్ నుంచి దూకితే నీకేమవుద్దమ్మా? మొత్తం పోతావు పైకి. అంటే నీకేమవుద్దంటే ఒక పాయింట్ తర్వాత రిస్క్ అనేది గ్రేటర్ ప్రపోర్షన్స్లో ఇంక్రీజ్ అవుద్ది. రిస్క్ విల్ ఇంక్రీజ్ ఇన్ గ్రేటర్ ప్రపోర్షన్ ఇంక్రీజ్ అవుద్ది. అంటే ఏంటిది? ఇప్పుడు నువ్వు 10 లక్షలు అప్పు చేసావు అనుకో, రిస్క్ ఉందా లేదా? ఉంది. ఇంకో 10 lakhs అప్పు చేసావు అనుకో, రిస్క్ డబల్ కాదు, మోర్ దాన్ డబల్ అవుద్ది. రిస్క్ ఏమవుద్ది? మోర్ దాన్ డబల్. ఆర్ గెటింగ్ మై పాయింట్? ఇంకో 10 లక్షలు అప్పు చేసాం అనుకో, అప్పుడేంటి? ట్రిపుల్ అనుకుంటాం. ట్రిపుల్ కాదు, ఎక్స్పోనెన్షియల్ గ్రోత్ అంటాం మనం. ఏంటిది? ఎక్స్పోనెన్షియల్ గ్రోత్. రిస్క్ గ్రేటర్ ప్రపోర్షన్ ఇంక్రీజ్ అవుద్ది. కాబట్టి if you are keep on increasing the debt proportion, the expectation of equity shareholders will increase in a greater proportions. అందువల్ల నీకేమవుద్ది? ఒక పాయింట్ తర్వాత అటువైపు కేడీ ఇంక్రీజ్ అవుతుంది, ఇటువైపు కేఈ ఇంక్రీజ్ అవుతుంది, ఇంకా ఓవరాల్ కాస్ట్ ఆఫ్ క్యాపిటల్ కూడా ఏమవుద్ది? ఇంక్రీజ్ అయిపోద్ది. అప్పుడు వాల్యూ ఆఫ్ ఫర్మ్ ఏమవుద్ది? డిక్రీజ్ అవుద్ది. రివర్స్ ట్రెండ్ ఎమర్జ్ అవుద్ది అంటాడు. ఇదే అప్రోచ్ అమ్మా, ట్రెడిషనల్ అప్రోచ్. క్లియరా? ఓకే. So overall we have 4 approaches: net income approach, net operating income approach, Modigilani-Miller approach, traditional approach. So in all these 4 theories there is a common assumption: there are no corporate taxes. Okay, so and one more assumption, there are only 2 sources, equity and debt. ఇక్కడ మనకి 4 థియరీస్లో ఎక్కడ కూడా ప్రిఫరెన్స్ గురించి మాట్లాడాల. వి అజ్యూమ్ దట్ దెర్ ఆర్ ఓన్లీ వాట్? క్లియరా? దెర్ ఆర్ ఓన్లీ 2 సోర్సెస్, ఈక్విటీ అండ్ డెట్. దెర్ ఆర్ నో కార్పొరేట్ taxes. అండ్ మోస్ట్ ఇంపార్టెంట్లీ ఇన్వెస్టర్స్ ఆర్ రేషనల్. ఓకే, సో వాట్ ఈస్ ద ఫస్ట్ థియరీ? నెట్ ఇన్కమ్ అప్రోచ్. Simple approach, debt is cheaper than equity. So that's why with increase in debt proportion, the overall cost of capital decreases and value of firm increases. Clear? Net operating income approach. So with the increase in debt proportion, the overall cost of capital has to decrease, but it will get exactly offset due to increase in the expectation of equity shareholders. So So that's why the value of firm will remain same. Overall cost of capital will also remain same irrespective of a capital structure. So this is net operating income approach, but behavioral justification was not given. So Modi Gilani Miller says the same thing, but he gave a justification through an arbitrage process. So Modi Gilani Miller is also saying the same thing. Value of a levered firm is equal to value of a unlevered firm. Next, a traditional approach. What is the traditional approach? Cost of a traditional approach is what? With increase in debt proportion, overall cost of capital decreases and value of a firm increases. Value of firm increases up to a certain point. Beyond that, reverse trend emerges. Why the reverse trend emerges? Because with increase in debt proportion, expectation of equity shareholders increases, KD will also increase. So that's why. So clear? And the most important concept from examination point of view that we have to discuss, most important concept, model with taxes. What is the next one? Model with taxes. Modi Gilani Miller approach with taxes. With taxes. With taxes. It's equity 10 lakhs and 2 lakhs. 1 Praveen and 2 Manikanta. Next 10% debt. 10% is debt nil and 8 lakhs. So two capital structures. We have taken two businesses having a same capital, but the only difference is what? Capital structure. So tell me whether EBIT will be same or not. EBIT should be same. So let us assume EBIT is equal to what? 2 lakhs. EBIT is equal to 2 lakhs and 2 lakhs. Business is same, but the only difference is what? Capital structure. Clear, Anusurya? Next, minus interest. What is the interest? Interest is equal to 0, 80,000. So this is what? Earnings before tax. 2 lakhs, 1,20,000. 2 lakhs and 1,20,000 is the earnings before tax. Clear? Am I clear? Done. So when there are no taxes, in capital structure theories, especially in approach, we assume there are only two sources, equity and debt. Yes or no? And there are no corporate taxes. That means this amount is nothing but what? Earnings available to equity shareholders. Clear? Next, earnings available to what? Investors. Earnings available to what? Investors. So earnings available to investors, here investors means what? In my perception, both equity and debt. So first case, 2 lakhs. Second case also 2 lakhs. How come 2 lakhs? 1.2 lakhs plus 0.8. Earnings available to investors. 1.2 lakhs plus what? 0.8 lakhs. Am I clear? So this is earnings available to investors. So what Modi Gilani Miller says, when there are no taxes, When there are no taxes, value of a levered firm is equal to value of an unlevered firm. Because the benefit received by the investors is same in both the cases. That's why. Clear? Huh? Okay. So if you see the example, in this example, investors are getting what? 2 lakhs in both the cases. So that's why the value of levered firm is equal to what? Value of an unlevered firm. But same example, let us take what? Tax. Same example with the tax. Same example with the tax. What is the EBIT amount? 2 lakhs, 2 lakhs. Minus interest, 0.8. Earnings before tax. What is earnings before tax amount? 2 lakhs, 1.2 lakhs. EBT minus what? Tax at the rate of 30%. 0.6. Next what? 0.36. So 1.4 lakhs, 0.84 lakhs. This is what? EAES, earnings available to equity shareholders. Earnings available to equity shareholders. Now, earnings available to investors. First case, what is earnings available to investors? 1.4 lakhs. What about second case? 0.84 plus 0.36. Huh? What is interest? 0.8. Interest. We are calculating the earnings available to investors. 1.64 lakhs. Earnings available to investors 1.4 and 1.64. So when there are taxes, the benefit received by the investors is not same. Okay. So what is the extra amount? Tell me what is the difference between this? What is the difference between these two? Point 0.24 lakhs. Extra earnings. Extra earnings. Clear? In levered firm, earnings are more than unlevered firm by 0.24 lakhs. Am I correct? Yes or no? So why we got extra earnings in levered firm? What is the reason for? Tax savings on interest. Tax savings on interest. Because of interest, our taxable income got reduced. Yes or no? So nothing but this 0.24 calculation is nothing but 0.8 lakhs into 30%. Clear? What is this 0.8? Interest into tax rate. Interest into what? Tax rate. Clear? Am I clear? Now, nothing but when there are taxes, levered firm earnings will be greater by unlevered firm. Greater by what amount? Interest into tax rate. So levered firm investors will get extra earnings. How much extra earnings? Interest into tax rate. Interest into tax. So earlier, okay, Modi Gilani Miller has given a justification, we got convinced. Because when there are no taxes, the benefit from both the firms will be same. But now the benefit is not same. That means obviously the value of levered firm will be value of unlevered plus value of unlevered plus only. Why plus? Value of a levered firm will be greater than what? Unlevered firm. When there are taxes. By how much value? Okay, by how much value the levered firm will be greater than the unlevered firm. So not interest into tax rate, debt into tax rate. Debt into tax rate. Debt into tax rate. Value of a levered firm is equal to value of unlevered firm plus debt into tax rate. So what is the logic for this debt into tax rate? Okay, in levered firm, what are the extra earnings? Interest into tax rate. Extra earnings, that is not extra value. Interest into tax rate is extra earnings, not extra value. Interest into tax rate, extra earnings. So they will get for indefinite period. Investors in levered firm will get extra earnings for how many years? Indefinite period. వాళ్ళకి ఎవ్రీ ఇయర్ ఎక్స్ట్రా ఎర్నింగ్స్ వస్తాయి. అలా ఎన్ని సంవత్సరాలు వస్తాయి, ఎన్ని ఇయర్స్ వస్తాయి? ఇండెఫినెట్ పీరియడ్. అసలు ఎంత ఎక్స్ట్రా ఎర్నింగ్స్ వస్తున్నాయి? ఇంట్రెస్ట్ ఇంటూ ట్యాక్స్ రేట్ కదా. కానీ నీకు కావాల్సింది ఏంటి ఇక్కడ? వాల్యూ. యూ నీడ్ వాల్యూ. హౌ డు ఐ గెట్ వాల్యూ? చెప్పాను, టైం వాల్యూ ఆఫ్ మనీ. వీ షుడ్ బ్రింగ్ ద ఫ్యూచర్ బెనిఫిట్ టు ద ప్రెసెంట్ వాల్యూ. In future, levered firm investors are going to get extra benefit for how many years? Indefinite period. Indefinite period benefit vaste, what is the formula we have to apply? Fourth example, benefit divided by required return. So what is the benefit I am getting here? Interest into what? Tax rate. So this is the benefit. So this is the benefit. Benefit divided by what? Tax rate. Divided by what? Interest rate. Divided by what? Interest rate. What is this interest rate? Required return. Clear? Now this interest divided by interest rate is nothing but what? Debt. Interest divided by interest rate is nothing but what? Debt. Interest divided by interest rate is nothing but what? Debt. Clear? Are you getting my point? Are you able to understand the logic? So there is a link between time value of money and this concept. Value of a levered firm is equal to value of unlevered plus debt into tax rate. Why only debt into tax rate? Okay, how we got debt into tax rate? So simple, levered firm investors are getting an extra benefit of interest into tax rate. For how many years? Indefinite period. Indefinite period నీకు బెనిఫిట్ వస్తే అసెట్ వాల్యూ ఎలా ఫైండ్ అవుట్ చేయాలో చూసాం. ఫోర్త్ ఎగ్జాంపుల్. ఓకే, బెనిఫిట్ డివైడ్ బై రిక్వైర్డ్ రిటర్న్. సో ఫర్ డెట్ వాట్ ఈస్ ద రిక్వైర్డ్ రిటర్న్? ఇంట్రెస్ట్ రేట్. ఇఫ్ యూ డూ ఇంట్రెస్ట్ డివైడ్ బై ఇంట్రెస్ట్ రేట్, యూ విల్ గెట్ వాట్? డెట్. సో దట్స్ వై దిస్ ఇస్ ద ఫార్ములా. సో దిస్ ఈస్ వాట్ MM model with tax rate. Clear? So with this we have completed the concepts of a capital structure. Clear? So break this Kundana. Next, see the questions. So before starting the questions, what is the value of firm? Value of firm is equal to EBIT divided by KO. So KO is equal to, we can write like EBIT divided by value of a firm. Yes or no? Likewise, value of equity is equal to earnings available to equity shareholders divided by KE. So KE is equal to what? EAES divided by value of equity. KE is equal to EAES divided by value of equity. Am I clear? The next, value of a levered firm is equal to value of equity plus value of a debt. because levered firm means it is a combination of what? Equity and debt. So value of levered firm is equal to equity plus what? Debt. Okay. See the question number 1. Z company has a capital structure of 30% debt and 70% equity. The company is considering various investment proposals costing less than rupees 30 lakhs. The company does not want to disturb its present capital structure. The cost of raising the debt and equity are as follows. The cost of raising the debt and equity are as follows. Project cost, cost of a debt, cost of a equity. Above 5 lakhs, what is the cost of debt? 9%, cost of equity 13%. If a project cost is above 5 lakhs and up to 20 lakhs, what is the rate? 10% and 14%. So as the project cost increases, KD is increasing and KE is also increasing, because if risk increases, required return will also increase. Assuming the tax rate 50%, compute the cost of two projects A and B, whose fund requirements are rupees 8 lakhs. First one project cost what? 8 lakhs. Second one 22 lakhs. If the projects are expected to yield a tax, the projects are expected to yield after tax return of 11%. If the projects are expected to yield after tax return of 11%. What is this 11% IRR? If we invest in project, we are going to get only 11%. Determine under what conditions it would be acceptable. Can we accept the project or not is the question. So what is the first project? What is the project cost? 8 lakhs. 8 lakhs means above 5 lakhs. Above 5 lakhs and what? Up to 20 lakhs. Okay. First of all, here for all the levels we are finding out what KO. What is the capital structure? 30% debt, 70% equity. 30% debt and 70% equity. So KD is given, cost of a debt is given, and tax rate is also given. What is the tax rate? 50%. So here the special point is we should assume this cost of a debt as what? Before tax. Okay, because tax rate is given. Tax rate is given. So that's why we are assuming this KD as what? Before tax. So how do we get after tax KD? KD into 1 minus tax rate. So first case 4.5. Next 10 into 0.5. 5.5. 6. Clearer? What about KE? KE already given in question. What is KE? 13, 14, 15, 15.55. So next, how do we get weighted average cost of a capital? WDKD plus WEKE. 0.3 into 4.5 plus 0.7 into 13, then 0.45. So likewise, all cases we calculated, okay? But for us, only 2 cases are relevant. What are the 2 cases? One is the project cost, 8 lakhs. Project cost 8 lakhs means it lies between what? 5 lakhs and 20 lakhs. 5 lakhs and what? 20 lakhs. 5 lakhs and what? 20 lakhs. Clear? So what is the overall cost of capital? 11.3. But what is the project return? 11%. We require minimum 11.3 to meet the expectation of investors. But the project is expected to give only 11. So am I going to, can we accept this project or not? No. What about B? Project B, 12.15. Project return, 11. So, can we accept this project? No. Answer is no. So, both the projects are not acceptable because the expected return is less than required return. Clear? Next, question number 2. Question number 2. J Limited currently has an equity share capital of rupees 40 lakhs consisting of 40,000 equity shares of rupees 100 each. The management is planning to raise another rupees 30 lakhs to finance a major program of expansion through one of the 4 possible financing plans. So 40 lakhs, already 40 lakhs capital is there. How many shares are there? 40,000 equity shares. The management is planning to raise another rupees 30 lakhs to finance a major program of expansion through one of the 4 possible financing plans. A. 30 lakhs in equity shares of rupees 100 each. 15 lakh in equity shares of rupees 100 each and the balance through 8% debentures. 10 lakh rupees 10 lakhs in equity shares of rupees 100 each and the balance through long-term borrowing at 9% interest per annum. 15% 15 lakhs in equity shares of rupees 100 each and the balance through preference shares with 7% dividend. The company's expected earnings before interest and tax will be rupees 15 lakhs. Assuming corporate tax rate of 50%. Assuming corporate tax rate of 50%, as a cost and management accountant, you are required to analyze the EPS and financial leverage that will be authorized under each of the above schemes of financing and select the best plan to be selected. Select the best plan. Okay? So these kind of questions may be asked in capital structure. Nothing but they will give what? Already some amount of a capital is there. They want to raise the fund. So to raise the fund, there are alternatives. Here, how many alternatives are given? 4 plans are given. 4 plans. And they will ask you to find out EPS under what? All the 4 new plans. They will ask you to find out what? EPS under the new plans. Okay? So, as a cost and management accountant, you are required to analyze the EPS and also financial leverage. Okay? So what is the first plan? What is the amount we require? 30 lakhs. The management is planning to raise another 30 lakhs. To raise another 30 lakhs, first option, rupees 30 lakhs in equity shares. So issue what? Rupees 30 lakh equity shares of rupees 100 each. So that is one option. Second option, 15 lakhs in equity shares of rupees 100 each and the balance through 8% debenture. Balance means how many lakhs? 15 lakhs. Rupees 10 lakhs in equity shares of rupees 100 each and the balance through long-term borrowing of 9% interest per annum. What is the balance? 20 lakhs. Rupees 15 lakhs in equity shares of rupees 100 each and the balance through preference shares with 7% dividend. Balance means what? 15 lakhs. So first one, raising 100% equity. Second one, 15 lakhs equity, 15 lakhs debt. Third one, 10 lakhs equity, 20 lakhs debt. Next one, 15 lakhs equity, 15 lakhs preference share capital. Okay, what is the company's expected EBIT? Company's expected EBIT is 15 lakh. How can we find out earnings per share? Earnings per share is equal to EAES divided by number of equity shares. How will you get earnings available to equity shareholders? EBIT minus interest, earnings before tax, minus tax, earnings after tax, minus preference dividend, earnings available to equity shareholder. EBIT is given, yes or no? So see the answer. So evaluation of a various financial alternatives, plan A, plan B and what? Plan C. Okay. So if possible we should write a working note for what? Plans. What is the first plan? We should take what? Particulars. In particulars, we should write equity, debt. Okay, and next what? Preference. In debt also, we have to write two debts. One is 8% debt, second one is what? 9% debt. So, working note. So, particulars. And next what? Equity, 8% debt, 9% debt, and 7% preference. Plan A, Plan B, Plan C, Plan D. In Plan A, we take equity 30 lakhs. In Plan B, we take 15 lakhs. In Plan C, we take 10 lakhs. In Plan D, we take 15 lakhs. What about 8% debt? 8% debt we take only for Plan B, 15 lakhs. Are you able to visualize the working note? 9% debt we take only for what? Plan C. How much? 20 lakhs. What about 7% preference? We take only for Plan D, 15 lakhs. And total of everything, 30 lakhs. In all the cases, 30 lakhs. Clear? In all the cases, 30 lakhs. Clear? And if possible, we should prepare a working note for number of shares also. First case, already how many shares are there? 40,000 shares. What is the additional fund we are going to raise? 30 lakhs. What is the face value? At what price we are issuing the share? 100 each. So that means how many new shares we are going to issue? 30,000. So 40,000 plus 30,000, 70,000. But in examination, they might change the issue price. Instead of giving issue price face value 100, they might give what? 200. Then how many shares you are going to issue new shares? 30 lakhs divided by 200. We issue only 15,000 shares. Be careful, okay? In exam, they might give what? Issue price 200. If issue price is 200, I am going to issue how many shares? 15,000, because for every share I receive 200. Whether it is premium or share capital, that doesn't matter. I will receive what? 200. So how many shares I have to issue? 15,000 shares. Clear? Okay. So see the EBIT. EBIT. So what is EBIT? 15 lakhs in all the cases. In all the cases, 15 lakhs. Minus what? Interest. First case, no interest. Second case, 15 lakhs into 8%. 1 lakh 20. Third case, మహేష్ బాబు భలే కూర్చున్నామ్మా, క్యాలిక్యులేట్ ఏం చేయకుండా చక్కగా ఇట్రా, ఇటు వచ్చి క్యాలిక్యులేటర్ తీసుకుని వచ్చి చక్కగా వెనక అనుకొని చేతులు కట్టుకొని చూస్తున్నావు. ఇట్రా. 1,20,000. ఇక్కడ 1,20,000. ఇటు వచ్చి 1,20,000. And next Plan C. Plan C, what is the interest amount? Plan C. So 20 lakhs into 9%, 1,80,000. So you will get earnings before tax. Minus what? Tax. Okay. Tax at the rate of what? 50%. Earnings after tax. Minus what? Preference dividend. So preference dividend only in last case. What is the amount? Preference share capital? 15 lakhs. 15 lakhs into 5%. 7. 5%. మరి 7 అని ఇచ్చాడేంటి? ఓకే, సో క్వశ్చన్ మిస్టేక్. ఓకే, 5%, 75,000. EAS, earnings available to equity shareholders. Earnings available to equity shareholders. And next what? Number of equity shares. Be careful with number of equity shares. Already existing 40,000. New shares 30 lakhs divided by 100. 30,000. Total 70,000. Second case, already existing 40,000. New shares 15,000. 15 lakhs divided by 100. Last case, Okay, I mean, last but one. 20 lakhs divided by what? 20 lakhs, 10 lakhs. So 10 lakhs. 10 lakhs divided by 100, 10,000. Next. Next what? 15 lakhs divided by 100. Clear? But be careful, in examination they might give issue price 200. Okay, and they might add extra point. Okay, if a company is raising entire 30 lakhs by issue of equity, issue price is 200. Issue price is 200. But if the company wants to raise, okay, fund of only 15 lakhs, equity by way of equity only 15 lakhs, then market price is 150. Market price is 150. Are getting my point? So then in that case, what? First case we do what? First case 30 lakhs divided by 200. Second case we should take 15 lakhs divided by what? 150. Are getting my point? So they might give issue price and issue price for different plans. Different issue price for different plans, okay? So be careful. Clear? So earnings per share is equal to EAS divided by number of shares. So financial leverage, degree of financial leverage. How do we get degree of financial leverage? EBIT divided by EBT. So clear? Done? Next one. Question number 3. TCP Limited needs to raise rupees 10 lakhs for the construction of a new plant and provides you the following information. Financing plan. A, 40% equity and balance through 10% debt. They want to raise 10 lakhs. So okay, in the 10 lakhs 40% equity, that means 4 lakhs. What about balance? 6 lakhs through 10% debt. What is the plan B? 30% equity, 60% through 10% debt, balance through 15% preference shares. That means 3 lakhs equity, 6 lakhs debt, 1 lakh preference. 60 lakhs. Equity shares of face value of rupees 10 each. Equity shares of face value of rupees 10 each will be issued at a premium of 110%. Face value of rupees 10 will be issued at a premium of 110%. Flotation cost of rupee 1 per share. 15% preference shares of the face value of rupees 100 each will be issued at a premium of 10%. Flotation cost rupees 10 per share. Expected capital turnover ratio. Expected capital turnover ratio 1. Capital turnover ratio 1. That means if a capital is 1 rupee, sales is equal to 1 rupee. Expected sales to variable cost ratio. Expected sales to variable cost ratio 156.25%. Fixed cost 60,000. Tax rate 25%. Calculate the indifference point between plan A, plan B, and suggest which plan has a more financial risk. Okay, are you able to find this question? So they are asking you to find out the indifference point. So this is the concept which was frequently asked, indifference point. How do we get indifference point? EBIT minus I1 into 1 minus tax rate minus PD1 divided by E1 is equal to EBIT minus I2 into 1 minus T minus PD2 divided by E2. Divided by what? E2. So EBIT minus interest. First case, what is interest? So first case we are raising, okay, 4 lakhs by way of a debt. 4 lakhs or 6 lakhs? So 6 lakhs by way of a debt. 6 lakhs into 10%. 60,000. Okay. So see the working note, capital structure 10 lakhs. In that equity, plan A 4 lakhs, plan B 3 lakhs. Yes or no? 10% is debt 6 lakhs and 6 lakhs. 15% preference 1 lakh. Overall 10 lakhs. Clear? Next, number of equity shares. Number of equity shares. So see the number of equity shares. What is the face value? 10. So this is a special point in this question. What is the face value? 10. It is issued at 110% premium. 110% premium means 21. Flotation cost 1 rupee. Flotation cost 1 rupee. That means ultimately on each equity share we get only 20. We get only 20. On issue of one equity share we get 20. So how many equity shares I am going to issue? 4 lakhs divided by 20. 20,000 equity shares. So this is the special point in this question. This point you have to refer. What is the point? Issued at 110% premium and flotation cost 1 rupee. So that is what I have told in the previous question. They might give what? Issue price instead of what? Face value. Okay. So second case, we are raising 3 lakhs. We are raising what? 3 lakhs. So 3 lakhs divided by 21 minus 1. So 15,000 shares. So what about preference? Preference shares, they will be issued at 10% premium. They will be issued at 10% premium. Flotation cost 10. So that means what? 1 lakh divided by 110 minus 10. We are raising only 1 lakh. That too in plan B. That too in what? Plan B. So 1 lakh divided by what? 200. 1 lakh. 1 lakh divided by face value 100 issued at what? 10% premium, not 110% premium, 10% premium. That means what is the price? Issue price 110 minus flotation cost 10. You will get 1 lakh divided by what? 100. 1000 preference shares. 1000 preference shares. So preference dividend is equal to what? Preference dividend is equal to what? 1 lakh into 15%. Premium 110 unda? Okay, I'm sorry. In scanner, premium is equal to 110%. If it is 110, then take what? 110. Okay, so that's why here it is different. So 1 lakh divided by premium is equal to 110%. In question there was a mistake. Please correct. 110%. So that means tell me what is the issue price? 210. 210 minus 10. So 200. Ultimately we receive 200. So how many shares we are going to issue? 1 lakh divided by 200. 500. So we are going to issue what? How many shares? 500 shares. So first you have to write number of preference shares to be issued. 1 lakh divided by, okay, 210 minus 10. How many preference shares? 500. Next, preference dividend is equal to 500 preference shares into face value 100 into 15%. You will get 7,500. So these two are the special points in this question, okay? So basic questions I am not discussing, indifference point. I have taken advanced question. So all points are covered in this. So clear? Interest calculation. Now point of indifference. EBIT minus interest 60,000 into 1 minus tax rate 0.25 minus 0 divided by what? 20,000. How many equity shares are there? First case 20,000 is equal to EBIT minus interest amount. What is the interest amount? 60,000. So 6 lakhs and again same. EBIT minus 60,000 into 1 minus 0.25 minus 7,500 divided by how many shares? 15,000 equity shares. Clear? So by solving you will get what? EBIT 1 lakh. What is the meaning of this 1 lakh? It is the level of a EBIT at which earnings per share would be same under the given two financial plans. So why we are finding out this 1 lakh? For suppose if our expected EBIT is, if our expected EBIT is less than 1 lakh, I will go for plan 1. Because in plan 1 I have only 60,000 rupees fixed cost. Okay. But whereas in plan 2 I have a 60,000 interest plus 7,500 rupees what? Preference dividend. If my expected EBIT is less than 1 lakh, I will go for what? Plan 1. If it is more than 1 lakh, I will go for what? Plan 2. Clear? Okay. So next. So suggest which plan has a more financial risk. Which plan is having a more financial risk? So plan B is having a more financial risk. Okay, even if you calculate the financial break-even point for plan A, 60,000, minimum level of EBIT required to meet the fixed financial charges, 60,000 only. But for plan B, 60,000 interest plus preference dividend divided by 1 minus tax rate. So 7,500 divided by 1 minus 0.25. So overall 70,000. So 70,000 is the minimum level of EBIT required to meet the fixed financial charges. Which plan is having a more finance risk? Plan B is having a more finance risk. So we should go for which plan? Plan A. We should go for plan A. So that comment you have to write at the end. Plan A is having a less finance risk. So we should go for what? Plan A. And here, if you see the presentation, working note is in between the main answer. That should not be like that, okay? Either you should write what working note in the beginning or at the end. Okay? So I have seen many answer sheets. Students, they are writing what conveniently. That means they are writing working note, main answer, again working note, main answer, working note. You should take what working notes at the beginning or else what at the end. Better you take at the end. First you start with what? Main answer. You don't know the size. For example, leave the gap, extra gap for what? Main answer, and then what? Start with working notes. Okay. And proper headings. Proper headings. You have to take what? Proper heading also. For example, here second part is not mentioned. Second part. First part is what? Calculation of indifference point. What is the second part? So we have to decide which plan to be selected based on the finance risk, yes or no? Okay. So we have to differentiate. If there are two parts, we have to differentiate the two parts. You have to write 1, 2, 3. Likewise, you have to write. Okay. Clear? And next, see the fourth question. Fourth question is also financial break-even point, EPS and indifference point. Simple question. That you can refer. You can refer in the evening. You will understand the same question. Simple question. So in this question, I think special point is between plan A and B, you will get indifference point. Between plan A and C, you will get indifference point. But between plan B and C, you will not get indifference point. Why? Because the reason is plan B is always dominating plan C. Because plan B and plan C, if you see the cost of a debt 8%, cost of preference share is also 8%. That means interest rate 8%, preference share is also preference dividend is also 8%. And if you see the ratio, plan B debt ratio 50%, plan C preference ratio 50%. That means amount is same, rate is also same. Nothing but interest amount is same, preference dividend amount will also be same, yes or no? So what is the fund to be raised? 2 lakhs. In 2 lakhs, 50% debt means 1 lakh. 1 lakh into 8%, 8,000 interest. What about plan C? Out of 2 lakhs, 50% preference. That means 1 lakh preference share capital. So 1 lakh into 8%, 8,000 preference dividend. 8,000 interest, 8,000 preference dividend. Which is the best one? 8,000 interest. Because the reason is, if I pay interest, I can save tax. Equity shareholders will get more earnings because they can save tax on payment of interest. But whereas if they pay preference dividend 8,000 rupees, so preference dividend will be paid after payment of a tax. So that's why always plan B will be dominating plan C. Because in plan B and plan C, cost is same, 8,000 and 8,000. But in plan B, equity shareholders can save tax. So that's why you will not get indifference point between what plan B and plan C. Because always plan B is greater than what? Plan C. Clear? Are you getting my point? Okay. చెప్పింది అర్థమైందా? మీకు అర్థమవుతుందా? ఇప్పుడు ధోనికి పండుకి ఇండిఫరెన్స్ పాయింట్ క్యాలిక్యులేట్ చేసామనుకో, వస్తుందా రాదా? క్రికెట్లో ఒకవేళ ఇండిఫరెన్స్ పాయింట్ వస్తుందా రాదా? రాదు. ఎందుకని? ఎప్పుడు ఎవరు డామినేట్ చేస్తారు? ఎప్పుడు ధోనియే డామినేట్ చేస్తారు. దెర్ ఈజ్ నో పాయింట్ అట్ విచ్ దే బోత్ విల్ బి సేమ్. వాళ్ళిద్దరు సేమ్ అయ్యే ఛాన్సే లేదు. కాబట్టి ఏంటి? ఇండిఫరెన్స్ పాయింట్ ఉందా? లేదు. అలాగే సిఎంఏ కోర్స్ అనుకోండి, అప్పుడు ఎవరు డామినేట్ చేస్తారు? పండు విల్ బి డామినేటింగ్ వాట్? మహేంద్ర సింగ్ ధోని. అసలు నో ఛాన్స్. అసలు పండుతో ఈక్వల్ అయ్యే ఛాన్సే లేదు ధోని, అవునా కదా? ఎందుకంటే చేయడు కదా సిఎంఏ. చేస్తే అయిపోద్దేమో. అంటే మీకు అర్థమవుతుందా? ఇక్కడ ఏంటంటే ప్లాన్ బి ఈజ్ ఆల్వేస్ డామినేటింగ్ వాట్? ప్లాన్ సి. ఓకే, మీకు ఎందుకంటే అక్కడ స్ట్రక్ అయిపోతారు, 0 అని రాస్తారు. See the next question, 5th question. The expected annual net operating income of company is 50,000. Net operating income 50,000. Okay. The company has rupees 2 lakhs. Company has rupees 2 lakhs, 10% debentures. The equity capitalization rate KE is 12.5%. KE is equal to what? 12.5%. Find the value of firm and overall cost of a capital under net income approach. They are asking you to find out the value of firm and also what? Overall cost of a capital. Okay. So these questions are little confusing, okay? Even though you know the concept. So be careful. So they are asking you to find out what? First one, value of a firm. EBIT is given. What is the EBIT? 50,000. Interest is also given. So, okay, what is the interest? 2 lakhs into 10%, 20,000. So whatever the balance, that balance belongs to equity shareholders. So earnings available to equity shareholders, 30,000. Earnings available to equity shareholders, 30,000 rupees. So we know earnings available to equity shareholders and we have a KE. We can find out what? Value of a equity. How can we find out value of equity? Value of equity is equal to EAES divided by KE. EAES divided by KE. 2,40,000. 2 lakh what? 40,000. Clear? So 2,40,000 is the market value of equity. And how can we get value of a firm? Value of firm is equal to value of equity plus value of a debt. Value of equity plus value of a debt. So 2,40,000 plus 2 lakhs. 4,40,000. Clear? Next, overall cost of a capital. Overall cost of a capital. We know the value of firm. We know EBIT. So overall cost of a capital is equal to EBIT divided by value of a firm. So the answer is 11.36. Clear? So net income approach questions. Next, assume no taxes and given the EBIT interest at 10%, equity capitalization rate KE below. Calculate the total market value of each firm under net income approach. Under net income approach, we have to find out what the value of each firm. So EBIT is given, EBIT minus interest. EBIT minus interest, you will get what? EA, ES. First case, 2 lakhs minus 20,000, 1 lakh 80,000. So 1 lakh 80,000 is EA, ES divided by KE, 12%. What is the value of equity? 15 lakhs. 15 lakhs is the value of equity. How can we find out the value of firm? Value of firm is equal to value of equity plus value of a debt. The clue is interest amount is given and interest rate is given. Interest amount is given and also what? Interest rate is given. First case, what is interest amount? 20,000. What is interest rate? 10%. So 20,000 divided by 10%. 2 lakhs. Okay. So 20,000 divided by 10%, you will get 2 lakhs. So already we got value of equity how much? 15 lakhs. So 15 lakhs plus 2 lakhs. 17 lakhs. Am I clear? Done. So likewise we have to find out for the remaining 3. Clear? Next question number 7, December 23. December 23. Company X and company Y are in the same risk class and are identical. Identical means what? Similar in every fashion except the company X uses debt. That means company X is a levered firm while company Y does not. So X is a levered firm and Y is a unlevered firm. The levered firm has 9 lakhs debentures carrying 10% rate of interest. Both the firms earn 20% before interest and taxes on their total assets of rupees 15 lakhs. So you have to read the question properly. The levered firm has 9 lakh debentures carrying 10% rate of interest. Okay. Both the firms earn means nothing but that is what? Return on a investment. Both the firms earn 20% before interest and taxes. That means your return on investment is 20% on their total assets, 15 lakhs. So 15 lakhs into 20%. So 3 lakhs is nothing but what? EBIT, earnings before interest and tax. Assume perfect capital market, number of buyers and number of sellers, rational investors, investors are intelligent, so on. A tax rate of 50%, tax rate 50%, capitalization rate of 15% for all equity company. Compute the value of firm X and Y using net income approach. First step is to find out what? EBIT. So tell me what is the EBIT first case? EBIT is equal to 3 lakhs. So capitalization rate of 15% for all equity company. For all equity company, capitalization rate 15% means what? KE 15%. So first, net income approach assumes no taxes. In net income approach, net operating income approach, we assume what? No tax. Even traditional approach. For all capital structure theories, we assume no taxes. We have learned only one concept with taxes, that is MM approach with taxes. Okay. Net income approach, no taxes. So first EBIT. EBIT. Okay. So what is the EBIT amount? 3 lakhs. Okay. So here see the point, the special point. NI approach assumes what? No taxes, but as the tax rate is given in the problem, we have to work out. Okay, using NI approach, but what we are taking tax as well. But generally, what in income in NI approach, no taxes. EBIT 3 lakhs and 3 lakhs minus what? Interest. First case 9 lakhs debentures into rate of interest 10%. What is the earnings before tax? 2 lakh 10,000 and what? 3 lakhs. 2 lakh 10,000 and what? 3 lakhs. Clear? Less tax at the rate of 50%. So what is the profit after tax? 1 lakh 5,000, 1 lakh 50,000. Cost of equity KE 15% and 15%. Net income approach. Net income approach means first approach. In first approach what? We take same KE in both the cases. So KE of a all equity company is given. What is the KE of all equity company? 15. So we take the same KE for levered firm also. So capitalized value of equity 1 lakh 5,000 divided by 15%, 7 lakhs. We know the market value for debt 10 lakhs or 9 lakhs? 9 lakhs. So market value of a firm is equal to 16 lakhs and second case 10 lakhs. Okay. Next, computation of value of firm X and Y using NOI approach. So this question is completely what? Okay, based on the tax rate. Actually, conceptually it is not correct. The concept what we have learned is different. We assume in NI approach and NOI approach there are no taxes. So this question you have to remember. So NOI approach. So company Y is an unlevered firm, yes or no? So EBIT into 1 minus tax rate divided by KE. So you will get what? 10 lakhs. You will get what? 10 lakhs. Value of unlevered firm. Same. What about levered firm? The name is NOI approach, but they are following what? Approach with taxes. Approach with taxes. Okay. So you have to be careful. Value of levered firm is equal to value of unlevered firm plus debt into tax rate. Actually, this is not correct. This is the proposition given by Okay. So what is the value? 10 lakhs plus debt into tax rate. What is the debt? 9 lakhs into 50%. 14 lakh 50,000. So computation of overall cost of a capital. Computation of overall cost of a capital using NOI approach. Okay. So net operating income approach, overall cost of capital. What is the value of firm? 14 lakh 50. 14 lakh 50. What is the value of debt? 9 lakhs. That means market value of equity is equal to 5 lakh 50,000. KE is equal to, what is KE? KE is equal to equity earnings divided by market value of equity. Equity earnings we calculated in first part. First or second part? First part itself. Equity earnings is equal to what? 1 lakh 5,000. For company X, equity earnings is equal to 5,000. 1 lakh 5,000. So cost of equity K is equal to equity earnings divided by market value of equity. 19%. What about cost of debt? KD is equal to 10 into 1 minus tax rate, 5%. Now we do weighted average. 19% into 5 lakh 50 divided by 14 lakh 50 plus 5% into 9 lakhs divided by 14 lakh 50, 10.31%. So this question you have to be careful, because the reason is, okay, so they are considering tax rates in capital structure theories, but whereas in capital structure theories, the assumption is what? There are no taxes. And that too for NOI approach, they are using what? Okay. So which firm is having a optimum capital structure? So okay, so firm Y seems to have a optimum capital structure. So the reason given is what? It is having a lower cost of a capital and higher value of a firm. The value of levered firm is greater than value of a unlevered firm here. So that's why what? Out of two firms, which firm is having optimum capital structure? Optimum means best capital structure. The capital structure where the value of firm is high. Okay. Company Y. Sorry, X Y. First is X Y. Company X. Out of two firms, company X seems to have a optimum capital structure as it has a lower cost of a capital and higher value of a firm. Company X. Scanner lechudu. Clear? Next question, determine the optimum capital structure of a company. This question is for traditional approach. This question is for what? Traditional approach. Traditional approach. So what is the traditional approach? With the increase in debt proportion, the overall cost of a capital. With the increase in debt proportion, the overall cost of capital decreases, value of firm increases up to a certain point. Beyond that, the reverse trend emerges. Reverse trend emerges. So options 1 to 7, KD, KE, percentage of debt on total value. Percentage of debt on total value. So first case, tell me what is the KO? What is the optimal capital structure? Optimal capital structure means a capital structure where the cost of a capital is minimum and the value of firm is maximum. First case, what is the cost of a capital? Debt proportion 0. Debt proportion 0 means, are you getting my point? KO of all equity company is equal to KE. KO of all equity company is equal to KE. So 13%. We take what? 13. Second case, 0.1 into 11 plus 0.1 into 11 plus 0.9 into 13. 12.8. అవునా కదా? Next 0.2 into 11.6 plus 14 into 0.8. 13.52. ఓకే, అలా చేసే కొద్దీ చేయాలనిపిస్తుంది, చేయకండి చాలు. ఇంకా ఎందుకంటే తెలుసు కదా మీకు ఎలా చేయాలో, చాలు. ఎందుకంటే మనకి ఈజీగా ఉన్న క్వశ్చన్స్ చేయాలనిపిస్తుంది. కొంచెం కాంప్లికేట్ అనిపించిన క్వశ్చన్లు ఏంటంటే చేయబుద్ది కాదు. అవేమో రెఫర్ చేస్తారు, అంటే రివర్స్లో చేస్తారు అన్నీ. అర్థమైందా? సో టెల్ మీ వాట్ ఈస్ ఆప్టిమమ్ క్యాపిటల్ స్ట్రక్చర్? 80%. Sorry, what is the optimum capital structure? 10% debt, 90% equity. 10% debt, 90% equity. 10% debt, 90% equity is the optimal capital structure. Clear? అయిపోయింది. ఆవలింత వైష్ణవి. 12.8. Clear? Next, see the 9th one. Approach, December 18th question. Next question. From the following data, find out the value of each firm and value of each equity share as per the approach. EBIT 13 lakhs, 13 lakhs and 13 lakhs in all the cases. Number of shares 3, 2 lakh 50, 2 lakhs. 12% debentures. Nil 9 lakhs and 10 lakhs. Every firm expect 12% return on a investment. Every firm expects a 12% return on a investment. Nothing but it is KO. Expects a return on a investment. Every firm expects a 12% return on a investment. So KO is equal to 12%. EBIT is given, we know KO. We can find out value of firm. Value of firm is equal to EBIT divided by KO. We got the amount, right? From this we should reduce what? Debt. From this value we should reduce what? Debt. First case nil, second case 9 lakhs, third case 10 lakhs. So this is the value of equity and then divided by what? Number of equity shares. You will get market price per share. Market price per share, okay? Clear? Next question number 10. EBIT is given, 12% debentures are given, equity capitalization rate is given. Determine the total market value and KE of each company assuming no taxes as per approach. As per approach, they are asking you to find out what? Total market value. So company Y is simple. EBIT is already given. EBIT is already given, yes or no? So 18 lakhs divided by what? 18%. 18 lakhs divided by 18%. 1 crore. Clear? Total market value 1 crore. Am I correct? Okay. So what about company X? For company X also. For company X, see the company X. EBIT 18 lakhs minus interest. What is the interest amount? 6 lakh 48,000. Earnings before tax or earnings available to equity shareholders. There are no taxes. So what are the earnings available to equity shareholders? 11 lakh 52,000. Okay. So here the point you have to understand is 1 crore is the value of a unlevered firm. 18 lakhs divided by 18%. 1 crore. As per approach, value of a unlevered firm is equal to value of a levered firm. So here it is like working back. 1 crore is the value of a company Y, unlevered firm. That means value of a levered firm is equal to what? Value of a levered firm is also equal to what? Value of a levered firm is equal to 1 crore. We know the value of debt. We know the value of debt. What is the value of a debt amount? 54 lakhs. So that means value of equity is equal to what? Value of equity is equal to what? 46 lakhs. So be careful here. Up to 11 lakh 52. So we came normally only from the top to bottom. EBIT minus interest, EBT. Earnings available to equity shareholders is equal to 11 lakh 52,000. Okay. But what about this 1 crore and everything working back from bottom to top? We are going from bottom to top. We know the value of unlevered firm, that is 1 crore. So value of levered firm is also equal to what? 1 crore. Okay. So 1 crore, we know the value of debt 54 lakhs. That means the balancing value of equity. So what is the value of equity? 46 lakhs. Clear? So what is cost of equity KE? KE is equal to, how can we get KE? Earnings available to equity shareholders divided by Divide by what? Value of a equity. Clear? Now, second one is important. Determine the total market value and KE of each company, assuming what? 40% tax as per the approach. 40% tax means, okay, so in this case, value of a levered firm is equal to what? Value of a unlevered firm plus what? Debt into tax rate. First come to unlevered firm. Unlevered firm 18 lakhs minus interest 0, earnings before tax 18 lakhs minus tax at the rate of 40%. Earnings available to equity shareholders 10 lakh 80,000 divided by what? 18%. Divided by 18%. 60 lakhs. So this is the value of an unlevered firm. So this is simple. Okay. So top to bottom. 18 lakhs minus interest 0 minus tax. Earnings available to equity shareholders divided by what? 18%. Okay. Now let us come to what? Market value of a levered firm. How do we get market value of a levered firm? Market value of a levered firm is equal to unlevered firm value 60,000 plus debt 54 lakhs into tax rate 40%. Clear? Clear? So now EBIT, what is EBIT? 18 lakhs, levered firm EBIT. Minus what? Interest. What is the interest amount? 54 lakhs into 12%. 6 lakh 48. EBT, earnings before tax. Minus what? Tax at the rate of 40%. Earnings available to equity shareholders. We know the earnings available to equity shareholders. How can we find out KE? Earnings available to equity shareholders divided by equity. Divided by value of a equity. How can we get value of equity? We know the value of firm. 81 lakh 60,000 minus debt 54 lakhs. So 27 lakh 60,000 is the value of a 27 lakh 60,000 is nothing but what? Value of a equity. Clear? Done. So what is the answer here? Cost of equity K is equal to earnings available to equity shareholders divided by value of a equity. So the answer is 25.04%. Done. Clear? So this is model with taxes. Without taxes and with taxes. So in overall financial management, this chapter questions are little confusing, okay? So while explaining, okay, you might feel like, okay, but later on when you try, you will get lot of doubts. And in this, especially one question is completely what? So the answer is completely what? Deviating from the concepts. Question number 7. Question number 7, huh? It is deviating from the concepts, okay? That you have to by heart, that's it. Because that is deviating from the concept. Even though that is NOI approach, we calculated value as per what? approach. Modi-Gilani-Miller approach. Clear? So you have to practice, you have to go through these questions only. Done? So capital structure. So we have covered all the concepts. So refer illustration number 8 in BCA workbook, page number 4.7, capital structure theories. Okay. So with this we have completed what? Capital structure. Okay. So 2 questions we are, remaining 5A, 5B, 6A, 6B. Next concept, working capital management. Working capital management. What is the weightage of this topic? 14 marks, 7 marks, 6A and 6B. 6A and next what? 6B. So in this chapter working capital management, we have a 4 topics: estimation of working capital management, debtors management, cash management, inventory management. Of course, we have a creditors management also, creditors management, but that is okay. They will not ask any question from creditors management. Small topic. Okay, they might ask for 2 marks. That's it, MCQ. Okay, so there are 4 parts. In this working capital estimate, this is a new concept you have to learn. Okay, debtors management. So this is also a new concept. Cash management. In cash management, we are going to learn optimum cash balance, how to determine the optimum cash balance, Baumol model, that is similar to EOQ, economic order quantity. So this EOQ concept you have already learnt in cost accounting, Baumol model. Okay, and next, cash budget. Cash budget, I think you have learnt in first group cost accounting and second group management accounting. Next, inventory management. Inventory management is completely what? EOQ, economic order quantity. So they are asking questions from what? Cost accounting. From cost accounting, they are asking questions in FM, inventory management. Of course, inventory management is a part of FM, financial management. So working capital is nothing but what? Current assets minus current liabilities, net current assets. Net current assets. So why we are discussing working capital management in FM? So we know that 2 aspects of FM are procurement of fund, effective utilization of fund. So we utilize the fund for 2 purposes: fixed assets and current assets. Fixed assets and current assets, working capital. Yes or no? So we utilize the funds for 2 purposes, that is fixed assets and working capital. So how effectively we utilize the fund for working capital, that we are going to discuss in working capital management. Working capital management. Clear? So working capital management, first step is to estimation of a working capital. So why we should estimate working capital? To procure money, first we should determine what estimate, we should determine what fund requirement, how much fund we require. In the beginning we discussed, first step in business is what? Estimation of a investment. We should know what is our investment and where we are going to invest this. And next step is what? Deciding from what source we need to procure money. Antena kada? So to determine investment, we have to determine the investment. To apply a loan or to go for issue, equity issue, you are going to issue a prospectus. In prospectus, you have to mention what? In prospectus, you have to mention what? Number of shares to be issued, issue price, and the purpose of raising the fund. So if you are raising fund from equity or a debt, you have to mention for what purpose you are raising the fund and where you are going to utilize the fund. Okay, so to raise the fund, first we should determine what fund requirement. So that's why in our syllabus we have a estimation of a working capital. Estimation of working capital. Okay, so estimation of a working capital. First of all, working capital is equal to what? Current assets minus current liabilities. In current assets, first we will be having what? Stock. In stock we have raw material, work in progress, and finished goods. Raw material stock, work in progress, and what? Finished goods. Okay, clear? So whether we have to maintain a stock or not? Yes, we have to maintain stock. Okay, so in India, so even though there is a concept called just in time means what? Just in time means, for suppose we require material, we order now and we receive material immediately. We receive material what? Immediately. So that is called as what? Just in time. Just in time. But generally what happens is what? Okay. So just in time will not work out. Just in time will not work out. For suppose if we do not have a stock, what is the, negative point? If there is no stock, we are going to lose our reputation. So we might face a stock out situation. Stock out situation. Stock out situation means what? Customer will be coming to our business and he might ask for a good, but we are not in a position to what? Supply the good. So we are going to lose a contribution. We are going to lose a contribution. For example, you are going to a DMart and you wanted to buy what? Reynolds pen, but Reynolds pen is not there in DMart. So what happens? DMart is losing contribution on that Reynolds pen. At the same time, what? It is going to lose reputation. It lose what? Reputation. So that's why DMart has to maintain what? Stock. DMart has to maintain what? Stock. Okay. So likewise, but if you are maintaining a huge stock, then what happens? Your carrying cost will increase. Investment in stock will increase. Yes or no? If your investment is increasing, then how this investment is procured? Investment is procured from equity or a debt. So there is cost of equity and there is cost of a debt. Yes or no? So that's why we have to make a careful estimation of a working capital. Every business will be investing in a working capital. Working capital is different from the capital budgeting. If you are constructing a building for your business, that is a capital budgeting decision. If you are starting a new branch, new plant and manufacturing unit, that is what? A capital budgeting decision. Okay. But if you are starting a new manufacturing unit, in that new manufacturing unit, you have to what? Maintain some working capital also. You have to maintain some stock. That stock is called as what? Okay, working capital investment. Are getting my point? Every business will invest in what? Working capital. Okay. So if you enter into DMart, whatever the structure you see, that is a capital investment. But whatever the stock you find inside the DMart, it is a investment in working capital. Investment in what? Working capital. In that working capital also there are two types of working capital. One is permanent working capital, second is temporary working capital. So the chocolates you are finding at the billing counter, these are permanent working capital. These are permanent working capital. Throughout the year, throughout the business period, these chocolates are held in stock. Throughout the business. Okay. But if you are going to DMart during the Rakhi festival, then you will be finding what? Rakhi is there in DMart. Yes or no? So that Rakhi is an example for what? Temporary working capital. So rice, okay, brown rice, white rice, oat, something. So these are all what? Permanent working capital, because consumers will buy these goods throughout the year. Okay. So why this is very important? Because permanent working capital means we invest at the time of starting a business, and we take back our capital. We take back the capital at the end of the business. When we close the business, then only we take back the investment. Until then, our investments will get locked there. Okay. So that's why if you see the investment decisions, capital bursting, in next session we are going to discuss capital bursting. In capital bursting decisions, we consider working capital as an outflow in the beginning and inflow at the end. Inflow at the end of the life of a project. Why inflow at the end of the life of the project? Because when you close the business, for example, DMart is going to close in Nujvidu, then what happens? They will take back the investment made in what? Working capital. They will sell these chocolates. What are the stock left? They will be selling it. But again, they will not fill. I mean, yes or no? So they will take back the investment. So you might be feeling like, what, sir? If there are chocolates in DMart, so that is a purchase, and they will be selling immediately. Then why you are considering it as an investment? No doubt. So they are purchasing chocolates and they are selling. But at any point of time, you will find there a bunch of chocolates. Yes or no? At any time, even though they are selling, immediately what? The next stock will come. At any point of time, there is a bunch of chocolates in DMart that is called as a working capital investment. జనరల్గా మీకు కన్ఫ్యూజన్ ఉంటుంది, సార్ కొంటున్నావు అమ్ముతున్నావు దానిలో ఇన్వెస్ట్మెంట్ ఏముంది సార్ అని. నువ్వు కొంటున్నావు అమ్ముతున్నావు కరెక్టే, కానీ నువ్వు ఎప్పుడు వెళ్ళినా అక్కడ ఏం కనిపిస్తున్నాయి? చాక్లెట్స్ కనిపిస్తున్నాయి. నువ్వు అమ్మినా మళ్ళీ అదే ప్లేస్లోకి వెంటనే ఏమవుతుంది? స్టాక్ వచ్చేస్తుంది. నువ్వు స్వీట్ షాప్కి వెళ్ళావు అనుకో, స్వీట్ షాప్కి వెళ్ళినా ఎప్పుడు స్వీట్స్ కనిపిస్తుంటాయి. బేకరీకి వెళ్తే ఎప్పుడు అక్కడ చిప్స్ ప్యాకెట్ కనిపిస్తూ ఉంటుంది, ఎగ్ పఫ్స్ కనిపిస్తుంటాయి. దట్ ఈజ్ ఇన్వెస్ట్మెంట్ ఇన్ వాట్? వర్కింగ్ క్యాపిటల్. అలాగే నువ్వు క్యాంటీన్కి వెళ్తే అక్కడ ఎప్పుడు కూడా ఏంటి, ఏదో ఒక స్నాక్స్ ఉంటాయి. సో దట్ ఈజ్ ఇన్వెస్ట్మెంట్ ఇన్ వాట్? వర్కింగ్ క్యాపిటల్. ఓకే, సో హౌ దిస్ estimation is done? What is working capital? Working capital includes what? Current assets and current liabilities. Okay, so permanent working capital, temporary working capital. So permanent working capital means we invest today, we take back at the end of the project. Temporary working capital, we invest before Rakhi and take back after Rakhi. So okay, we invest before Diwali and take back after Diwali. We invest before New Year and take back after New Year. Okay, so in finance there is a fundamental rule. The rule is the short term need must be met from short term source. Long term need must be met from long term source. If it is a permanent working capital, go for a debenture issue. If it is a permanent working capital, because that is a long term need. If you are investing as on today, you will take back after 15 years or 20 years. You should go for what? Long term source. Either go for equity issue or a debentures. But if it is a temporary working capital, you should go for what? Short term source. అర్థమవుతుందా? ఫర్ ఎగ్జాంపుల్, దీవాళికి ఏదో మన పండు క్రాకర్ షాప్ పెట్టుకుందాం అనుకున్నాడు మన క్యాంపస్ ముందు 4 రోజులు. అదేంటి, టెంపరీనా పర్మనెంటా? టెంపరీ. దానికి మనోడు ఒక కంపెనీ ఇన్కార్పొరేట్ చేసి ఈక్విటీ షేర్ క్యాపిటల్ ఇష్యూ చేశాడు. తలకే ఉన్నాడు, ఎవడని చేస్తాడా చేయడు కదా. ఎందుకని? 4 రోజుల బిజినెస్కి ఎవడని ఏం చేస్తాడు? చేయబోతులు అంటారు తెలుగులో. దే విల్ బి టేకింగ్ లోన్ ఫర్ వాట్? 4 or 5 days హ్యాండ్ లోన్. సో వీ విల్ నాట్ బి గోయింగ్ ఫర్ ఈక్విటీ ఇష్యూ. ఎస్ ఆర్ నో? ఓకే, likewise, for example, if it is a permanent working capital, okay, he wanted to start a పండు మార్ట్ స్టార్ట్ చేద్దాం అనుకున్నాడు. స్టార్ట్ చేద్దాం అనుకొని అదే లెవెల్లో స్టార్ట్ చేశాడు. ఓకే, సో హీ వాంటెడ్ టు స్టార్ట్ అ మార్ట్. బట్ ఆ మార్ట్కి మరి ఏం చేశాడు? సో త్రిష దగ్గర లేకపోతే స్నేహ దగ్గర వీళ్ళ దగ్గర డబ్బులు ఇవ్వండి, ఇచ్చేస్తాను 4 రోజులు అని చెప్పి తీసుకున్నాడు. So if he is going to start a PMart, it is a long term need or a short term need? Long term need అన్నప్పుడు నెక్స్ట్ మంత్లో ఇచ్చేస్తానని చెప్పి డబ్బులు తీసుకుంటే అర్థమవుతుందా? ఏం చేస్తారు ఇప్పుడు? PMart స్టార్ట్ అయింది, ఇంకా అసలు రెవెన్యూ జనరేషన్ స్టార్ట్ అవ్వలేదు. ఈ స్నేహ లేదా త్రిష వీళ్ళంతా వెళ్ళిపోయి ఏం చేస్తారు? PMart ముందు కూర్చుంటారు, అవునా కదా? లేదా అక్కడ ఉన్న రైస్ బ్యాగ్లు అన్నీ తీసుకెళ్ళిపోతారు, డబ్బులు ఇస్తావా తీసుకెళ్ళవా అని చెప్పి. అంతేనే కాదా? Is it correct or not? No. If it is a long term need, you should go for what? Long term source. Okay, if you are going for short term source, what happens? Liquidity problem. liquidity problem. You will not be able to meet the short term commitments. Short term need ఉన్నప్పుడు ఏం చేయాలి? You should go for short term source. If you are going for long term source, unnecessarily you have to pay what? Interest. Clear? So that is the rule. And next, working capital estimation. Working capital estimation. So for that, first you have to get an idea about what is current asset. What is current assets? In current stock, first stock. In stock there can be three types of stocks: raw material, working progress, finished goods. Raw material, working progress, and what? Finished goods. And next, what can be the other current asset? Cash. So stock, raw material, working progress, and what? Finished goods. Next, what? Debtors. Next, what? Cash. And next, prepaid expenses. Very good, Amma. Prepaid expenses. Next, income tax advance. There can be what? Advance tax. Advance tax. Okay. So generally, frequently, okay. So there can be what? Current assets, stock, and debtors, cash. Okay, cash. We have to invest in cash also. We have to maintain some amount of a cash. So we have to maintain a cash or not? We have to maintain cash or not? For example, Kavya's birthday, next day, tomorrow. Tomorrow Kavya's birthday, okay. And Pandu is asking for party. Okay, Pandu is asking for party. But Kavya ఏంటమ్మా డబ్బులు ఎక్కడ ఉన్నాయి పండు ఉంది. Okay, now so Kavya will lose reputation or not? Kavya, she will be losing reputation or not? Yes, she will lose reputation. Why? రెప్యుటేషన్ పోతుందా పోదా? పోతుందా పోదా? ఏమంటారు మామూలుగా ఫ్రెండ్స్ అందరు కూడా? పార్టీ లేదా పుష్ప అంటారు ఒకటి. రెండోది ఏంటి, మొత్తం పండు మొత్తం అందరికీ చెప్పేస్తాడు కదా, అన్ని క్యాంపస్లకి, ఐ మీన్ అన్ని క్లాసులకి వెళ్ళి, వేస్ట్ అమ్మాయి కావ్య పార్టీ ఇవ్వదు, డబ్బులు ఉండవు. అంతేనా కాదా? సో ఇఫ్ దెర్ ఈజ్ నో క్యాష్, దట్ మైట్ వాట్ ఎఫెక్ట్ ఆర్ రెప్యుటేషన్. రెప్యుటేషన్ ఎఫెక్ట్ అవుతుంది. అంతేనే కదా? ఎఫెక్ట్ అవుతుందా లేదా? ఫర్ ఎగ్జాంపుల్, ఓకే, సో చైతన్య హీ వాంటెడ్ టు గో, ఓకే, కర్ణాటక ఇమీడియట్లీ. He wanted to go Karnataka, okay. So now itself he wanted to go Bengaluru, okay. He want money. Sir, please give 500 rupees. He asked me. For suppose if I cannot give 500 rupees, then what happens? What happens? I will be losing a reputation, yes or no? So ఇతను ఏం చెప్తాడు, సిఏ అయ్యండి 500 రూపీస్ కూడా లేవు అంటాడా లేదా? ఓకే, దీనివల్ల రెప్యుటేషన్ ఏమవుతుంది? ఎఫెక్ట్ అవుతుంది. సో దట్స్ వై హియర్ ద పాయింట్ ఈజ్ వీ హ్యావ్ టు మెయింటైన్ క్యాష్. యూ హ్యావ్ టు మెయింటైన్ క్యాష్, ఐ హ్యావ్ టు మెయింటైన్ క్యాష్. అర్థమవుతుందా? ఓకే, సో వీ హ్యావ్ టు మెయింటైన్ క్యాష్ అట్ ద సేమ్ టైమ్. ఓకే, గర్ల్స్ దే ఆల్సో హ్యావ్ టు మెయింటైన్ క్యాష్. Organization has to maintain cash. Organization has to maintain cash. Not just the cash, stock has to be maintained, debtors. Okay, what is this debtors? We have to invest in debtors also. We have to invest in debtors. డెటాస్లో ఇన్వెస్ట్మెంట్ చేయాలి లేదా? వీ హ్యావ్ టు ఇన్వెస్ట్ ఇన్ డెటాస్ ఆర్ నాట్? ఓకే, సో వీ హ్యావ్ టు ఇన్వెస్ట్ ఇన్ డెటాస్. సో హౌ టు ఎస్టిమేట్ this stock, datas and cash? Okay, so that we are going to discuss now. And next we have to estimate current liabilities as well. Current liabilities as well, we are investing in datas. Likewise, what our supplier will be investing on us, yes or no? So that's why we have to find out what creditors, we have to find out what creditors. Clear? Okay, so I will explain this concept with question number 1. See the question number 1. Question number 1. మణికంఠ ఏంటి నవ్వుతున్నావు? Question number 1. శంకర్ బాయ్, ఈ ఫేస్లో నవ్వు చూశాను. ఎప్పుడు సెటిల్మెంట్ చేసేవాళ్ళ సీరియస్గా ఉండేవాడు. A and B Limited is desired to purchase a business and has consulted you, and one point on which you are asked to advise them is the average amount of working capital which will be required in the first year's working. ఓకే, నువ్వు పెద్ద తురుము కానీ నీ దగ్గరికి వచ్చాడు ఎవరు? A and B Limited is desired to purchase a business and has consulted you. సో ఎవరో బిజినెస్ పర్చేస్ చేద్దాం అనుకుంటే దే హ్యావ్ కన్సల్టెడ్ యూ అండ్ దే ఆర్ ఆస్కింగ్ యూ టు advise them on average amount of working capital required. You are given the following estimates and instructed to add 12% to your computed figure to allow for contingencies. Okay, so after estimating we have to add 12% to allow for contingency. Contingency means uncertain. Contingency means what? Uncertain. Clear? Particulars amount for the year. Average amount blocked up for stock of finished product. Amount is already given, so we have to find out actually, but it is already given. Stock of a finished product. Stock of a stores and material 7,000. Average credit given. Inland sales, if we are selling in India, so what is the credit? 6 weeks credit. So what is the sale amount? 3,12,000 is the sale amount. Export sales 1.5 week credit. Average time lag in payment of wages and other outgoings. Average time lag means delay in payment of wages and other outgoings. What is the delay in payment of wages? 1.5. Stock and materials 1.5. Lag in payment of wages and other outgoings means nothing but payment to suppliers on stock and materials 1.5 months. Royalty and rent and royalty 6 months. Clerical staff half month. Manager half month. Miscellaneous expense 1.5 month. Payment in advance. Sundry expense is 8,000 paid quarterly in an advance. Undrawn profits of an average throughout the year 10,000. Undrawn profits on an average throughout the year 10,000. Statement to determine net working capital for AB Limited. Statement to determine what? Net working capital for AB Limited. So you have to determine the working capital. So first current assets. In current assets, first stock of finished product given or not? Stock of finished product is given, yes or no? What is the amount? Very good, Amma girls. Stock of stores and materials 7,000. It is given. Next, debtors. Average credit given. What is the credit given? 6 weeks credit. So 3,12,000. Okay. So first of all, how can we find out this debtors? 3,12,000 into 6 divided by 52 weeks. 6 divided by 52 weeks. What is the logic? First, let us discuss the logic. First, suppose per annum sales. For suppose per annum sales. In a year, we are selling 3,65,000. I am taking a round figure. We are selling 3,65,000. How many days? In a year, 365 days. Tell me the sales per day. 1,000 is the sales per day. For suppose if I am giving 1 day credit. Okay. Kavi ఏమైంది పాపం నవ్వుతున్నావు? ఏం చేశాడు మహేష్? Okay, so what is the 1 day sale, 1 day credit sale? 1,000 rupees. 1 day credit sale, 1,000 rupees. And what is the credit period? 1 day is the credit period. 1 day is the credit period. Okay, so Shankar bhai, we are selling 1,000 rupees per day. 1 day credit period. Collection eppudu vastadi? We are going to collect 1 day later, yes or no? For suppose if I sell today, I will receive this money tomorrow. For suppose if I prepare a balance sheet as on today, so debtors will be, what is the outstanding sales amount? Outstanding sales amount 1,000. For suppose if I prepare a balance sheet tomorrow, okay, so tomorrow sale will be received day after tomorrow. If I prepare a balance sheet tomorrow, then also my outstanding sales will be what? 1,000. Debtors will be what? 1,000. Okay, Upendra. So the point is what? So that 1,000 you will not be receiving unless you close the business. A 1,000 ఎప్పటికి రాదు. ఎప్పుడు వస్తుంది 1,000? బిజినెస్ క్లోజ్ చేస్తే వస్తుంది, అదర్వైజ్ రాదు. ఓకే, అర్థమైందా? సో ఆ 1,000ని మనం ఏమంటాం? ఇన్వెస్ట్మెంట్ ఇన్ డెటాస్. ఇఫ్ అ క్రెడిట్ పీరియడ్ ఈజ్ 1 day, దట్ మీన్స్ వాట్? యు ఆర్ ఇన్వెస్టింగ్ ఇన్ 1 day సేల్స్. ఇఫ్ క్రెడిట్ పీరియడ్ ఈజ్ 2 days, యు ఆర్ ఇన్వెస్టింగ్ ఇన్ 2 days సేల్స్. If a credit period is 6 weeks, that means what? You are investing in 6 weeks sales. 6 weeks sales. So that's why our calculation is what? Debtors calculation is what? 3,12,000 into 6 divided by 52. 6 divided by what? 52. So what is the number? 36,000. And next, export sales. What is export sales? Export sales 78,000 into 1.5 divided by 52. 2,250. Clear? Okay. Next, average time lag in payment of wages. Time lag in payment of wages means, is it a current asset or a current liability? Current liability. It is not a current asset. It is what? Current liability. Be careful. కొంతమంది ఏంటి ఫ్లోలో ఏం చేస్తారు? కరెంట్ అసెట్స్లో రాస్తారు, రాసి బయటకు వచ్చి కాల్ దగ్గర రాస్తారు 70 వస్తాయి అని. రావుగా. సో యావరేజ్ టైమ్ లాగ్ ఇన్ పేమెంట్ ఆఫ్ వేజెస్ అండ్ అదర్ అవుట్ గోయింగ్స్, కరెంట్ లయబిలిటీ. ఫస్ట్ వన్, వేజెస్. వాట్ ఈస్ ద వేజెస్ అమౌంట్? 2,60,000. సో వాట్ ఈస్ ద లాగ్? Lag in payment of wages 1.5 weeks. Mahesh Babu? Uh, 2,60,000 into 1.5 divided by 52. 7,500. Stock and material. Stock and material means nothing but creditors. Payment for creditors. So you should not write stock and materials in current liabilities. You should write what? Creditors. Wages payable Okay, and next what? Creditors. What is the creditors calculation? 52,000 into 1.5 divided by 52. Sorry, 12. Thank you so much. 52,000 into 1.5 divided by 12. What is the amount? 6,500. Rent and royalties. Rent and royalties. Rent payable 12,000 into 6 divided by 12. Clerical staff salary payable 62,400 into 0.5 divided by 12. What is the amount? 2,600. 4,800 into 0.5 divided by 12. 200. Miscellaneous expenses 52,000 into 1.5 divided by 12. Okay, clear? Next, payment in advance. Payment in advance means current asset or a current liability? Current asset. So prepaid expense. As Manisha told, prepaid expense, sundry expense. What is the answer? 8,000 into 1 by 4. Paid quarterly in an advance. Paid quarterly in an advance. So 8,000 into 1 by 4. 2,000. So very good, Amma. So here the special point is undrawn profits on an average throughout the year. What is undrawn profits? 10,000. That we have to ignore. Consider or not? Not considered. Clear? How do we get net working capital? Current assets minus current liabilities. And we should add contingency. What is the contingency amount? 12%. So the amount required is 26,824. Clear? Done? So first you should take a heading statement of a working capital, and next what? Particulars, amount, and then what? Current assets. A, current assets. We should take A, current assets. In current assets, one by one. And next what? B, current liabilities. And next what? C, working capital. A minus B. And then what? Add contingency. Then write what? Net working capital. Clear? See the next one. Question number 2. Question number 2. O Limited provides you with the following information: estimated level of activity, completed units of production 1,04,000 plus units of a WIP. Estimated level of units, completed units of production 1,04,000. Raw material 19.6% of selling price. Raw material price is not given. 19.6% of selling price. Selling price is given. Wages 10.6% of a selling price. Production overhead including depreciation of rupees 15 per unit at the budgeted level of activity 17.6% of the selling price. Selling price rupees 500 per unit. Average raw material in stock 3 weeks. Average working progress. Average working progress. Percentage of a completion with respect to material 75%. Conversion cost. Conversion cost means labor plus overhead. Conversion cost means what? Labor plus overhead. 2 weeks. Finished goods in stock 4 weeks. Credit allowed to debtors 2.5. Credit allowed by creditors 3.5. Time lag in payment of labor. Time lag in payment of production overhead. Cash sales and cash purchases. Provision for contingency is required at the rate of 4% of the working capital requirement, including that provision. The company believes in keeping. See that point. Provision for contingency is required at the rate of 4%. Provision for contingency 4% of the working capital requirement, including that provision. Including that provision. So excluding that provision will be what? That is equal to what? Are you getting my point? Including that provision, so including that provision will be 100. Including that provision will be what? 100. What about the provision 4? Excluding provision will be what? 96. 96. Advainda. The company believes in keeping rupees 3 lakhs available to it, including the overdraft limit of 75,000 not yet utilized by the company. Again, this is the point. Overdraft is there, but not yet utilized. So we have not yet utilized. Okay. So there is overdraft. They wanted to keep 3 lakhs cash, including overdraft, but overdraft is not yet utilized. So that means we should take only what? 2,25,000. If required, we use what? Overdraft. We get cash, and on liability side we get overdraft. Yes or no? Assume that production is carried on evenly throughout the year, 52 weeks, and wages and overheads accrue similarly. You are required to calculate the net working capital requirement on cash cost basis. What is this cash cost basis? So generally we estimate a working capital on a cash cost basis. Cash cost, because that too in case of debtors especially. Debtors, in previous question debtors are valued at sales. We followed total approach. In previous question we followed total approach. What is this total approach? Total approach means we take selling price for debtors. Selling price for debtors. But in reality, profit is not our investment, yes or no? Profit is not our investment. For example, per day sales 1,000, but the cost of a good is 800 rupees. Cost of a good is 800. What is our investment in debtors? 800 is the investment in debtors, not 1,000. Because 200 is what? Profit. Ante kada? నేను 800 రూపీస్ వర్త్ గూడ్ని ఎంతకి సేల్ చేశాను? 1000కి సేల్ చేశాను. 1 డే క్రెడిట్ పీరియడ్ ఇచ్చాను. 1 డే క్రెడిట్ పీరియడ్ ఇస్తే నా ఇన్వెస్ట్మెంట్ ఎంత అయినట్టు అక్కడ? 800. Extra 200 is my profit. Okay. So now the point is 800 is my investment. So reality 800 investment, 1000 కాదు. ఓకే. సో ఈ 800 తీసుకుంటేనేమో క్యాష్ కాస్ట్ అప్రోచ్ అవుతుంది. 1000 తీసుకుంటే ఏంటి? టోటల్ అప్రోచ్. ఇఫ్ యూఆర్ టేకింగ్ 800 రూపీస్ దట్ ఈస్ వాట్? క్యాష్ కాస్ట్ అప్రోచ్. బట్ ఇఫ్ యూఆర్ టేకింగ్ 1000 దట్ ఈస్ వాట్? టోటల్ అప్రోచ్. ఇన్ ప్రీవియస్ క్వశ్చన్ వీ ఆర్ టేకెన్ వాట్? ఇన్ ప్రీవియస్ క్వశ్చన్ వీ ఆర్ టేకెన్, so we have taken selling price, sales value. That means we followed a total approach. If a question is silent, we follow total approach. If a question is silent, we follow what? Total approach. Otherwise what? We can follow cash cost approach. In cash cost approach we are not going to take depreciation also. Depreciation kuda తీసుకోం. ఎందుకు తీసుకోం depreciation? Why we are not taking depreciation? Depreciation is nothing but what? Part of a capital expenditure, yes or no? Already we are taking capital investment in capital budgeting. Total investment is equal to capital investment plus working capital investment. Okay, in capital investment already we covered, yes or no? If you are taking again in working capital investment, depreciation, that is a double effect. అర్థమవుతుందా? బిజినెస్ చేయాలి, ఓకే, కార్ కొనాలి. యూ హ్యావ్ టేకెన్ కార్ ప్రైస్. You have taken what? Car price, example. Again what? In working capital investment, you are taking a debtors. In the debtors, if you are following a total approach, you are taking what? Depreciation also. No, depreciation kuda తీసుకుంటున్నావు. Depreciation అంటే ఎలా వచ్చింది? ఆ కార్ కాస్ట్ని ఏంటి? ఆ కార్ కాస్ట్నే కదా డివైడ్ బై 5 or 10 చేస్తావు, అవునా? అంటే మళ్ళీ నువ్వు మళ్ళీ సెకండ్ టైం తీసుకున్నట్టు అవుతుంది కదా. So that's why the best approach is actually cash cost approach. Cash cost approach. That means we take only what? Cash cost. So we will not be taking what? Depreciation and profit. Depreciation తీసుkom, అలాగే ఏంటి? Profit కూడా తీసుkom. Okay. So here you are required to determine net working capital on cash cost basis. Okay. So go through this question. Try to understand this question. Then I will explain, okay? You can understand on your own. You will get doubt in work in progress. You will get doubt in work in progress. If this question comes in examination, it is easy, and within 10 minutes you can complete this working capital estimates question. It will not take much time. You can save time here in working capital estimates. So question number 2. Statement showing working capital requirement. 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 Okay. So particulars amount. In particulars amount A, current assets. So in current asset, first one, what is the first one? Raw material. Tell me the calculation, raw material calculation. Raw material calculation. 1 lakh. 1,04,000 into 500 into 1,04,000 into 500 into 19.6%. So 1,04,000 number of units, yes or no? Into 500 into 19.6%. You will get raw material cost. Raw material cost into what is the period? 3 divided by 52. So average raw material in stock 3 weeks. So answer 5,88,000. Next, work in progress. In work in progress, material we have to take separately. Material 1,04,000 into 500 into 19.6% into 75. We should take 75% because percentage completion is 75%. Work in progress means good is not yet completed. So what is the percentage of raw material used? 75%. So you know the process costing, right? In process costing also, this percentage completion is having a relevance. So 1,04,000 into 500 into 19.6% into 75% into 2 by 52. 2 lakh. Clear? In work in progress includes what? Raw material. So what is the raw material cost in work in progress? 2 lakh 94,000. Next, conversion cost 1 lakh 4,000 into 500 into conversion cost includes wages and overhead. Wages and overhead. We should take only what? Cash cost. Better we take what? Wages and overhead separately. So tell me wages calculation. 1 lakh 4,000 into 500 into 10.6% into 70 into 2 divided by 52. Work in progress includes raw material cost, wages and production overhead. So what is the amount? 1,48,400. Next, overhead 1,04,000 into 500 into 17.6% minus depreciation 15. We are following the cash cost approach. We should not take depreciation. So that's why 1,04,000 into 500 into 17.6% minus 15 into what? 2 by 52. 2,04,400. Total. What is the work in progress value? Overall work in progress value 6,46,800. Clear? Next, after work in progress, next what? Finished goods. Finished goods means completed. Raw material 100%, wages 100%, production overhead 100%. You better take working note for calculating raw material cost, wages and overhead. So then that would be easy. So better take what? Working note 1, calculation of raw material, wages and overhead. Okay. So next, finished goods stock. Finished goods stock 1,04,000 into, what is the amount? Tell me the amount. 500 into overall 224. How we got this 224? 500 into, so 19.6 plus 10.6 plus 17.6%. Out of this we should reduce what? 15. Then we get 224. 1,04,000 into 224. Better you prepare working note for that. Then it will be easy. 224 into 4 divided by 52. 4 weeks, 17 lakh 92,000. Very good. Next data, so data's calculation 1,04,000 into 224 into what? 2.5 divided by 52. 70%. Only credit sale. We should take only what? Credit sale. 75 into 75%. 1,04,000 into 224 into 2.5 divided by 52 into 75%. We should take only credit sales. Tell me the amount. 11 lakh 8 lakh 40,000. Next, cash. What is the cash amount? 3 lakhs. 3 lakhs minus 75. We should take only 2 lakh 25. But because that 3 lakh is including overdraft, which is not yet utilized, so we should take only 2 lakh 25,000. Any other current asset? Okay. Next, current liabilities. Current liabilities. In current liabilities, first, creditors. Tell me the calculation, creditors calculation. 1,04,000 into, creditors will be there only for raw material. So that's why 1,04,000 into 98 into 3.5 divided by 50, 52 into 75%. Credit purchases ichada. Credit purchases, so cash purchase 25%. That means credit purchase only 75. Tell me the amount. 5 lakh 14,500. 514,500. Next. After creditors, outstanding wages. So 1,04,000 into, what is the wages amount? 53 into 2 divided by 52. 2,12,000. Next amount. So outstanding overhead. 1,04,000 into 70. We should take only what? Cash 1.5. Divide by what? 52. 2 lakh 2,19,000. So what else is there? Anything else? Okay. So tell me the total of current assets. 4 40 9 1 800. 4091,800. 9,45,500. Next, C. Working capital, A minus B. C working capital, A minus B. 40,91,800 minus 9,45,500. 31 lakh 46,300. Add provision for contingency. So 31,46,300 divided by, this is equal to 96. Because provision for contingency is 4%, including that provision. Provision for contingency is 4% on working capital, including that provision means, including that provision will be 100. Excluding that provision will be what? 96. Divided by what? 96 into 4. 1 lakh 30 96. Total 32 lakh 77,396 is the working capital requirement. Clear? Am I clear? So 32,77,396. Done. See the next question. Question number 3. Question number 3, simple question only. PQR Limited raw material 115, direct labor 80, overheads 37, total cost 232, profit 58, selling price 290. Average raw material in stock 1 month, average material in process half a month, raw material 100%, direct labor 50, overheads 50. For suppose if percentage completion is not given, then what we have to do? For material we take 100, for labor and overhead 50%. Average finished goods in stock 1 month, credit allowed by suppliers 1 month, credit allowed to debtors 2 months, time lag in payment of wares half a month, overheads 1 month, 1/4 of our sales are on cash basis. That means 3 by 4 credit basis 3 by 4. Cash balance 1,60,000. You are required to prepare a statement showing working capital needed to finance a level of activity of 60,000 units of annual output. The production is carried out throughout the year on an even basis and wages and overheads accrue uniformly. Debtors are taken at cost. Debtors are taken at cost. That means again cash cost approach. For suppose if last sentence is not there, debtors are taken at cost, then what? We take debtors at sale value. We take debtors at sale value. So tell me what is the debtors calculation? 60,000 into 3 by 4 into 232 into 2 by 12. 17 lakh 40,000. For suppose if it is total approach, what is the calculation? 60,000 into 290 into 3 by 4 into 2 by 12. 21 lakh 75,000. So okay, clear? So simple question, okay? Next question number 4, December 24 question. December 24 question. This one you have to practice. First one refer, second practice, third refer, fourth practice. JBC Limited sells a goods at a gross profit of 25%. Depreciation is considered as a part of cost of a production. That first sentence you have to ignore. To solve this question comfortably, first sentence you can ignore, okay? 25% gross profit ratio. Depreciation is considered as a part of a cost of a production. The following are the annual figures given to you. Sales, materials consumed, wages paid, cash manufacturing expenses, administrative expenses, sale promotion expenses. The company keeps 1 month stock each of raw material and finished goods. It also keeps 1 lakh in cash. You are required to estimate the working capital requirement of the company on a cash cost basis, assuming 15% safety margin. So we have to estimate working capital on cash cost basis. On what? Cash cost basis. So here the special point is we have to prepare a statement showing cash cost. We have to prepare a statement showing what? Cash cost. In previous question, selling price is given, profit is given. Cost per unit is also given, yes or no? But in this question, sales amount is given. Okay, but cost is not given directly. We have to find out the cost. Statement showing what? Cash cost. First take working note. Working note 1. Question number 4. Working note 1, statement showing cash cost of a sales. If your writing is slow, then write what? Cash cost of a sales. Just take cash cost of a sales. Statement showing cash cost of a sales. Or else you take what? Only cash cost of a sales. Particulars amount. In particulars, how do we get cash cost of a sales? You know the cost sheet, right? First we take raw material consumed. What is the raw material consumed? Given here, material consumed. What is the material consumed amount? 4,50,000. Next, wages. 3,50,000. So 3,60,000. So material consumed and wages. Okay. Next what? Cash manufacturing expenses. What are the cash manufacturing expenses? 4,80,000. So take the total. 12 lakh. 12,90,000. So this 12,90,000. So we can take it as what? 12,90,000. So production cost. What is the administrative expense? 1,20,000. Add admin expense. What is admin expense? 1,20,000. Next, add sales promotion expense. What is the sales promotion expense? 60,000. So this will be the cash cost of a sales. 14,70,000 is the cash cost of a sales. $14,70,000 is the cash cost of a sales. Clear? In question bank, answer might be in a different manner. So this is the easy one. Cash cost of a sales is 14,70,000. Okay. Clear? So this 12,90,000 is what? Cost of a production or cost of a goods sold. So there is a difference between cost of a goods sold and cost of a sales. Yes or no? Cost of a goods sold and cost of a sales. If we add selling and administrative expenses, then we get what? Cost of a sales. Administrative expenses, there is a confusion, because generally what? If it is an administrative expense related to production, then we should add here. Okay, but if they are just mentioning administrative expenses, we consider it as what? Selling and administrative expense. In cost sheet also, if it is administrative expenses related to production, what we do is we add before the cost of a production. Clear? Okay. So 14,70,000 is what? Cash cost of a sales. So clear? So first sentence, if you see the first sentence, what is the sales amount? 18 lakhs. Gross profit ratio 25%. See, what is the gross profit ratio? I mean gross profit amount, 4 lakh 50,000. So 18 lakhs minus 4 lakh 50. 13 lakh 50,000 is the cost of a goods sold. But we got 12 lakh 90,000. We got 12 lakh 90,000. Yes or no? So this 12 lakh 90,000 is the cash cost of a goods sold. Cash cost of a goods sold. So what is the difference between 12 lakh 90 and 13 lakh 50? 60,000. So 60,000 is the depreciation. Clear? So in question bank, depreciation is calculated, which is not at all relevant to the answer. So that's why I'm not taking it. I'm just calculating what I'm just taking a statement of cash cost of a sales. Now come to main answer. What is the main answer? Statement showing working capital. Statement showing working capital particulars amount. In that A, current assets. In current assets, first one. What is the first one? Sales 2 months credit. Sales 2 months credit means we can find out what? Debtors. 2 months credit. We can find out debtors. So can we find out the debtors on sale value? No. So specifically mentioned what? Cash cost. So what is the cash cost of a sales? 14 lakh 70,000 into 2 divided by 12. 2 lakh 45,000. Next, after debtors, material consumed 1 month credit. 1 month credit means we can find out what? Material consumed 1 month credit. That means we can find out what? Creditors. We can find out what? Creditors. What is the raw material consumed amount? 4,50,000 in 4,50,000 into 4. Clear? Debtors calculation, is it clear? 14,70,000 into 2 by 12. Creditors calculation, is it clear? outstanding wages, outstanding manufacturing expenses, outstanding administrative expenses. Next what? Prepaid. Prepaid sales expense. Calculation 60,000 into 1 by 4, 15,000. Next, in paragraph, the company keeps 1 month stock of each of a raw material and finished goods. So we have to find out what raw material stock. Raw material stock. What is the raw material stock calculation? 4,50,000 into 1 by 12. 37,000. Next what? Finished goods stock. You have to write full finished goods stock. What is the finished goods stock calculation? In finished goods, we have what? Material, wages and manufacturing expenses. What is the total? 12 lakh 90,000 into 1 by 12. 1,07,500. Cash. What is the cash balance? 1 lakh. So anything else? That's it, right? So tell me the total of current assets. 5,05,000. Current liabilities 1,17,500. Working capital 2 lakh, 3 lakh, 3 lakh 87,500. So 3,87,500 plus provision, safety margin at the rate of 15%. What is the answer? 4,45,625. Total 58,125 total. 4,45,000. So this is the net working capital. Clear? Done. Question number 4. Is it clear? Next, question number 5 is similar to question number 4, but in this question there is a special point. You are selling in India and also what you are exporting. So in India you are giving 1 month's credit, and whereas if you are exporting you are giving 3 months credit, and also what selling price is 10% below home price. 10% below the home price. So materials used, wages, manufacturing expenses, administrative expenses, sale promotion expenses, income tax payable in 4 installment, of which 1 falls in the next financial year. The company keeps 1 month stock. Company keeps what? 1 month stock of a raw material and finished goods. Believe in keeping rupees 20 lakhs as cash, assuming 15% safety margin, ascertain the estimated working capital requirement. So what is the cash balance? 20 lakhs. Raw material. What is the material used? 450 into what? We are keeping 1 month stock, yes or no? So 450 into 1 by 12. 37%. Next, finished goods stock. Finished goods stock. We take material used, wages paid, manufacturing expenses. 450, 360 and 540. 450, 360 and 540 total. And here administrative expenses are also taken. In previous question what? Administrative expenses were not treated as a part of a cost of a production, but in this question what? Administrative expenses were treated as a part of production. So that's why they had taken 1470. So 1470 divided by 12. What is the number? 122.5. So here total approach or a cash cost approach? They have not mentioned a cash cost approach. That means we go for what? Total approach. So debtors, domestic market, 1200 into 1 month credit. 1200 divided by 12, 100. Export, 3 months credit. 540 into 3 by 12, 135. Next, sales promotion expenses paid quarterly in advance, 120 into 1 by 4. Clear? Okay. Sales promotion expense 60 lakhs into what? 1 by 4, 15. Next, current liabilities, creditors, same calculation, 450 into 2 by 12. Outstanding wages 360 into half divided by 12. Manufacturing expenses 540 into 1 divided by 12. Outstanding administrative expenses 120 into 1 divided by 12. Income tax payable. It is a current liability. We are not paying in advance. We are paying in 4 installments. Last installment will go in next year. That means 150 into 1 by 4. 150 into 1 divided by 4. So what is 150 into 1 divided by 4? 37.5. So is it considered or not? So they have ignored. So okay, in this question there are 2 mistakes. Two mistakes in one point. They have ignored tax, but one installment is falling in the next financial year means what? So that is payable in the next year. This year income tax which is payable in the next year. So that should come under what? Current liability. Clear? And one more thing here, administrative expenses was treated as part of cost of production. Okay. So regarding administrative expenses, you write an assumption. So we are treating administrative expense as a selling and administrative expense. So that's why not treated as a part of cost of production. If you are treating it as a cost of production, then what? Write administrative expenses are assumed to be related to production. So that's why treated as a part of cost of production. Clear? Next, operating cycle period. This is a simple concept, operating cycle period. So this is also used to estimate the working capital. Operating cycle period. If this question comes in examination, within 5 minutes we can complete. So this is very easy. Operating cycle period. So cash conversion cycle. They might ask MCQ, cash conversion cycle. They are asking simple, cash conversion cycle. So first of all, what is this operating cycle? Operating cycle means a time taken for conversion of a cash again into cash. Operating cycle period means a time taken for conversion of a cash again into cash. Cash again into cash. Okay. For example, first we bring cash. With cash we purchase raw material. Raw material immediately will not get converted into cash. Raw material will become work in progress. Work in progress will become finished goods. And finished goods will become debtors. And debtors will be converted into cash. So this is the cycle. Cash to raw material to work in progress to finished goods to debtors to cash. Okay. So time taken for conversion of a cash again into cash is called as a operating cycle period. How do we calculate operating cycle period? Operating cycle period is equal to R plus W plus F plus D minus C. R means raw material storage period, W means work in progress period, and F means finished goods storage period, D means data's collection period, and C means credit availed from supplier. Why minus C? Because it is a liability. They are investing on us, yes or no? Even though we are giving credit to the debtors, someone is giving credit to us, yes or no? So that's why R plus W plus F plus D minus C. C means a credit availed from supplier. Credit availed from supplier. So how do we get raw material storage period? So next you have to write this formula. So first operating cycle period is equal to what? R plus W plus F plus D minus C. Okay. Raw material storage period is equal to average stock of a raw material divided by raw material consumption per day. Raw material consumption per day. Raw material consumption per day means nothing but what? Raw material consumption divided by 365. Are getting my point? So we have to find out the raw material storage period. For example, here in this question, 50,000 rupees worth stock is there, yes or no? 50,000 rupees worth stock is there. What is the raw material inventory consumed during the year? 6 lakhs. Okay. So how many days stock is there with me? 6 lakhs divided by what? Days in a year, they are assumed to be what? 360. If you do 6 lakhs divided by 360. 6 lakhs divided by 360. What is the 6 lakhs divided by 360? 1,667. So daily I consume 1,667 rupees worth of a raw material. What is the present stock? 50,000 rupees worth stock is there. 50,000 rupees worth stock is there. That means what? I am having how many days stock? 30 days stock. So this 30 days is called as what? Raw material storage period. Okay. So either you can write R is equal to raw material storage period is equal to average stock of a raw material divided by raw material consumption into 360 or 365. You can write like this formula, or else what? Average stock of a raw material divided by raw material consumption per day. Raw material consumption per day means nothing but, are getting my point? Either you write 50,000 divided by 6 lakhs divided by 360, or else you can write 50,000 divided by 6 lakhs into what? 360. Anything is fine. So this is simple. Tell me the formula. Raw material storage period is equal to average stock of raw material divided by raw material consumption per day. So in this question, what is the raw material storage period, Kavya? 30 days, huh? Okay, 30 days. Next, cost of a production for the year and average work in progress inventory is given. Average inventory is given. So if it is working process period, working process period W is equal to average stock of work in progress divided by cost of a production per day. Average stock of work in progress divided by cost of a production per day. That means what is the calculation? 30,000 divided by 5 lakhs divided by 360. R 30 days, W 22 days, 22 days. Next, cost of a goods sold during the year and average finished goods stock held. Average finished goods stock held. So what is the formula for F, finished goods storage period? Average stock of finished goods divided by cost of a goods sold per day. Cost of a goods sold per day. So calculation 40,000 divided by 8 lakhs divided by 360. 18 days. F is equal to 18 days. How to calculate average collection period from debtors, not debentures. Average collection period from debtors, not debenture. So how do we get collection period from debtors? Generally, credit average accounts receivable divided by credit sales per day. Average accounts receivable. So always the numerator will be what? Stock, asset, current asset. Average accounts receivable divided by what? Credit sales per day. For suppose if it is credit availed from supplier, then what is the formula? Average accounts payable divided by credit purchases per day. Credit purchases per day. ఇంకొక ఎగ్జాంపుల్ చెప్పాను మీకు. డైలీ మనం 1000 సేల్ చేస్తున్నాము. Credit allowed is 1 day. So what is the debtors amount? 1000. Yes or no? For suppose if I am allowing credit period 2 days, what is the debtors amount? 2000. If I am allowing 3 days credit period, what is the debtors amount? 3000. Advaina? 5000 is the debtors amount. Then tell me what is the credit period allowed to debtors? 5 days. How we are calculating 5000 debtors amount divided by credit sales per day? What is the credit sales per day? 1000. Clear? So this is simple. F is equal to finished goods storage period, that is equal to what? Finished goods stock divided by cost of a goods sold per day. Okay, raw material storage period is equal to average stock of raw material divided by raw material consumption per day. Working progress period is equal to average stock of working progress divided by cost of a production per day. Clear? And next what? Collection period. Average collection period is equal to credit accounts receivable. Average accounts receivable divided by credit sales per day. What about average accounts payable? Sorry, credit availed from suppliers. Credit availed from suppliers is equal to average accounts payable divided by credit purchases per day. Credit purchases per day. Clear? So in this case, what is the operating cycle period? 30 plus 12 plus 18 plus 45 minus 30. 85 days. Clear? So how do we get number of operating cycles? Number of operating cycles in a year. For one cycle 85 days. In a year how many days? 360 days. 360 days. 360. In this question specifically given 360. Otherwise we can take 365. So we have to take 365 if it is not mentioned in question. So what is the number of operating cycles in a year? 4.23 cycles. That means cash is converting again into cash. How many times? 4.23 times in a year. In 4. So cash again getting converted into cash. How many times? 4.23 times in a year. Clear? Seventh one. See the seventh one. Net operating cycle period. So first we need raw material storage period. So this may not be there in your question, in your book. See this. So raw material storage period. How do we get raw material storage period? Average stock of a raw material divided by raw material consumption per day. So here year is equal to 365 days. So you have to be careful. Average stock of a raw material. So tell me, how do we get average stock of raw material? Opening stock plus So opening stock is on the right side. Opening stock plus closing stock divided by 2. Yes or no? Average stock of raw material. Average stock of a raw material divided by raw material consumption per day. So here you have to be careful. This 400 is not consumption. It is purchase. It is purchase. You have to find out the consumption. How can we get consumption? Opening plus, you have to be careful. Opening is given on the right side. Opening 45 plus purchase 400 minus 65 closing. Then you will get what? Raw material consumption divided by what? 365. Nothing but 45 plus 65 divided by 2. 55 divided by 380, yeah? Into what? 365. How many days? 52 point. So 52.82, 53 days. So high chances of doing a clerical mistake, because the reason is opening is given on a right. First of all, we should take average stock of a raw material. How do we get average stock of a raw material? Opening stock plus closing stock divided by 2. And you might take purchases. We should not take purchase. We should take what? Raw material consumption. How do we get raw material consumption? Opening stock plus purchase minus closing stock. Clear? Next, work in progress period, conversion period, work in progress period. So opening 35 plus 51 divided by 2. Whole divided by cost of production is given directly. What is the cost of production? 450. Clear? So this is okay, fine. Next, finished goods storage period. Opening stock plus closing stock divided by 2 divided by cost of a good sold per day. Cost of a good sold is given 525. Clear? That also we can calculate. Simple. Clear? 45 days. Done. Here, data's collection period. We have to find out what? Data's collection period. How do we get data's collection period? Average accounts receivable divided by credit sales per day. Credit sales per day. That means 112 plus 135 divided by 2 whole divided by 585 divided by 365. Yes or no? So clear? 77 days. Are you able to understand? Next, credit availed from suppliers. How can we find out the credit availed from suppliers? Average accounts payable divided by credit purchases per day. Average accounts payable divided by credit purchases per day. So 68 plus 71 whole divided by credit purchases 400 into 365. 120 63.4 64 days. So net operating cycle period is equal to R plus W plus F plus T minus C. So 146 days is the answer. And next, number of operating cycles. How do we get number of operating cycles? 365 divided by operating cycle period. 2.5. And in this question, there is additional point. Amount of working capital required. Amount of working capital required. So that can be calculated easily. See here, operating cost is given. What is operating cost? Annual operating cost. Annual operating cost 325. 325 is the annual operating cost. That is for how many days? 365 days. But what is the operating cycle period? 146 days. So what is the meaning of this 146 days? It will take 146 days time to convert cash again into cash. That means we need a working capital for how many days? 146 days. Cash మళ్ళీ క్యాష్ అవ్వడానికి 146 days టైం పడుతుంది. అంటే మనం వర్కింగ్ క్యాపిటల్ ఎన్ని డేస్కి మెయింటైన్ చేయాలి? 146 daysకి. సో దట్స్ వై వర్కింగ్ క్యాపిటల్ రిక్వైర్మెంట్ ఈజ్ ఈక్వల్ టు వాట్ ఈస్ ఆపరేటింగ్ కాస్ట్ అమౌంట్ 325 ఇంటూ 146 డివైడెడ్ బై 365 130. లేదా ఇంకోలా చేయొచ్చు, యాన్యువల్ ఆపరేటింగ్ కాస్ట్ డివైడెడ్ బై వాట్? నెంబర్ ఆఫ్ ఆపరేటింగ్ సైకిల్స్. 325 is the annual operating cost. In a year, how many cycles are there? 2.5. So 2.5 times cash again converting into cash. Okay. So then also you will get 130. So one calculation is what? 325 into 146 divided by 365 days. For 365 days you are spending 325 lakhs, but you require working capital for how many days? 146. So that's why 325 into 146 divided by 365. లేదా ఇంకొకటి ఏంటి ఆప్షన్? యాన్యువల్ ఆపరేటింగ్ కాస్ట్ డివైడ్ బై నెంబర్ ఆఫ్ ఆపరేటింగ్ సైకిల్స్. ఇఫ్ నెంబర్ ఆఫ్ ఆపరేటింగ్ సైకిల్స్ ఇంక్రీజెస్, యువర్ వర్కింగ్ క్యాపిటల్ రిక్వైర్మెంట్ విల్ డిక్రీజ్. ఇఫ్ నెంబర్ ఆఫ్ ఆపరేటింగ్ సైకిల్స్ ఇంక్రీజెస్, working capital requirement decreases. See the link. If raw material storage period decreases, if raw material store R, W, F, D decreases, then operating cycle period will decrease. If operating cycle period decreases, so then what happens? Number of operating cycles will increase. If number of operating cycles increases, working capital will decrease. Clear? So if R decreases, if R, W, F decreases, operating cycle period decreases. If operating cycle period decreases, number of operating cycles increases. And if number of operating cycles increases, working capital decreases. Working capital investment will decrease. Okay. So that's why we should keep debtors collection period as low as possible. We should keep raw material storage period, work in progress storage period, finished goods storage period as low as possible. So that what happens? Working capital requirement will decrease. Working capital decrease అయితే ఏమవుతుంది? కాస్ట్ ఆఫ్ ఇన్వెస్ట్మెంట్ కూడా డిక్రీజ్ అవుతుంది. కాస్ట్ ఆఫ్ ఇన్వెస్ట్మెంట్ విల్ ఆల్సో డిక్రీజ్. క్లియరా? ఫ్రమ్ దీస్ క్వశ్చన్స్ యూ విల్ గెట్ 7 marks. Okay. So there are 2 questions, 2 7 marks. 1 7 marks they are asking from what? Working capital estimates. Second 7 marks what they are asking either from inventory management or debtors collection period or what? Inventory cash budget. Cash budget. Clear? Okay. Done. So next question is there, that is not that important. This is CA inter FM question. For the timing it is not important. Okay. See the question number 9. This is also operating cycle period. So I have included all varieties of operating cycle period because it is easy. So that's why I have included all the questions from CA inter FM book. This is also not there in your book. It is CA inter FM book. FM question. Raw material storage period, work in progress, finished goods, debt collection period, credit payment period is given. So tell me what is operating cycle period? 45 plus 20 plus 25 plus 30 minus 60. How many days? 60 days. Annual operating cost is given including depreciation. That means without depreciation, what is the annual operating cost? 22,50,000. Assume 360 days in a year. You are required to calculate operating cycle period. Operating cycle period you calculate, right? What is the answer? 60 days. Okay, fine. Number of operating cycles in a year. 360 divided by 6. 6. Amount of working capital requirement for the company on a cost basis. On a cost basis, they are asking you to find out amount of a working capital. Simple. Cost basis means we should exclude the depreciation. What is annual operating cost? 22 lakh 50,000. So 22 lakh 50,000 divided by 6. 3 lakh. So 3 lakh 75,000 is the working capital requirement. What is the alternative calculation? 22 lakh 50,000 into 60 divided by 360. So then also you will get the same answer, 3 lakh 75,000. Clear? So this is easy and we can save time. Operating cycle period. So recently it was not asked. So they might ask this question. I mean this concept. Next, the fourth one. You might feel like this is lengthy, but easy question, easy part. The company is a market leader in its product. Market leader in its products. It has no competitor in the market. No competitor. Based on the market survey, it is planning to discontinue sales on a credit. They don't want to sell on a credit. They want to discontinue because there is no competitor. If there is no competitor, what? We need not make any credit sale. No other option to the customer, yes or no? And deliver products based on prepayment in order to reduce its working capital requirement substantially. They wanted to reduce their working capital requirement substantially. So that's why they want to discontinue the credit sales. You are required to compute the reduction in working capital requirement. We have to compute the reduction in working capital requirement. Are you getting my point? So working capital will reduce or not? First point. Working capital will reduce or not? Yes. If we are not going to do credit sales, then what happens? The debt collection period 30 days will not be there. So that means what is the new operating cycle period? New operating cycle period is equal to 45 plus 20 plus 25 minus 60. 30 days. Or earlier it is 60 days, yes or no? Now we are discontinued sales means what? Our operating cycle period will reduce by 30 days. So what is the new operating cycle period? 30 days. Is it clear? So what is the new working capital requirement? New working capital requirement is equal to 22 lakh 50,000 into 30 divided by 360. 1,87,500. So what is the reduction in working capital? Working capital will reduce from 3,75,000 to 1,87,500. So the reduction in working capital is equal to 1,87,500. Clear? So this concept is very important. Do not ignore operating cycle period. Operating cycle period is equal to R plus W plus F plus D minus C. R raw material storage period. Average stock of raw material divided by raw material consumption per day. Working process period is equal to average stock of working process divided by cost of a production per day. Finished goods storage period is equal to average stock of finished goods divided by cost of a goods sold per day. Cost of a goods sold per day. Next, debtors collection period is equal to average accounts receivable divided by credit sales per day. Credit sales per day. Next, credit period availed. Availed means మనం తీసుకున్నాం. Credit period availed from suppliers is equal to average accounts payable divided by credit purchases per day. So clear? Done? So I will be sharing this PDF in Telegram group. Okay, during examination go through these two questions because in your question workbook ఈ questions లేవు కదా. ఒకసారి చూడండి. Okay. So with this we have completed what? operating cycle period. So another three concepts are remaining: debtors management, cash management, inventory management. So they will not take, they will take equal time. Okay, next 1.5 hour we can complete what? Working capital management. Okay, clear? So thank you. Next concept, debtors management. Next concept, debtors management. Debtors management. He is Upendra. He wanted to become a director. Okay. His other name Rolex, right? వణుకుతున్నావు ఏంటి? రేపొద్దున యాజ్ ఎ డైరెక్టర్ నువ్వు స్పీచ్ ఇవ్వాలి కదా స్టేజ్ మీద. ఇవ్వాలా లేదా? అలాగే ఉండు. సో నెక్స్ట్ టాపిక్, డేటాస్ మేనేజ్మెంట్. డేటాస్ మేనేజ్మెంట్. ఓకే, we should make a credit sales or not? Credit sales. So debtors management. So why? So we are discussing debtors management because the reason is, why we are discussing debtors management, Upendra? Why? Because the reason is current assets includes what? Debtors. We should not invest a high amount in debtors. At the same time, we cannot make only the cash sales. We cannot make only cash sales. We have to invest right amount in debtors. Right amount, optimum investment. We should make an optimum investment in debtors. Optimum means best investment. Okay. So first of all, whether we should make a credit sale or not is a question. Credit sale. So if we make a credit sale, what is the benefit? If we make a credit sale, what is the benefit? Okay. If we make a credit sale, sales will increase. You know the credit period. Credit period can be what? 30 days, 60 days, 15 days, 10 days, 90 days. Yes or no? If the credit period increases, what happens? If a credit period increases, bad debts will increase. Very good, Amma. Very good. Encouraging. If a credit period increases, bad debts will increase. If a credit period increases, sales will increase first. What is the benefit? I am asking benefit. Okay, what is the benefit? If a credit period increases, ఆయన క్లాస్కి రారమ్మా, అటు మేనేజ్మెంట్లో ఉంటారు ఆయన. సో ఇఫ్ అ క్రెడిట్ పీరియడ్, ప్రతి ఫీల్ అయ్యావా? If a credit period increases, sales increases. Sales increases, yes or no? So if sales increases, obviously what happens? Profit will also increase. So this is the positive thing. Positive thing is what? If a credit period increases, sales will increase. This is the positive thing. What is the negative thing? Bad debts will increase. Bad debts will increase. And next, cost of investment will also increase. We have to invest in debtors. We have to invest in debtors. For example, so previously we discussed, if a 1 day credit is allowed and sales per day is equal to 1,000, then what is the debtors amount? 1,000. That means our investment in debtors is 1,000. For suppose if a credit period is 2 days, then what? 2,000. Okay. 3 days credit period means what? 3,000. 3,000. So that means if a credit period increases, investment in debtors will increase and our cost of investment will also increase. In debtors management, the special point is cost of a investment. Cost of a investment. So if a credit period increases, what is the negative thing? Bad debts will increase and also cost of a investment will also increase. And next, collection expenses. Collection expenses will also increase. We need a collection department. We need 100 Shankar Bhais. Yes or no? We need Shankar Bhai or not? We need Shankar Bhai. Why? Recovery, for collection, for okay, collection, settlement and all. Okay, we need to appoint lawyer. For example, if a debtor is not paying on time and if he is not making a payment, we have to appoint a lawyer. We have to take a legal action. So our collection expenses will increase. Collection expenses. Rasta, right? ఏం పర్లేదు, ఎవరైనా పడుకుంటే చూడు ఒకసారి. ఓకే, ఇఫ్ క్రెడిట్ పీరియడ్ ఇంక్రీజెస్, నేను రాస్తాను, నువ్వు ఎక్కడే ఉండు. If a credit period increases, what happens? If a credit period increases, then plus point. Sales increases, then what? Profits. Accordingly, profits will also increase. What is the negative point? What is the negative point? So negative point, bad debts, cost of investment, and next what? Collection expenses. Collection expenses will also increase. Okay. So in debtors management, first we are going to discuss determination of a optimum credit period. Optimum credit period. Optimum means best credit period. So that is one category. Second category of a question is whether to extend a credit to a particular customer or not. Whether to extend a credit to a particular customer or not. So particular customer ki credit ivvala odda. Okay. So that kind of a questions. And next, whether cash incentive should be given to a customer or not, and if has to be given 1% or 2%, 1% or 2%. Okay. Sneha, వచ్చి నువ్వు వెనక నుంచో ఇక్కడ ఇలారా. ఓకే, క్యాష్ ఇన్సెంటివ్ 1% or what? 2%. 1% or 2%. That we have to decide. So how much percentage of a cash incentive has to be given? Okay. So first of all, I mean, whether credit has to be given or not. Credit has to be given or not. What is the conclusion? So we have to do a cost benefit analysis. Cost benefit analysis. At different credit periods, we have to find out what? Net benefit. Net benefit. And we select a credit period where a net benefit is high. We are going to select a credit period where a net benefit is high. Clear? So we cannot conclude 30 days is the best credit period, 60 days is the best credit period. We cannot determine. So we have to calculate the net benefit at each credit period, and we select a credit period at which the net benefit is high. Okay. So but you know what is the positive thing? Sales will increase. Negative thing, bad debts will increase, cost of investment will increase, collection expenses will also increase. Collection expense will also increase. Okay. So let us start with questions. Question number 10 is relating to whether a credit should be given to a particular customer or not. Credit should be given to particular customer or not. Okay. So question number 10 is simple. Whether we should give a credit to a particular customer or not. A firm is considering pushing up its sales by extending credit facilities to the following categories of customers. A firm is considering pushing up its sales by extending credit facilities to the following categories of customers. అక్కడ కూడా చూడొచ్చు, అటు చూడు బాగా కనిపిస్తావు. The customer with a 10% risk of a payment, customer with 10% risk of a non-payment. Customer with 10% risk of a non-payment means bad debts will be 10%. Customers with 30% risk of a non-payment. So 30% risk of a non-payment means bad debts will be 30%. So company wants to push up its sales by extending credit to the following customers. The incremental sales expected in case of category are 40,000, while in case of category A and B there are rupees 50,000. The cost of production and selling costs are 60% of a sale, while the collection cost amount to 5% of a sale in case of a category A and 10% of a sale in case of a category B. Okay. You are required to advise the firm about extending credit facilities to each of the above categories of customers. Okay. So we should decide whether to extend the credit to the particular group of customers or not. So first tell me, first category, what is the incremental sales amount? 40,000 is the incremental sales amount. First we should take a heading, evaluation of a credit policies, category A, risk of a non-payment 10%. Evaluation of a credit policies, category A, 10% of a risk of a non-payment, incremental sales. So what is incremental sales here? 40,000. First category, incremental sales 40,000. So next, what is bad debt amount? Bad debts. First case, 10% of risk of a non-payment, right? 10% of risk of a non-payment. That means bad debts?
10%.
10%. Bad debts, 10%. So 40,000 into 10%. 4,000 is the bad debts. So we collect only what? 36,000 minus cost of a production. What is the percentage? Cost of production?
60%.
వాళ్ళని అడిగిన ఆడి చూపిస్తున్నా చెయ్యి
60%.
60%. Cost of a production 60%. So 40,000 into 60%. 24,000. Manisha, it is 4 table. 4 into 6. Next, collection cost. Collection cost. What is the collection cost?
5%.
5%. So 40,000 into 5%. 2,000. So what is the incremental profit? 10,000 is the incremental profit. So whether we should extend the credit to the particular that group of customers or not? Yes, we can extend the credit because we are getting a profit of 10,000. Second category. What is the second category? There is 30% risk of a non-payment. 30% risk of non-payment. Bad debts 30%. Okay. So sales. So second case, what is the sales amount? Sales amount.
50,000. 50,000.
Very good. 50,000. Bad debts.
30%. 30%. 50,000 into 30%. 15,000.
50,000 into 30%. 15,000. Sales realized. 35,000. Less cost of a production. Cost of production 50,000 into what? 60%. Amount 30,000. Collection cost 50,000 into 10%. 5,000. So incremental profit 0. So what is your advice? Extend the credit facility to category A customers. Category A customers. Okay? Clear? నువ్వెవరన్నా నామినేట్ చేయాలనుకుంటున్నావా ఇక్కడ ఈ ప్లేస్కి? నువ్వే ఉంటావా? సరే, ఓకే. క్వశ్చన్ నెంబర్ 11. నీకు ఛాన్స్ ఇచ్చి ఎవరన్నా నామినేట్ చేయమని వద్దన్నావుగా. సీ ద క్వశ్చన్ నెంబర్ 11. మళ్ళీ ఇస్తాను ఈ ప్రాబ్లం అయ్యాక. Question number 11. XYZ Corporation, whose current sales are in the region. Okay. XYZ Corporation, whose current sales are in the range of rupees 6 lakhs per annum and an average collection period of 30 days, wants to pursue a more liberal policy to improve sales. A study made by a management consultant reveals the following information. So this is a different question. We have to select the credit period. Optimum credit period. Optimum means best. Optimum means what? Best. Okay. A study made by a management consultant reveals the following information. Credit policy A, B, C and D. Increase in collection period 10 days, 20 days, 30 days, 40 days, 45 days. Increase in sales 30,000, 48,000, 75,000, 90,000. Present default anticipated 1.5%, 2%, 3%, 4%. Okay. If a credit period increases, what happens? Sales will increase. That is what happening here, yes or no? What about default, percentage of default, bad debts? Percentage of default. Okay. So if a credit period increases, bad debts will also increase. The selling price per unit 3 rupees. Average cost per unit is rupees 2.25. Variable cost per unit rupees 2. The current bad debt loss is 1%. Required return on additional investment is 20%. Assume 360 days a year. Which of the above policies would you recommend for adoption? Which of the above policy would you recommend for adoption? So this was a frequently asked question, June 25, but understand the concept. So we have to find out the net benefit in each case. Net benefit in each case. What is the present sales amount? Present sales amount 6 lakhs. So take heading evaluation of various credit policies. So evaluation of various credit policies. Evaluation of various credit policies. Columns, particulars, credit period, how many days? 30. Next what? Increase in collection period by 10 days. So actual 30, we are increasing by what? 10 days. So next one we should take 40. Next 30, 40. Next credit period 50, 50. Next credit period 75. Credit period 30, 40, 60, 50 ఎవరు చెప్పారు మరి? 50 కూడా ఉందా? 30, 40, 50, 75. These are the 4 new proposals. Already existing period is 30. Existing credit period 30. Clear? In particulars, first sales. What is the sales amount? Six lakhs. Six lakh 30,000. 6 lakh 30,000. Next 6 lakh 48,000. 6 lakh. Next 6 lakh 90,000 minus variable cost. Variable cost minus variable cost. So what is the variable cost? Average cost per unit is 2.25. Variable cost per unit 2 rupees. Variable cost per unit 2 rupees. Clear? So tell me what is the calculation? 6 lakhs divided by selling price 3 into what? 2 rupees. 4 lakhs. Clear? Next 4 lakh 20,000. Next 4 lakh 32, 32,000. Next better you find out the variable cost ratio. Variable cost ratio is equal to 2 by 3. That means 66.67%. Sales into 66.67% will be the variable cost. Next 4 lakh 50,000. 4 lakh 60,000 minus fixed cost. So what is the fixed cost calculation? 6 lakhs divided by 3 into 0.25. Why this 0.25? Because average cost per unit is 2.25. Average cost per unit is 2.25. What is the variable cost? 2 rupees. That means the balance 0.25 is fixed cost. So what is the number? 50,000. Okay. 50,000. Next, second case. ఓకే అట్లీస్ట్ కొంతమంది అయినా ఏం చేస్తారంటే ఫ్లోలో క్యాలిక్యులేట్ చేసుకుంటూ వెళ్తారు. సో దే విల్ బి క్యాలిక్యులేటింగ్ లైక్ 6,30,000 6,30,000 డివైడెడ్ బై 6,30,000 divided by 3 into 0.25. Likewise, they might calculate, but here the point is it is a fixed cost. Fixed cost will remain same, irrespective of a sales level. Either in costing or here, so you will be doing a mistake in case of fixed cost. Be careful. Fixed cost is a cost which does not changes with the change in output. మీకు ఆ కాన్సెప్ట్ తెలుసు, బట్ సబ్ కాన్షియస్ మైండ్ ముందు రోజులు ఏం చేసాం, క్యాలిక్యులేట్ చేసుకుంటూ వెళ్ళాం కదా, ఇక్కడ కూడా ఏం చేస్తాం, అలాగే చేసుకుంటూ వెళ్తాం. సో చూసుకోండి జాగ్రత్తగా. వాట్ ఇస్ ద ఫిక్స్డ్ కాస్ట్? 50,000. నెక్స్ట్ వాట్? మైనస్ bad debts. Minus what? Bad debts. So what is the bad debt amount first case? 1%. So that 1% we have to apply on sales. 6,000. Next 9,450. 12,960. 20,250. 27,600. Upendra is having a YouTube channel, Gadevari Gudam Village Boys. Please subscribe to the channel for more videos. Next, minus bad debts, and next what? What is the next one? Any other expense? Okay, fine. Now this is a gross benefit. So tell me what is the gross benefit? $1,44,000. 1,50,550. 1,50,550. Next. 1 lakh 53,040. 1 lakh 54,750. Next. 1 lakh 52,400. Gross benefit minus. So this is the special point. Minus what? Cost of a investment. Minus cost of a investment. This is the special point in debtors management. You should know how to find out this cost of a investment. Cost of a investment. Clear, Upendra? Say hi to Jashvita and Jayalakshmi.
Hi.
Minus cost of a investment. Minus cost of a investment. See the cost of investment calculation. So for this we have to prepare a working note. Working note 1, cost of a investment. Particulars. Particulars, next word. Credit period. How many days? 30. Next credit period. 40. Credit period. 50. Credit period. 60. Credit period. So we have to find out the cost of a investment. We are investing in debtors. We are allowing credit means we are investing in debtors. So particulars first. Variable cost. What is the variable cost amount? First case 4 lakhs. Second case 4 lakh 20,000. Next 4 lakh 32,000. Next 50,000. Next 4 lakh 60,000. Next fixed cost. Take fixed cost. What is the fixed cost amount? 50,000. So this is the total cost, yes or no? Variable cost plus fixed cost, total cost. What is the total cost? 4 lakh 50, 4 lakh 70, 4 lakh 82,000, 5 lakhs, 5 lakh 10,000. Total cost. So 4 lakh 50,000 is the cost, yes or no? That is for how many days? Total 12 months, 365 days, yes or no? That is for 365 days. What is the credit allowed in first case? 30 days. Okay, how to find out the investment? Investment is equal to investment in debtors. Investment in debtors is equal to 4 lakh 50,000 into 30 divided by 365. 360, yeah? Okay, 30 divided by 360. 37,500. Investment in debtors 37,500. What about next one? 4,70,000 into 40 divided by 365. 52,222. Next 4,82,000 into 50 divided by 360. 66,944. Next 83,333. Next 1,06,250. So this is our investment in debtors. So we procure this money from what? Equity shareholders and debenture holders. We incur some cost, yes or no? So what is the required rate of return? The required rate of a return on additional investment is 20%. Required rate of return is nothing but what? Cost of a capital. Your cost of funds is 20%. Okay. So cost of investment. What is the cost of investment? First case 37,500 into 20%. 7,500. Second case 52,222 into 20%. 10,444. Next 13,389. 16,667. Next 21,250. This is the cost of a investment. Okay. Clear, Upendra? Okay. So now come to the main part of the answer. Minus cost of investment. What is the number? 7,500. 10,444. 13,389. 16,667. 21,250. So this will be the net benefit. So in almost every question we do like this only, net benefit. So what is the net benefit? First case 1,36,500. 1,36,500. Next 1,40,106. 1,39,651. Next 1,38,083. 138,083. Next 1,31,000. 115. 1. So tell me which is the best one. Increase credit period by increase credit period by 10 days because the net benefit is maximum in that case. You have to write the decision as well at the end. Increase the credit period by 10 days because the net benefit is maximum in that case. Okay? Clear? Is it clear? So there is another alternate also, but we are discussing only one. See the question number 12. ABC Corporation is considering relaxing its present credit policy. Relaxing its present credit policy and is in the process of evaluating two proposed policies. Already we have a policy, present policy, and two proposed policies. Currently the firm has annual credit sales of rupees 50 lakhs and accounts receivable turnover ratio of 4 times a year. What is accounts receivable turnover ratio? 4 times a year. In this question the special point is they have not given a collection period. They have given what? Accounts receivable turnover ratio. Accounts receivable turnover ratio. So how do we get collection period? Number of days in a year divided by Accounts receivable turnover ratio. Here turnover 4 times means, so debtors are converting into cash. Total how many times? 4 times in a year. 4 times in a year. That means for converting debtors into cash one time, how many days it is taking? So 365 divided by, or 12 months divided by 4. 12 months divided by 4. 3 months is the collection period. 3 months is the collection period. Here 4 times means debtors is getting converted into cash. Total how many times? 4 times in a year. 4 times in a year. So one time, how many months it takes? 3 months. The firm, the current level of bad debts 1,50,000. The firm is required to give a return of 25% on the investment in new accounts receivable. Earlier the required return is 20%. Now it is 25%. The company's variable cost ratio is 70%. Same like previous question. In this question, fixed cost is not given. Fixed cost is not given and collection period is not given directly. We have to find out the collection period. How do we get collection period? Number of months in a year divided by turnover ratio. So first case, what is the collection period? 3 months. Second case, 4 months. Third case, 5 months. Again we do the same. First we start with what? Sales 50 lakhs, 60 lakhs, 67 lakh 50,000 less variable costs, less bad debts. You will get gross benefit minus what? Cost of a investment. So here cost of investment. How do we get cost of investment? 2,18,750. Here what is the overall cost? Only variable cost 35 lakhs. 35 lakhs. So 35 lakhs is for 12 months, yes or no? So what is the credit period? First case 3 months. 3 months. So 35 lakhs into 3 divided by 12. 8,75,000 is the investment in debtors. On that 8,75,000, what is our required rate of return? 25%. Clear? Okay. So what is the amount? 2,18,750. So what is the second one calculation? Second calculation. 42 lakhs into 4 divided by 12. 14 lakhs into 25%. 3,50,000. What is the last calculation? 47,25,000 into 47,25,000 into 5 divided by 12 into 25%. Very good, Amma. Okay, clear? So this is the answer. Okay. Done? Are you able to understand? Next, 13th question. In 13th question, the special point is 1/10 net 45 days. 1/10 net 45 days means 1% incentive. If paid within 10 days, normal credit period is 45 days. So for the first time you will not be knowing it, okay? So 1/10 at 45 days means what? 1% cash discount. 1% cash discount. Incentive. 1% cash discount. If paid within 10 days, normal credit period 45 days. Clear? And average collection period is 30 days. Why the average collection period is 30 days? Because some customers will pay at the end of 45 days. But some customers will pay at the end of 10 days to get a discount of 1%. Yes or no? We are giving an option to the customers. Either you pay at the end of 45 days or else what? Pay at the end of 10 days and get discount of 1%. Clear? So why the average collection period is 30 days? Because some customers will pay at the end of 10 days and some customers will pay at the end of 45 days. The current bad debt loss is 1.5%. In order to accelerate means what? Speed up the collection process further, as also to increase sales, the company is contemplating liberalization of its existing credit terms to 2 by 10 at 45 days. In order to speed up the collection process, company wants to liberalize. Liberalize means what? I'm liberal to you, yes or no? Even if you are coming late, I'm not saying anything, yes or no? Okay? So even if you are sleeping, I'm not saying anything, yes or no? Am I liberal or not? Liberal means relaxing. I'm relaxation. I'm giving relaxation to you. Okay? Likewise, here also, company wants to give a relaxation to what? Customers. So what is the relaxation? If you pay within 10 days, 2% discount will be given. Normal credit period 45 days. Liberalization. It is expected that sales are likely to increase by 1 by 3 of existing sales. Sales will increase, yes or no? Because we are giving a cash discount, then obviously sales will increase. Here sales are increasing by 1/3. So bad debts increase to 2% of sales and average correction period decline to 20 days. The contribution to sales ratio is 22%. Opportunity cost of investment in receivable is 15% pre-tax. Be careful, it is 15% before payment of tax. 15% pre-tax. So what is the tax rate? 30%. So they want, what is the opportunity cost of investment? Opportunity cost of investment is 15% before tax. After tax is 10.5. 15 into 1 minus 0.3. Master, yes, no, no, okay. 15 into 1 minus 0.3. 50% and 80% customers in terms of sales revenue are expected to avail cash discount under existing and liberalization scheme respectively. The tax rate is 30%. Okay, question number 13. So what is the question? Right now, what is the credit policy? 1% discount if paid within 10 days. Normal credit period 45 days. What is the second one? 2% discount if paid within 10 days. Normal credit period 45 days. So let us start. వెళ్తావా అక్కడ కెమెరా ఎడుతానులే. ఓకే, so take heading evaluation of credit policy. Question number 13. Very good, Amopendra. నేను స్టేజ్ మీదకి పిలిచాను కదా, నువ్వు నన్ను పిలుస్తావా రేపు డైరెక్టర్ అయ్యాక? Evaluation of credit policy. Evaluation of a credit policy. Evaluation of a credit policy. Okay. Evaluation of credit policy or determination of a best credit policy, whatever you can take. Okay. Evaluation of credit policies. Columns. What are the columns? Particulars, policy 1, policy 2. What is policy 1, Venkatadripuram? $5 discount. ఇంకంతా అమ్ముకోవాలి కంపెనీ అలా ఇస్తే. చెప్పమ్మా, తిట్టుకుంటాంటమ్మా. 1% డిస్కౌంట్ 1% discount if paid within 10 days. లిప్ మూమెంట్ లేకుండా తిట్టుకోవాలి. ఉపేంద్ర చూడు ఎలా తిట్టుకుంటున్నాడు మనసులో, నాకు తెలియని కూడా తెలియదు. 1% discount if paid within 10 days. Next, 2% discount paid within 10 days. వీళ్ళ గర్ల్స్ అందరూ పైన చదువుతున్నారమ్మా. జనరల్ సైకాలజీ ఎలా ఉంటుందంటే, ఇప్పుడు పడుకుందాం నైట్ చదువుదాం అనిపిస్తుంది. నైట్ ఏమనిపిస్తుంది అనుకుంటున్నావు? ఇప్పుడు పడుకుందాం పొద్దున్నే చదువుదాం అనిపిస్తుంది. పర్టికులర్స్ పాలసీ 1 and policy 2. Particulars first, sales. Tell me, what is the sales amount? 12 lakhs. Second case, sales will increase by 1/3. So 12 lakhs into 1/3, 4 lakhs. 12 lakhs plus 4 lakhs, 16 lakhs. Okay. సేల్స్ మైనస్, రిలేషన్లో ఉన్నావా మరేంటి, ఎవరో తలుచుకుంటే మనం ఏదో. ఓకే, సేల్స్ మైనస్ వాట్? సేల్స్ మైనస్ వాట్? వేరియబుల్ కాస్ట్. వాట్ ఇస్ ద వేరియబుల్ కాస్ట్ రేషియో? వేరియబుల్ కాస్ట్ రేషియో ఇచ్చాడా లేదా క్వశ్చన్లో? ఇంకొక అరగంట ఇలాగే ఉంటుంది, వెతికినా కనపడవు పర్సంటేజ్లు. వేరియబుల్ కాస్ట్ రేషియో, కాంట్రిబ్యూషన్ రేషియో 22. ఓకే, డైరెక్ట్ కాంట్రిబ్యూషన్ వీ కెన్ ఫైండ్ అవుట్ డైరెక్ట్ వాట్? కాంట్రిబ్యూషన్. వెరీ గుడ్ అమ్మా, థ్యాంక్ యూ సో మచ్. కాంట్రిబ్యూషన్, వాట్ ఇస్ ద కాంట్రిబ్యూషన్? 12 lakhs into 22%. 2,64,000. Next, 3,52,000 minus bad debts. Existing case bad debts 1.5%. This 1.5% we have to apply on sales, 18,000. Second case 16 lakhs into 2%, 32,000. Next, minus cash discount. We are giving a discount, yes or no? So what is the cash discount here? First case 1%, but not every customer is availing the cash discount, only 50%. So 12 lakhs into 50% into 1%, 6,000. Second case 16 lakhs into 80% customers are availing the cash discount into what? 2%, 25,600. Anything else is there? No, right? So what is this? Gross, sorry, profit before tax. Tax rate is given, yes or no? Profit before tax. What is the profit before tax? 2,40,000. కొంతమంది 12 lakhsలో నుంచి ఆ 2,64,000 కూడా మైనస్ చేస్తారు. ఇన్కమ్ స్టేట్మెంట్ అలవాటు కదా మనకి, సేల్స్లోంచి తీసేయడం అన్నీ. 2,94,400 profit before tax minus tax at the rate of 30%, 72,000. 80, 88,320. This is profit after tax. 1,68,000. Next, 2,06,000. 206 0 80 minus cost of investment. What is the cost of investment? How do we calculate the cost of investment? First, sales 12 lakhs into variable cost ratio. Because here we find out the cost of investment using cash cost approach, not the total approach. We use only cash cost. 12 lakhs into 78%. You will get variable cost. Variable cost into, what is the average collection period? 30 days divided by 360 into, what is the percentage? 10.5. Instead of working note, I am writing directly 12 lakhs into 78% variable cost into 30 divided by 360 cost of, investment into 10.5% cost of a investment. What is the amount? 8190. Second case, 16 lakhs into 78% into, what is the collection period? 20 days. This time 20 days only. Average collection period 20 divided by 360 into 10.5%. 7280. So this is the net benefit. 1,59,810, 1,98,000. So tell me which is the best option? Second one. So what is the decision? Give 2% discount if paid within 10 days. So that is the best policy. Clear? Now pause the video and go through this 14th question. 14th question. With this we complete. So we have completed what? Data's management. Pause the video. Go through the question number 14. Question number 14. Okay. నువ్వు స్టోరీ చెప్తుండు వాళ్ళు చేస్తారు ట్రై చేస్తారు ఉందా మన దగ్గర స్టోరీ So see the question number 14. T Limited is considering changing its credit terms from 1/35 net 60 to 2/10 net 60. So 1% discount if paid within 35 days. Normal credit period 60 days. 2% discount if paid within 10 days. Normal credit period 60 days. As a result, the credit sales will increase from rupees 150 crores to 105%. The average collection period will decline by 25 days. Average collection period will decline by 25 days and the default percentage will increase from 0.5% to 1%. Collection expense will increase from rupees 35,000 to 40,500. At present, selling price is rupees 300 per unit. Contribution to sales ratio 20%. Average cost is rupees 270 per unit. 60% of the credit customers avail cash discount. Should the credit terms be changed if the required rate of return is 24% pre-tax and the tax rate is 25%? Take 360 days in a year. How many customers are availing cash discount? 60%. So what are the present credit terms? 1% discount if paid within 35 days, normal credit period 60 days. So present collection period is equal to, in previous question average collection period is given, yes or no, directly. So if it is not given, we have to find out. How can we find out? 60% customers are availing cash discount. That means 60% customers are paying within 60% customers are paying within 35 days. So 35 days into 60% plus 60 days into 60 days into what? 40%. 60% availing discount means remaining 40% what? Remaining 40% they are not availing discount. That means they will pay in 60 days. So 35 days into 60% plus 60 days into 40%. So what is the collection period? 45 days. So this collection period 45 days will reduce by how many days? 25 days. If you are giving 2% discount, your collection period will reduce by what? 25 days. That means what is the new collection period? New collection period is 20 days. So we do not know how many new customers, what percentage of customers are availing cash discount. We have to find out that. So we are giving discount if they pay within 10 days, yes or no? So we do not know. So that's why let us assume the proportion of customers availing cash discount is equal to X. Then what is the proportion of customers who are not availing cash discount? 1 minus X. Yes or no? So then 10 days into X plus 60 days into 1 minus X, that should be equal to what? 20 days. If I do the weighted average, I should get 20 days. Yes or no? What are the proportions? X and 1 minus X. 10 days into X plus 60 days into 1 minus X is equal to 20 days. On solving this, I am getting what? 80%. So in this question, this is a special point. The proportion of customers availing cash discount under proposed policy is not given. We are finding it out. In previous question clearly given, 50% in present policy, 80% in new policy. Okay, in this question 60% is given, but this 60% we should assume it for what? Existing customers. Existing customers are availing, existing 60% of customers availing what? Cash discount. Clear? Is it clear? So this is a December 22 question, December 2022. December 2022. Am I clear? Done. So now increase in sales. What is increase in sales? 150 crores will increase by 5%. So this is incremental approach. We can do as like previous question. We can do same like what? Previous question. But here they are doing what? Incremental approach. Instead of incremental approach, we can do what? Same. Same means what? We take sales. Evaluation of credit policy. Question number 16, 14. Question number 14. Evaluation of credit policies. Particulars amount and amount. 2. First sales. So what is the sales? 150. 150 crores. What about here? 157.5. Next, minus variable cost. What is the variable cost? Sales to contribution ratio is given. Let us find out variable cost also, because this is required for cost of investment. Variable cost 120, 126. Contribution 30. Sales to contribution ratio 20%. Okay, next 31.5. Next, minus bad debts. What is the percentage bad debts? 0.5%. 0.5% means 0.75. Second case 1.575 minus cash discount. What is the percentage of cash discount? First case 1%. How many? What percentage of customers are availing? 60%. So 150 crores into 60% into 1. 0.9. 157.5 into 80% into 2%. 2.52. Next, minus collection expense. What is the collection expense? Minus collection expense. Okay, increase from 35,000 to 40,500. 35,000. 35,000 means 0.0035. Next, 0.00405. Next, what is the next one? Okay. What is this number? Tax rate is given. Profit before tax. What is the profit before tax? 40, 28.3465. Next, 27.40095 minus tax at the rate of 25%. 7.08 6625. 6.85 02 375. Profit after tax 21.25 9875. Next, 20.55 07125 minus cost of investment. So what is the cost of investment? Variable cost 120 crores, right? 120 into average collection period. What is the average collection period? 45 divided by 360 into 18% is pre-tax or after tax? 24% is pre-tax. So after tax it is 18%. 2.7. Here 1.26. What is the calculation? 126 into 20 divided by 365 into 18%. 18.55 9875. 19.29, 0, 0.7125. So which is the best option? Proposed policy. Proposed policy. See the difference. What is the difference amount? 0.73, 0.8375. So 0.73. Clear? 0.730. So they have followed what? Incremental method. Only increased amount is taken, okay? So that's why they got 0.73084. Clear? Done? So this is data's management. So 15 inventory management, 16 inventory management, 17 inventory management, 18 inventory management, 19 it is a Baumol model. June 24 question, Baumol model. Just like EOQ, in inventory management, we have a optimum cash balance concept in what? Cash management. So question number 19 is a cash management question. Cash management question. Okay. Cash management question. So we should not maintain, we should not keep idle cash. We should not keep what? Idle cash. We should not keep idle cash. For suppose if we keep the cash idle, what happens? Cost of investment will increase because we are procuring money from equity shareholders and debenture holders. Cost of investment will increase. So that's why we should not keep cash idle. So we have a concept of what? If there is any surplus cash, what we do is we invest in marketable securities. Whenever we need cash, we sell marketable securities. Marketable securities means securities which can be converted into cash easily. Okay. So here Baumol has given a formula for determining the optimum cash balance. For suppose in EOQ, if I order raw material once in a year, what happens? Carrying costs will increase. Yes or no? If I order material daily, then what happens? Ordering cost will increase. Ordering cost will increase. Ordering cost will increase. Yes or no? So if I order order material once in a year, so carrying cost will increase. If I order daily, ordering cost will increase. Likewise, I have a marketable securities. I have converted all my cash into marketable securities. For suppose, if I sell all the marketable securities, okay, to meet my cash requirement throughout the year. Okay, for suppose in a year I require 3,60,000 rupees cash. I have already invested in marketable securities. For suppose on 1st April, if I sell marketable securities worth 3,60,000 rupees, if I sell 3,60,000 rupees worth marketable securities, then what happens? I will receive 3,60,000 rupees on 1st April. Okay. On 1st April, I will be carrying 3,60,000 rupees cash. I use 1,000 rupees on first day. What about 2nd April? 2nd April, I will have a cash 3,59,000. What about 3rd day? 3,58,000. 4th day, 3,57,000. 5th day, 3,56,000. Likewise, every day I will use 1,000 rupees over a period of 360 days. But what will happen? I'm carrying a cash which is required for 1 year. Now what happens? Interest cost will increase. Single transaction. I am selling marketable securities at once. If you are selling securities or purchasing securities, you have to incur transaction cost. You have to incur transaction cost. This transaction cost is similar to ordering cost. This transaction cost is similar to ordering cost in inventory management. నేను సెక్యూరిటీస్ సేల్ చేసిన ప్రతిసారి నాకేమవుద్ది, ట్రాన్సాక్షన్ కాస్ట్ అవుద్ది. నేను ఇయర్ మొత్తానికి ఒక ట్రాన్సాక్షన్ చేశాను అనుకుందాం 1st ఏప్రిల్కి, అప్పుడు ప్రాబ్లం ఏంటి, ట్రాన్సాక్షన్ కాస్ట్ తక్కువే అవుద్ది. కానీ 1 ఇయర్కి సరిపడా క్యాష్ నేను 1st ఏప్రిల్ నుంచే నేను క్యారీ చేస్తే దానివల్ల ఏమవుద్ది, ఇంట్రెస్ట్ కాస్ట్ ఇంక్రీజ్ అవుద్ది. అలా అని చెప్పి డైలీ ఐఎమ్ సెల్లింగ్ ట్రాన్సాక్షన్, డైలీ ఐఎమ్ డూయింగ్ అ ట్రాన్సాక్షన్ వర్త్ 1000 రూపీస్. ప్రతిరోజు ట్రాన్సాక్షన్ చేస్తున్నా 1000 రూపీస్ వర్త్ ట్రాన్సాక్షన్. దెన్ వాట్ హ్యాపెన్స్, ట్రాన్సాక్షన్ కాస్ట్ విల్ ఇంక్రీజ్. సేమ్ లైక్ ఇన్వెంటరీ. ఇన్వెంటరీలో ఏమవుద్ది, ఇఫ్ ఐ ఆర్డర్ డైలీ, ordering cost will increase. If I place a single order on 1st April, carrying cost will increase. Likewise here also, if I enter into only one transaction on 1st April, transaction cost is less but interest cost will increase. If I enter into a transaction on daily basis, transaction cost will increase but interest cost will decrease. So that's why I have to determine what optimum transaction size, like in EOQ, like in materials. So how do I get optimum cash balance? Optimum cash balance is equal to square root of 2AT. Instead of O, we take transaction cost, cost per transaction. Square root of 2AT divided by I. I means interest rate. Instead of carrying cost per unit per annum, we take interest per 1 rupee per annum. That's what interest rate. We take interest rate. So what is the formula for determining optimum cash balance? Square root of 280 divided by I. So see the June 24 question. So there are lot sizes. The company has a marketable securities in lot sizes of rupees 50,000, 1 lakh, 2 lakhs, 2 lakh 50 and 5 lakhs. There are 5 lot sizes. Okay. So this question is to understand the concept, okay? Cost of a conversion of a marketable securities per lot, 1000 rupees. The company can earn 5% annual yield on its securities. Company can earn 5% interest rate. As a cost and management accountant, you are required to prepare a table indicating which lot size will have to be sold by the company. Which lot size will have to be sold by the company. Also show that the economic lot size can be obtained by Baumol model. Okay. First we are preparing a table, tabular method. One, we can use formula. That is square root of 280 divided by I. So first we are preparing a table. Okay. How many lot sizes are there? 5 lot sizes. First lot size 50,000. What is this lot size? అంటే ట్రాన్సాక్షన్ చేస్తే నేనేం చేయాలి, either 50,000, 1 lakh, 2 lakhs, 2 lakh 50 or 5 lakhs. అర్థమైందా? సో లాట్ సైజ్. సో what is the annual cash requirement? 10 lakhs is the annual cash requirement. Lot size of security, first one 50,000. So how many transaction I have to do? Simple, 10 lakhs divided by 50,000. Per transaction I will receive 50,000 rupees cash. What is the overall cash requirement? 10 lakhs. So 10 lakhs divided by 50,000. Number of transactions 20. 20 transaction. Tell me what is the transaction cost? 20 into 1,000 rupees. 20,000 is the transaction cost. 20,000 is what? Transaction cost. 20,000 is the transaction cost. Okay. Total 20 transaction. So first transaction, when I do a first transaction, I will receive 50,000 rupees cash. So that 50,000 I will keep on using it. When that becomes 0, again I will go for another transaction. 50, malli emoddi 0, 50, 0. మీకు అర్థమవుతుందా? సో అంటే ఆన్ అన్ యావరేజ్ ఐఎమ్ క్యారింగ్ అ క్యాష్ ఆఫ్ 25,000. సో దట్ ఈస్ వై వీ డూ ఓక్యూ డివైడ్ బై 2. అక్కడ ఓక్యూ డివైడ్ బై 2 చేస్తాం. అలాగే ఇక్కడ 50,000 డివైడ్ బై 2. వై వీఆర్ డూయింగ్ 50,000 డివైడ్ బై 2? వెన్ ఐ డూ అ ట్రాన్సాక్షన్ ఐ విల్ హ్యావ్ అ క్యాష్ ఆఫ్ 50,000, బట్ ఐ విల్ బి యూజింగ్ దట్ క్యాష్. నేను డైలీ యూజ్ చేసుకుంటూ వెళ్తాను. అదేమవుద్ది? 0. మళ్ళీ 50,000, మళ్ళీ 0, 50, 0, 50, 0. That means on an average 50,000 plus 0 divided by 2. So what is average cash holding? So 25,000. Okay, into what is the percentage I am losing? 5%. 25,000 into 5%. 1250. 1250. 25,000 into 5%, 1250. Clear? 25,000 into 5%, 1250. So overall cost is transaction cost 20,000 plus interest cost. What is interest cost? 1250. Total 21,250. అర్థమవుతుందా? If a lot size is 1 lakh, then what? 10 lakhs divided by 1 lakh, 10. Okay, what is the transaction cost? 1,000. So total transaction cost 10,000. Okay. So what is the average cash balance? ఓన్లీ 50,000. ఎందుకని ట్రాన్సాక్షన్ చేసినప్పుడు 1 lakh ఉంటుంది, కానీ మళ్ళీ 0, మళ్ళీ 1 lakh, మళ్ళీ 0. సో ఆన్ అన్ యావరేజ్ ఐ క్యారీ ఎ క్యాష్ ఆఫ్ 50,000. సో 50,000 ఇంటూ వాట్? 5%, 2,500. సో వాట్ ఈస్ ద క్యాష్? వాట్ ఈస్ ద టోటల్ కాస్ట్? 12,500. నెక్స్ట్ కేస్ 10,000. నెక్స్ట్ కేస్ 10,250. Next case 14,500. So now tell me, which is the optimum lot size, optimum transaction size? What is the best transaction size? Best transaction size is 2 lakhs. Best transaction size is 2 lakhs. And at optimum transaction size, interest cost is equal to transaction cost. Interest cost is equal to what? Transaction cost. Okay. Question number what? 19. Better you write answer. Determining optimum transaction size. Determining optimum transaction size. Particulars. Transaction size 50,000. Next transaction size. You have to write completely transaction size. What is the next transaction size? 1 lakh. Transaction size 2 lakhs. 2 lakh 50,000. Transaction size 5 lakhs. Now first transaction cost. Transaction cost, see the calculation. 10 lakhs divided by 50,000 into what? 1,000. A divided by OQ into O. This is what you do in costing. Annual requirement divided by ordering quantity into O. Cost per order. Here annual requirement divided by transaction size into cost per transaction. What is the amount? 20,000. Interest. What is the interest calculation? 50,000 divided by 2 into 5%. 1250. Total 21,250. Total cost. Clear? In costing, you will do OQ divided by 2 into C. Likewise, we have to find out for what all the 5 cases. I am calculating for third one. For third one, what is the calculation? Ten lakhs divided by 2 lakhs into 1,000. 5,000. Second, 2 lakhs divided by 2 into 5%. 10,000. Clear? So, what is the optimum transaction size? Optimum means best. But best transaction size. Best transaction size is equal to 2 lakhs. Best transaction size is equal to what? 2 lakhs. Clear? Next. So Baumol model. As per Baumol model, optimum transaction size is equal to square root of 280 divided by I. A means annual requirement of a cash. T means cost per transaction. I means interest rate. Is equal to square root of 2 into 10 lakhs into 1000 divided by 0.05. 2 lakhs. Clear? So this is the optimum transaction size, 2 lakhs. Clear? So next, you mark these questions. Question number 23.